activities now with the expectation that a deal will be signed, because the alternative is so tragic for the global economy that both sides would eventually figure it out. Last year was a taco trade. Trump always chickens out with regards to tariffs. This is obviously a lot more complicated, but the market seems to be trying to replay that playbook, that Trump will figure it out one way or another. So I'd say, well, that's probably the more likely scenario right now, that there's a risk that the market is too one-sided in hopes that Trump will find a deal, find his way to a deal. And so if he doesn't, there's obviously pretty significant downside risk.
Mm. So then, Ed, it's almost as if at some level it doesn't matter till it starts to matter once again, right? Ed, and what will that point be in yours? Is there a point? Is there such a point, or, markets have done phenomenally well?
So yeah, markets have done well. Yeah, on the hope that there will be a deal, and also we have to keep in mind too. Fundamentally, things have been very strong. Look at the Q1 earnings season. The beat rate or percentage of companies that exceeded expectations for the S&P 500 is right now running around 85%. Which would be the third highest on record. The only two higher were right after the pandemic. So this has really been a very strong earnings season. But I think there's two things we want to look at. One would be signs that the global economy is screeching to a halt. It's been very resilient in the face of reduced energy supplies. And the other thing on the U.S. side is that the U.S. consumer, particularly say the lower 80% of households, are kind of tapped out on savings. If there's started to be a sign that they're buckling under the strain of higher gas prices, you could see Trump move a little more quickly. Now, what we had in the United States was the higher tax refunds this year that were filed by April 15th by law because of the tax bill, the One Big Beautiful Bill passed last year. People got more money back on average, so they're spending that money at the gas station right now. So it's not hitting consumer spending, but as time goes on, they're gonna bleed that down, and then you could see the political pressure in the United States really ramp up, and that's when I think you would see a deal one way or the other.
All right. Hi, Ed. Good morning. Good to see you in. This is Nigel on this side. Ed, a few months ago, we chatted about how the markets welcome a new Fed chair, and we've got one now. His history suggests that equity markets going for a bit of a tizzy just in the near term, 6 to 8 months. I think the average correction has been 10 to around 15% or thereabouts, post the new chair taking shape. What are the odds that takes place again? Or would you say that it's rather low? And also, what do you expect in terms of Fed rate action? Mr. Trump wanted his man there. Apparently, it appears he has that. But do you think they have any kind of headroom to actually even go ahead with one cut?
Yeah, so the study shows that on average during the first 6 months, there's a 15% correction in the market. And sometimes, it's less than that. It's when there isn't really a crisis. And so the takeaway from the study is that if there is a crisis, it's probably going to be pretty severe because the market doesn't know how the new Fed chair is going to react. And that was a great example in 2018 with Powell in December. And because they didn't know how he was going to handle a slowing economy. So that's the takeaway from the study. Now, Warsh does seem to want to get to a rate cut, but even Treasury Secretary Bessent has alluded to the fact that it'd be difficult to cut rates over the near term. We think toward the end of the year, assuming this crisis in the Middle East is over, oil prices come back down. We think the U.S. economy is going to moderate. There could be room for a rate cut. But I think the crisis has maybe bought Warsh a little bit of time before having to move to a rate cut before the president would put a lot of pressure on him. But over the next year, if there's not rate cuts, I think you can hear the rhetoric from the White House ratchet up pretty quickly on Warsh.
Ed, we'll leave the conversation here. Thank you very much for joining in. Let's tell our viewers then the interactions that we've lined up on the show today. So coming up, 8:35, the management of Arvind will join in to discuss their Dalco GFT acquisition. 9 a.m. The management of Arvind Fashion will detail the Q4 numbers. 9:20. Neeraj Seth of 3R Investment Management will be our market master for the day. Following that, a discussion around Tata Trust's meeting, which is set to take place later today. And then we'll be joined by the management of Escorts Kubota to talk about the FY27 outlook. Towards the end of the show, Lata speaks to two economists on how Bengal's economy may be boosted.
Time to slip into a short break, but we've got a lot of stock-specific action track for you this Friday morning. We get to that in just a bit in further detail, but I'll highlight the list. Lupin, Pidilite, Biocon, Dabur, Thermax. All of them will be reacting to positive news flows. We'll keep an eye on them. Add to the list, BSE. That as well appeared like a good set of numbers. On the flip side, you have Britannia, Mahanagar Gas, as well as Lenskart that will be reacting to negative news flow. And crude sensitives, well, they'll be doing a thing of their own. We'll tell you about that as well. Take that break, come back, get into further detail on all of these names.
Welcome back. It's time now to talk about stocks. This is CNBC TV 18 list of top stocks for the day to prep you up for this Friday morning. Lots of numbers, news to react to. Our team is standing by. Good morning, guys. Ekta, let me begin with you. What's the latest on Lupin?
Well, yes, Lupin came out with what was a good set of numbers. The revenue was up 32% on a year-on-year basis. The EBITDA margins expanded to 33%, so the street was expecting around 27%. And the profit came in better than expectations as well. India was up 11.5% this quarter. US highest quarterly sales ever, so the momentum continued from last quarter. $371 million is what they reported. The other developed markets did well, up around 7%, but the emerging markets were up 49%. API was up around 7.6%. So overall, it was a top-down beat. They had drugs such as Spiriva generic in the US, which did much better than expectations.
Right, and stock's been doing well. Pharma, the pack's done very well. Ekta, thanks for that for now. Thermax is the next one we're going to talk about. Vinny's got details here. Vinny, morning.
Hi, good morning. So Thermax, Q4 FY26 strong beat coming in on all the fronts. So we are seeing the revenue that's seen a growth of 12%. Margins, that's seen an improvement, 10.9% versus 9.8% last year. Order inflow, that's seen a very strong improvement as well, 4,490 crores. Do not forget there's a 1,600 crore order that has come in especially for the boiler package as well. So that is what is included in Q4, but strong order book also what they hold. That means there's more revenue visibility. 13,600 crores is the order book as on 31st of March 2026 versus last year was around 10,600 crores. So good jump up in order books, and overall the growth at this time is in the order book is mainly led by the industrial products and industrial infra segment as well. Industrial infra segment, which was a bit muted through the year, has started seeing an improvement in the last couple of quarters, and that's a positive sign. The street will take it well as well, and strong performance that one is seeing in heating, cooling, water waste solution segments of the company. That comes in mostly industrial products. So good performance all in all. We'll expect green on the screen for this one.
Okay, green for Lupin, green for Thermax. What about Britannia? Mangalam, crunch, no crunch?
No crunch. It's a limp biscuit this time around. Why do I say that? Because it was supposed to be weak in the first quarter because of all the problems that are taking place in the West Asia region. But the problem started in the last month of the previous quarter itself, which is why the revenue, the street was working with a number slightly shy of 4,900 crores. The company reported numbers a little above 4,700 crores. EBITDA at 853 crores. The street was working with a number of 950 crores. And as a result of which the net profit also is below street expectations. But, the net profit looks comparable to our poll largely because of lower effective tax, which is coming at 13% versus 25.5%. And it's been a weak show. The business, the company said, grew 9% in the first 2 months and moderated in March. The street was expecting at least a double-digit growth to come by in the first couple of months. They said supply disruptions due to West Asia impacted business. I sense that will continue into the first quarter as well, which is why I expect the stock to see some trade.
Mangalam, I didn't figure you for a metals music fan. You are.
I am. Huh? Metallica for life.
No, Limp Bizkit. I think it was bad.
Had to say that.
Good one. Well, Biocon is the next one we're going to focus on. And back to Ekta for that. Ekta, take it away.
Well, yes, an in-line set of numbers, at least on the revenue front, but the margins were better than expectations. So the revenue came in at around 4,516 odd crores. Street was anticipating 4,522 odd crores. Margins came in at 22.6%. Street was working with 20.5%, so that was better than estimates. And the profit was better than estimates at close to 200 odd crores. Biosimilars Q4 up 12%, driven by the advanced markets. Generics was lower due to Revlimid generic sales, and because of liraglutide sales in the UK, they actually did better. Dr. Thomas Roberts, who is the husband of Claire Mazumdar, has now been appointed as the non-executive director. So that would be an important point to note.
Thank you very much for that. Back to Mangalam for Pidilite.
Pidilite is a solid set. It's one of the best performances that we've seen in the consumer space so far. Revenue growth of 14%, EBITDA growth of 32%, and net profit growth of 37%. The stock went into the numbers, ahead of numbers at the high point of trade. Revenue, as compared to the poll, has been a big beat as well. We were working with a number slightly shy of 3,500 crores. The company's reported numbers slightly shy of 3,600 crores. EBITDA 833 crores versus a poll of 763 crores. Margins at 23.2% and net profit above expectations as well. What is this been led by? The consumer business. Volumes up 15.5% as compared to anywhere between 9 to 12%. B2B volumes up 15% despite external challenges. And as we speak right now, the company expects demand momentum to continue even as they manage potential impact on input costs in the year ahead. So there might be a slight moderation in margins going ahead, but the fact that the management is sanguine on demand should keep the stock afloat today.
Okay, so these numbers stick. What about Dabur, Mangalam?
Dabur also slightly ahead of expectations, and in fact the core is a lot better than what the street expected. So going with green on Dabur too. Domestic volume growth at 6% versus expected 4 to 5%. Revenue at 3,038 crores. The street was working with a similar number. EBITDA 462 crores. Our poll was 461 crores. So absolutely in line. And similar is the case with the bottom line as well. But the thing that stood out for me this time around is the home and personal care business that grew 17%, which is a very strong show. And the weakness in the overall numbers was largely because of healthcare and glucose, which was impacted by unseasonal rain. So all these factors put together, the core business doing extremely well. The management commentary in the con call was very good, going with green on Dabur.
All right, Mangalam, thanks very much for that. Well, BSE reported numbers and a strong set. Devyani is here with details. Devyani, morning.
Well, a strong set of results coming in from BSE. There was heightened derivatives activity that was seen this quarter, and average daily premium turnovers in options are up 49% since last quarter to roughly around 28,920 crores. As a result, transaction charges were up 38% on a quarter-on-quarter perspective, and revenue has surged 26% in spite of a drop in listing and other activities of the company. Adjusted EBITDA, that is EBITDA adjusted for the labor code impact that was seen in last quarter, is up 34% since last quarter, and margins have expanded to 68% this time. Net profit is up to almost 800 crores this quarter, as against 600 crores that was seen in Q3 of FY26. All in all, a strong set of results coming in from the company, going with a green on BSE in trade today.
Okay, all right. Thanks very much, Devani, for that. MGL is the next one in focus, and Sonal is here with details. Sonal, take it away.
Good morning, Prashant. Well, it was a mixed set. Surprisingly, the volume growth was really strong, but as expected, because of high gas costs, margins were lower this time around. Revenues absolutely flat. We did have EBITDA, which was down 26% at 260 crore rupees. Margins were down 500 basis points to come in at 12.7%, and net profit accordingly was down 35% in the quarter gone by. As I said, volume surprisingly strong, up 11% on a YOY basis, up 1% sequentially, but that is something which was expected. However, EBITDA per unit was down 26% on a YOY basis, down 27% on a sequential basis, and we have the conference call at 4 p.m. today, so we'll understand what the outlook is going forward, considering the West Asia crisis, which has hit the gas economy the most.
Got it. All right. Thanks a lot for that, Sonal. Well, Vivek's picked up some scoop on Lenskart, and we're expecting a large trade today. Vivek, good morning. Tell us more.
Well, good morning. Important to keep an eye out on Lenskart today. Remember, the 6-month lock-in ends today, and we are anticipating close to 7% of the total equity to change hands. What we understand from our sources is that there is going to be a large block deal, close to a little over 5,600 crore worth of equity is expected to change hands. Last evening, the block was launched, and as per the term sheet, there was a base size of just around 3,300 crore. On account of good demand, they've gone ahead and upsized this particular deal option. Now, who are the sellers? Birds View Holding, TR Capital Mauritius, ABG Capital, Kariba Holdings, all pre-IPO investors will be doing a clean-out trade today. Alpha Wave also, which holds close to 4% stake in the company, also will be exiting partial stake. It will be important to see today evening, when this particular deal does transpire, who are the sellers and the quantum of the sale, but expect some pressure on Lenskart going into trade today.
Okay, all right. Thanks very much, Vivek, for that. So, Lenskart block coming through, and we'll see how that gets received. Well, I think Manisha is here with an eye on oil and oil sensitives in focus, also up a little bit. Manisha, good morning.
Morning, and thank you for that. As the crude oil prices have rebounded, we did see 96.5 yesterday. From there, 102.5 is where we are trading. There are reports of fresh clashes between U.S. and Iran. The U.S. Central Command did say that American forces intercepted Iran attacks, have carried out defensive strikes, and guided missiles in Strait of Hormuz. That has brought the premium back in case of prices. Iran also has said that they are setting up a protocol for tankers transiting Strait of Hormuz. It is mandatory to fill vessel information declaration or risk an attack. So things are still out and open, and we are looking at prices holding above that $100 a barrel mark. There also are reports from IEA saying that the war has disrupted 14 million barrels per day on global oil supplies. Shell, as various CEOs have been talking of major oil companies, the latest one, of course, is Shell, saying that oil market right now is facing a shortage of nearly $1 billion, and situation is getting worse daily. So all of that premium seems to be coming back in case of prices. As far as the U.S.-Iran peace deal works, well, it is supposed to happen in 3 stages. One is formally ending the war. Second is resolving the Strait of Hormuz crisis. And third is launch a 30-day window for negotiation on a broader agreement, is what we understand at this point in time. And the reaction clearly can be seen in sense of oil sensitives.
Thank you very much for that. It's also a very big day in terms of earnings. So 2 important consumer companies, Titan, Tata Consumer report numbers, PSU Bank, State Bank of India, Bank of Baroda, Bank of India. And then you've got platform companies like Swiggy and Urban Company also due to report their numbers later today. So it's going to be an important action-packed day. Here's a quick recap then of the stocks. Stocks with positive news flow are Lupin, Pidilite, Biocon, Dabur, Thermax, BSC. Stocks with negative news flow are Britannia, MGL and Lenskart. Mixed view coming in on crude sensitives. We will get into a break. On the other side, the management of Arvind will join in to discuss their Dalco GFT acquisition. Stay tuned for that.
Welcome back. We've got the news break confirmed. CNBC TV 18 had reported that Arvind's arm, a subsidiary, is going to acquire a stake in US-based non-wovens company, Dalco. We put out a number in the range of what this acquisition is going to be, and I think the news got confirmed within a day. We got the sort of news as we came in yesterday morning. There was a call with the management that analysts listened to yesterday afternoon. We've got the management with us. Puneet Lalbhai is Vice Chairman, and Vice Chairman Arvind is with us. Puneet, good morning. Great to have you with us here. Thanks very much for joining us. Rachna is with us as well, and Rachna reported on this story. Rachna, congratulations. You want to take the first one?
Thank you so much. Of course, I'd first like to congratulate Mr. Lalbhai for the acquisition. This deal is one of a kind that we've seen in the recent times, especially given the US tariff uncertainty. So my question is exactly about that one of the key synergies that have been listed with this deal is the cross-sourcing between India and US. How much of that is on the actual scenario given the volatility around the US tariffs, and how much of it is aspirational?
Main reason to do the acquisition is access to the US market. This product is a needle punched non-wovens, which requires the manufacturing to be very close to the point of consumption. So the synergies will be explored in various phases, but the main reason is to have access to the $2.5 billion US market as far as needle punch non-wovens are concerned. And it gets us into very interesting markets like automotive and geotextiles, which an organic build would have taken very long. Needle punch non-wovens is something we do here in India as well. So it's a technology.
Mr. Lalbhai, morning. This is Rima here. So could you give us a sense of what the combined entity will look like? When you add Arvind, AML standalone revenues plus Dalco with that $100 million top line, 17% EBITDA, you've said this is going to be EPS accretive. Give us a sense of what the consolidated numbers will look like and how will it grow from here on? No, I can't.
No,
I don't think we can.
You.
All right.
I think we'll just check on the audio and we'll just sort of go back to Puneet in just a bit as soon as we are told. But I mean, I think it's a large acquisition for Arvind, and as we had reported, the main reason for the acquisition, as he first said, is access to the US markets, having a manufacturing base there. I mean, they're already in the segment here in India, so perhaps there are cross synergies to be explored, etc. As well. So more on this one. I think we're having a little bit of technical issue, but should have him back in just a bit. Should we just take a quick break and come back? Let's do that. Let's take a quick commercial break here. Hopefully, we'll have the Arvind management back with us. Okay, welcome back. There's 25 minutes to go for the pre-open session. And as you can see, GIFT Nifty is indicating a slightly lower start, 0.4% lower. And, you know, lots of individual names which I think are making news and sort of grabbing attention at this point in time. So that is the focal point. Let's actually, you know, do a little bit more in terms of stocks. That conversation with Arvind got interrupted due to a patchy line. We'll have, you know, Mr. Lalbhai with us as soon as we have that fixed. But use the opportunity to look at the big movers yesterday. And, you know, the stats, as always. Hormuz is here with exactly that. Hormuz, take it away.
Good morning, Prashant. And a couple of names that did very well in yesterday's trading session. Piramal Pharma was one of them. The biggest single-day gain that the stock saw since October of 2024. And the volumes on the stock have been on the rise over the last 4 sessions now. And in fact, the volumes on Thursday were the second highest seen in 2026 so far for the stock. Over 5 crore shares were traded. The 20-day average is only 65 lakh shares. And 14% of those 5 crore shares were marked for delivery. So around 70 lakh shares. The 20-day average is only 16 lakh shares, and the stock has moved up almost 30% in the last 1 month, and as a result of which it has also turned positive on a year-to-date basis. The PSU story, though, of this year has been BHEL. It has gained in 4 out of the last 5 trading sessions, yes, but out of the last 21 trading sessions, the stock has gained in 18 of those, and the daily volumes now have been above 1 crore shares for 23 trading sessions in a row. Even yesterday, close to 4 crore shares traded. The 20-day average was 2.5 crore. The third of those were marked for delivery. 60% the stock has moved up in the last 1 month, and it is already at a record high. You know, the last 3 years from September of 2023 onwards, the stock has moved up almost 10x in value, and the result reaction possibly of the day could well be BSC. And just before the results, the stock has moved up for 8 days in a row, and volumes on Thursday were the highest in the last 2 weeks. Close to 50 lakh shares were traded in line with the 20-day average. A third of those were marked for delivery as well. So 15 lakh shares again in line with the 20-day average in terms of the delivery volumes. It was among the most traded Nifty 500 stocks on Thursday, and this too, just like BHEL, has been up over 10%, over 10x in the last 3 years.
Thank you very much for that. And 50% up since the beginning of this year. That's BSC. But we managed to reconnect with Puneet Lalbhai, Vice Chairman of Arvind, to talk about the acquisition that they have done of Dalco GFT. Puneet was just trying to get a sense from you what the consolidated entity will look like in terms of revenues, margins, and the growth thereafter once you manage to kick in the synergies.
The India entity now is about 2,000 crores with about 15% EBITDA. And Dalco GFT will add 1,000 crores with a 17% EBITDA. So we'll be a 3,000 crore company with a 15+% EBITDA going forward.
Okay. And the kind of synergies that you expect, what would the consolidated margins scale up to once you manage the cross-selling?
It will be gradually accretive, but what is more important, it gives us access to a market that we otherwise couldn't get access. So it is a move that will further our growth in the very large US market in the advanced materials space.
Okay, all right. Hi, Puneet. Congratulations on this deal. Quick question. The acquired entity does around $100 million odd, and it's been growing at around 10%. Where do you see this number headed in terms of growth? Point number one. And part of this acquisition will be funded by debt. Could you tell us what is the borrowing rate?
So the borrowing rate is around 6%, okay. And debt is taken in 2 places. There is non-recourse debt taken at the US entity, which has more than enough cash flow to service that debt. Okay. And there is a chunk taken in India, which will come at the Arvind Advanced Materials level. So the total debt is around $110 million US.
Okay, and scaling up of the...
below our thresholds in terms of comfort.
And scaling up of the acquired business from 100 million?
In our hands, the business will grow faster because we'll be able to equip it with more resources from the parent. And we will be exploring adding segments that they currently don't do, like filtration in the US, which will allow us to grow faster than the previous trajectory.
Puneet, just one question. You're buying this from a private equity player, right?
Yes.
Yeah. I mean, you know, this is a general question, but when PEs are selling, they kind of sort of, juice it out by the time they sell it. Was this not that you can't find good deals, I mean, otherwise, but why were they selling?
I mean, they are at the end of their cycle.
Fund life.
Fund life. So they are selling for that reason. There's a huge amount of diligence that has gone in ascertaining value of the asset, and we are buying a good asset at a fair price. The idea is to acquire a business that doesn't require the fundamentals to be touched at all. We want to be the wind beneath their wings, and we need the entity firing on all cylinders. So that reflects the approach. It's not about finding the best deal possible. It's finding a fair deal of a very well-run business.
So you don't have to touch anything. I mean, the team there runs it. You don't have to transplant people from here to there. I mean, it's a well-run operation in that sense, right? So it's just you don't have to move it around very much, except of course expansion in other areas, etc.
Yes. So there's value add on top. The core business will run with the management team all rolling over and staying with the entity. We love the management team. They're doing a great job, and we will support them wholeheartedly from India without interfering with what they do.
At some point of time, you like to take it to 100% though, right? What would the valuation be at that time?
That is already baked in. That is already baked into the deal.
Okay.
We will acquire 100% over 4 years. The multiple
At what valuation?
It will be slightly lower than the multiple of 7.75 that we have acquired the 61% stake at. So there will be a chunk at 2 years and a chunk at 4 years.
Lastly, if you could also tell us that the deal is valued at about 7.75 times EBITDA for current year 25, but 68% of the revenue exposure for Dalco GFT comes from the auto sector. Going into, we are halfway into current year 26 and we're seeing auto sector softening up. The demand isn't as much. How does that valuation hold up in this year, and how do you provision against that?
The demand for auto, and especially the products that we do within auto, and we must remember that we are tier 2 selling to tier 1s who then sell to the OEMs. Our demand is holding up fairly well, but the long-term view is that we will grow some of the other segments disproportionately. So auto, while it will stay large and growing, it will become a lower percentage of the overall revenue mix.
Got that. Just slightly longish. I mean, so you said that you're going to become a 3,000 crore revenue company with about a 15-16% EBITDA margin, right? Post the acquisition.
Yes.
So just give us a sense of what numbers will look like. Once you add on and you want to build out other add to the business which is already there, the core business. What could numbers look like in your mind? Puneet, say 2-3 years down the line?
Simple way to think about it is we were a platform that has compounded at 20% for the last 10 years. We've reached the 2,000 crore mark. This takes us to the 3,000 crore mark in short order. And then the intention is to continue to grow the platform at close to 20% going forward. So in many ways, Arvind Advanced Materials is the largest growth engine within the Arvind Limited entity.
Got that. We'll leave it there. Good luck as you continue to execute, and would love to get regular updates, and you join us for that. Thank you very much for joining us. So that is Arvind Limited with Perspective. Rachna, congratulations once again on the deal. I think pretty much everything confirmed, with even that 100% over a 4-year period coming through as well, just as we had reported. I think there's about 15 minutes to go for the pre-open session to kick off. And GIFT Nifty, I think, is still down about 100 odd points. Siddharth Khemka is with us. Siddharth, good morning. Any other comment on any of the numbers we've gotten over the last, after yesterday's close? Anything strikes out?
Hi, good morning. So I think a lot of strong numbers we have seen. BSE came out with strong numbers on expected lines. The broad-based growth in transaction charges, that continues. Derivatives activity, that continues to thrive. What was important is that the management has now guided for improvement in the cash market share from about 7-8% to double digits. And that is something I think which will be much more adding to the overall profitability going forward. The only overhang that remains as of now is the RBI regulation on the proprietary trading that will could impact a little bit on the derivative side, but nonetheless, overall, very strong numbers. We continue to be positive. Valuations a bit on the premium side, but with the strong growth and the listing of NSE over the next few months, that could also add to the overall business. So overall, we like BSE. We have a target price of 4,400 on that.
Siddharth, hi, morning. Thanks for joining in. So Vari Energies held their investor day yesterday, where they've laid out very ambitious plans. I think 1 lakh crore 1 trillion rupees in terms of a revenue by 2030. That's a 4x jump. What were the drivers? What did they tell you? And are you convinced they'll be able to achieve these ambitious goals? Siddharth? Oops.
So he's frozen.
He's frozen, so we'll try and reconnect with him. So here's what we'll do. We could just get into a short break. We'll come back. We'll have the pre-opening rates. We'll also connect with our technical experts. And Siddharth Khemka will also be with us.
Welcome back. Well, in a few minutes from now, we'll get the pre-open rates. Keep your eye on the bottom of your screen. We have a large trade on PB Fintech, and also we'll be bracing for a large trade on Lenskart. So this evening's institutional number, if you're tracking it later this evening, it'll be very, very distorted. So just keep that in mind. But the mid-cap index, that's been the space to be in. It's hit record highs in trade yesterday. It's crossed the 62,000 mark for the first time ever. Sudarshan joins us to tell us about that big party that's been taking place in the broader markets. So take it away.
So it's an 80-day story if you talk about the mid-cap index. Last time it had hit record high was January 7. Now again, the number 7, basically May 7. Again, the index has hit record high, crossed the level of 62,000 for the first time. And we have seen a big outperformance by broader markets, especially mid-cap index and small-cap index, if you compare against the benchmarks of Sensex and Nifty. So I've taken 2 dates, March 30 and January 7. March 30 is the day from that day we have seen a big buying across the board. So from March 30, mid-cap index is up 18%. Similar move is seen in small-cap index up 23%. For Sensex and Nifty, Nifty Bank and Nifty, both these indices are up in the range of 7 to 8%. But despite these big gains, Nifty and Sensex are still down in the range of 7%, basically 7% each if you compare from January 7, while mid-cap index, as you know, it has hit record high up 1%, while small-cap index is up more than 4%. So which are the stocks that have contributed the most to the mid-cap index hitting record high? BSE up 44%. The stock is at record high. Similar move was in Bank of Maharashtra up 35%, NLC India 22%, CG Power 35%, Bharat Forge 35%. But while we are seeing broad-based buying, there were some underperformers as well. KPI Tech, it was a weak set of earnings that company has given in Q4 and also weak outlook for FY27. They are two of their major clients, their contract is ending this year in H1 of FY27. That's the reason big downtick that we have seen in the stock. And since January 7, the stock is down 40%, IDBI Bank 30%, Coforge 24%, Kalyan Jewellers 21% and UPL 20%. While mid-cap indexes hit record high, small cap index still 1 to 2% away from the record high, while for Nifty and Sensex, they still have a few miles to go to hit the record high levels.
So I see you. And I raise you. You know, you had the list of gainers, and we can have that list up. I don't have my list, which is not made yet, but Sterlite Tech is gone from 100 to 350 this year. I mean, just adding to what you said, but this was much smaller. It's not a mid-cap in that sense. MTAR Tech is up 175. YTD. You know, look at HFCL, which is up 115 odd percent. It's just incredible. 20 names, actually, 21 stocks up over 50% YTD so far.
You know, if you look at it from the financial year, the gains, because we ended so low at the end of last year, the gains are even bigger. Yeah. You know, because, for example, HFCL is 120% up, Idea Forge is up 113%, Sunflag Iron is up 112%. So these are not stocks that are up 20-30%, they're doubled. Another one is Sterlite Technologies, as you mentioned, MTAR Tech is up 93%. Even Lux Industry is not keeping it very brief. That one is up close to around 93%. So there's been a party out there actually in the broader markets, but we needed to have those guts and buy stocks at those levels, which obviously becomes a little bit tricky.
Yeah, it's easier said than done, Nigel,
yes,
right?
Absolutely.
It never happens. But, you know, you have to, those who went down usually come up with the rally. I mean, you know, new buyers after completely bombed out. I mean, there are, it takes all kinds to make the market. But typically, I mean, it's easier said than done. Sterlite Tech, right? I just want to ask Siddharth that. Siddharth, do you have coverage or any thoughts on this one? I mean, is it the optic fiber story? Are they in the right kind of segment? Where you know, if you think about it, if it's AI and the AI physical build-out, which is data centers, and it's going into cooling and power and chilling and all the ancillary equipment required for data centers, optic fiber is also an important element, right? So is it that which is the story here behind what's happening with Sterlite Tech? Go on.
Yeah, so Prashant, yeah. So I think while we don't cover Sterlite or HFCL, but this entire space has picked up pace, especially after what has happened in the West Asia, where Iran has attacked some of these data centers as well as the AI back office stores. I think that has led to even fast tracking of some of these global GCCs coming into India and trying to set up. So I think this entire story at least looks very attractive over the next few years. the entire be the computing softwares, the data centers, the cables, wires and cables. And also, if you look at, because of that, there is going to be a very strong demand for power. So we have seen the entire power supply chain, right from transformers, distribution, wires and cables, utility companies seeing a strong uptick. So this entire story, I think, definitely has more legs to go from over the next few years.
Got it. Hi Sid, morning. Good to see you in. What about Lenskart? Which lens are you looking at it from? You know, at the IPO, people are arguing about hefty valuations. But to be fair, actually, the management's had the last laugh. The stock has done phenomenally well. Today, there's going to be a large trade. It could be, that overhang that gets out of the way, at least in the near term, because there'll be a lock-in out there. What's your view at around 480 rupees on?
So hi, Nigel, good to be with you on the show. I think overall, we post the IPO, yes, the company has done well, and even we are liking the overall growth story. So I think today's block deal at a discount could be a good opportunity for people who have missed out earlier to see and get into a story like Lenskart, because what is happening is they are able to do the entire value chain in the overall system, and the backward integration that they are doing, that is only helping them see the improvement in profitability. So I think the omni-channel plus the growth strategy across India, penetrating into other newer cities, so all those are leading to a better growth opportunity. And we are seeing that as and when some of these new age companies are coming closer to the path to profitability, the market is liking these stories, and even the valuation in that sense has looking improve better. So what we are forecasting a growth of almost 50-55% earnings growth next year. Valuation definitely a bit on the higher side, but we still believe that with this kind of platform, one of its kind of business that has got listed, there is a huge appetite, and we have a buy rating with a 600 rupees target price on Lenskart.
Siddharth, BSE, numbers look good, but valuations are at 34 times FY28. So with these kind of valuations, is there upside? How comfortable are you?
Yeah, Rima, I think if you look at the core business, that continues to do well, and that is where we believe that the premium valuation could be justified. One of its kind business exchange that is listed. So while we will be having NSE coming with an IPO over the next few months, on the core equity side, they have done well to gain market share in the derivative side, and now they are aiming to improve the market share in the cash segment as well. So I think BSE continues to demonstrate a broad-based growth across segments, supported by institutional participation, a stable retail activity, as well as their stronghold in the Star MF business. So exchanges continue to do the investment that they require in the technology, data infrastructure, and hence they're supporting the long-term earnings visibility. So with an earnings growth of about 20% plus the unique business that they are having in, plus I think the NSE IPO that will come in, that will be an additional trigger for BSE. So we believe a 40 times P on FY28 is justified, and hence we see a marginal upside of about 10-11% from current levels.
Okay, all right. Siddharth, I want to ask you about the cement pack. You know, it's going to be an interesting time, I think, ahead, because you have close to 25% of the market, which is Ambuja and Shree Cement, that's saying they're going to go slower on capex spend as well as on capacity addition. That could indeed spell good times, maybe for the largest player actually, because Ultratech Cement, the valuations have gone a little bit higher, but they are the ones who are executing. And for some of these smaller names, yesterday I observed Nuvoco, Sagar Cement, there was some traction out there, because now maybe profitability will improve for the industry. How would you play this? Because the market's not reacting too much to this news now. Input costs have gone up, but otherwise 25% of the market will not be very, very aggressive, which could turn to pricing being better and profitability being better. Your take?
Yeah, so Nigel, I think overall in terms of earnings as well, what we have seen is that a steady quarter, and for the entire cement pack, we have seen about 15% Q on Q rise, a 10% increase. The challenge was in terms of EBITDA, where the margin pressures have been coming in. And if the larger player is kind of indicating slower capex, I think that is positive for some of the large players. Specifically, if you look at Ultratech Cement, the results were pretty strong. We have upgraded our numbers by almost 8 to 9%, and volume growth has been pretty decent. But now I think the key trigger for the cement pack would be the price hikes that they could take before the monsoon season kicks in. So over the next few weeks, maybe if some of them are able to pass on the price hikes because of the input cost pressures, I think that could be a big trigger. What we like, Ultratech, JK Cement and Dalmia Bharat are our preferred picks in the cement pack.
Siddharth, stay on. Let's just get in a few technical trading ideas. Mitesh Thakkar and Shrikant Chauhan are also joining in. Gentlemen, good morning. Happy Friday to you. Mitesh, let me start with you. Yesterday, we sold off from the high point of the day and got pegged back into the trading range. And this morning, the GIFT Nifty is suggesting another downtake. What's the call on the Nifty? And do you see this traction continue in the broader markets?
I think one Nifty, I said that will be range, and yesterday there was a chance of us getting past 24,400, which did not happen. So back to that range of 24,350, 400 on the upside to roughly about 23,800 on the downside. The only thing is that yesterday there was some good setups on the hourly and 2-hourly charts when some of the indicators recorded positive crossover. So in case the Nifty does not continue to decline after the gap down, then I think there's a chance that we might once again attempt 24,400. And if we start closing above that, then I think we'll have some slightly a stronger up move.
Okay, Shrikant, what's the Nifty call today? If there is a gap down, would you buy it or just stay away?
Good morning, everyone. So yeah, in case if it is opening, let's say down as GIFT Nifty is indicating, let's say 100, 150 points, then there certainly we should look for taking some long bets. The reason is because the market has shifted its bottom from 23,800 to 24,000. And if we are very close to those levels, then I think we should look for taking some long bets, because I am of the view that the market is going to spend time within the range of 24,000 and 24,500 on the higher side. But on the dismissal of 24,500, we can see the markets moving towards the levels of 24,800. The entire structure of the market, and if we consider the Bank Nifty, then I am of the view that buying on dips would be the prudent, advisable strategy, at least in the short run.
Yeah, now got that. Gentlemen, morning. Mitesh, what would your trades be?
Morning, Prashant. I have a mix of buys and sells today. On the buying side is Paytm. It was actually a call yesterday afternoon as well, but the closing was strong, and I think the move should continue. So now it can be bought afresh with a stop at 11.75 for targets of 12.45. Also, buy call on Britannia with a stop at 57.84 for targets of 58.85. And on the negative side is Godrej Consumer. Sell here with a stop at 1,055 for a target of around or below 1,000 rupees. And a sell on Indian Bank with a stop at 875 for targets of 825.
Got that. Paytm, by the way, there was a call as well, and a pretty positive commentary coming through post that call. So maybe we see some action. Let's see what the market does, because it'll depend on that as well. Shrikant, what are your trades?
Yeah, I think broader market is doing well. And if we go through with the basket of those particular stocks, then in that APL Apollo looks quite interesting. The stock has formed double bottom at 1900, 1850 sort of levels. And now again, it is rebounding to the next resistance level of 2050 or maybe 2100. So APL Apollo looks interesting, strong candidate to buy for at current levels with a stop loss close to 1940. The other stock on which we are bullish is Titan. Currently, it is around 4,300. If it is opening, let's say, a little bit lower, 42.75, 42.80, then there we should look for taking long bait with a stop loss at 4,200. Again, we can expect Titan moving towards the levels of 4,500 or 4,600 eventually. And finally, from the defense space, we like Hindustan Aeronautics. The stock has broken its important resistance area at 4,700 and it closed above the same. So we can expect further more activity towards 5,000, 5,050. It's a buy at current levels with a stop loss close to 4,000. 650, 4650.
Okay, thank you very much for that. We'll connect with you. For now, let's invite Kulin Lalbhai, Vice Chairman, Non-Executive Director, Arvind Fashions, on the show. A good set of numbers by Arvind Fashions. Revenue growth nearly 15%. EBITDA margins up 50 basis points for the year gone by. The top line growth was 14%, and the company is talking about sustaining this mid-double-digit kind of growth with 30 to 40 basis points of margin expansion going ahead. Thank you very much, Kulin, for joining in. This is Rima here. Now, your growth engine has been the direct channel, retail and online B2C particularly. Now, this is about 56% of the mix, but I believe the target is 65%. When do you get there? 3 years, 5 years down the line? And what is the embedded revenue assumption in that?
So typically, we are expecting around a 3-4% increase in the share of direct between our stores and online. And this is a very strategic bet we are making, because when we control the front-end channel, we typically have high gross margins, better turns, and we can really control the consumer experience. So it's a very strategic play the company is getting into. If we split it into offline and online, in offline, we will be opening upwards of 1.5 lakh square feet this year. So around a 15% expansion in our net square feet is what we expect. And like-for-like sales, have typically been going up in the 6 to 7% range. So that's kind of the base case over the years that should come. And the online consumer direct business, we are launching .coms aggressively this year. We continue to recruit customers very aggressively. And the direct online channel should grow upwards of 20% year on year in the coming years. So I think we are really trying to spin the direct flywheel as fast as we can.
So direct was 56%. Next year, you're saying it goes up 300, 400 basis points?
That's right, around that level, yes.
So 3 years down the line, you get to your target of 65% for the direct channel. Would that be a fair assumption?
That's a fair assumption.
Okay. And like for like, you're saying should be above 6-7%. Last year, you did 8%. Is there a scope for you to push it towards double digit? I mean, how's
Definitely,
the...
I think the scope remains. I think if, as you are aware, market conditions have not been extremely buoyant. And in tough markets, I think we've been posting amongst the highest like-for-like growths in the industry, thanks to the re-energized brand franchises we have and all the levers we are pulling on like-for-like. I think if markets become more buoyant, there is a scope for this to go up. Typically, we look for 4 to 5% volume growth and the remaining coming from value growth. And there could be a case for slightly upward trajectory if the markets become stronger from a demand sense.
All right. Hi, Kulin. Good to see you in. This is Nigel on this side. A quick word with regard to US Polo. Now, that business has been doing very well, I understand. What's the size currently? Around 2,300 crores ballpark?
We've touched a 2,500 crore scale, and you're right. It's we had our fastest year of growth last year. So I think the brand is emergent as one of the biggest brands in the space, and it is currently at its healthiest growth trajectory. So we're very excited about where the brand is headed, and it's such a broad franchise that it has multiple growth levers. We are underpenetrated still on retail square feet. New franchises like footwear and women's wear have huge room for growth. And we are premiumizing extremely successfully in that brand. So we are very excited about the potential of that business.
US Polo will continue to grow at ballpark around 14-15%?
We do believe that even at this scale, a mid-double-digit growth is possible. We have the growth drivers for that.
Interesting, because you've really scaled that part of the business and you believe mid-teen growth is still possible. Let's focus on margins. I think you're talking about some margin expansion, right? But cotton prices have spiked up quite a bit and various other input costs as well. Run us through that piece. There are a couple of tailwinds. You're talking about better growth, but input costs, like say cotton, has actually gone up one way. How are you managing that?
So, the price increases definitely are a worry on the COGS side. There are two things we are doing. One, obviously, luckily, we've inverted a lot of the current season before the spike in the prices. So the prices would impact more on autumn, winter, which is the second half of the year. And for that, we still have room to optimize on our pricing strategies and really try and bring more cost efficiency. So we are, of course, very aware that there are cost pressures and risks in the business. We will be working very hard on our cost levers and also on our pricing matrix, because this is a business with some pricing power. So we tend to be very nimble on our pricing decisions. We also, our overall operating leverage doesn't just come from gross margin. It comes from productivity improvement, LTL-led gains. So Select's operating leverage is one other component. And the third component is overall operating leverage, because the salary overheads don't grow in line with the way our revenues and contributions grow. So there are several operating leverage points in the business which should deliver 50 bips.
All right, Kulin, we've got that very quickly. We spoke to the other Arvind Group company earlier, Arvind Limited. They have done some inorganic growth. My ear to the ground, I believe in Kulin's on the prowl. And that could be an asset that you're looking to acquire. How soon and where and what could the potential size be? And you could deny all of it if you choose.
Yeah, so to be very honest, and I want to be very forthright in this, our focus in our next 3-4 year strategy, at least in the immediate future, is scaling the current portfolio. We remain open to opportunities, but we are definitely not on the prowl or in the hunting mode. We are focused on scaling up. You yourself mentioned the scale of US Polo and the scale of our ambition with that sort of franchise. So I think the focus in Arvind Fashion remains organic growth. We're very excited about the inorganic moves we have made recently in Arvind Limited, but in this business, organic remains the core focus.
Got it.
All right, Kulin, thanks very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV. So no inorganic acquisition, maybe scaling up the existing lines of businesses. I think we're about a couple of minutes away from market open. Mitesh is with us. Mitesh, what do you have? 9-10 calls?
I'll go with the sell on Godrej Consumer.
Okay, sell on Godrej Consumer was down in a week yesterday as well by about 4-5%. Pidilite is what we want to focus on. Mangalam is here with that one. Mangalam.
Well, it's a solid set that came in for Pidilite. The overall revenue growth was 14% as against street expectations of just about double digit. More importantly, the margins as well. The street was anticipating some sort of moderation. They've actually improved year on year, and there's been a 32% jump in the EBITDA. Net profit is higher by 37%. The volume growth has, for the consumer business, come in at over 15%. The street was working with a range of anywhere between 9 to 12%. And the B2B business as well has been 14.8% volume growth at a time where there was a lot of uncertainty. The important part, however, is going forward, the management sees some price hikes and they maintain their double-digit underlying volume growth guidance, with margins being closer to the 20% band as against the 20 to 24% band that they keep speaking about, largely because of the inflation that we've seen in raw material prices.
Okay, all right. Thanks very much. Let's just quickly recap the stocks which we put out since the morning. The Nifty is indicating a 90-point lower start. The Sensex is down about 200 points. And we've got the... can we have the hot boards up and just look at where things are starting up this morning? So, Pidilite, of course, is one. There is, there are other names like, Dabur, Lupin, Biocon, up on your screen at this point. Lupin is down a little bit, which is done well. Biocon is down a little bit. Pidilite is up about 4%. Thermax, BSC, of course, are the others. So BSC, breathless run recently. Thermax is up 5%. And there is Dabur, which is up about 3%. Britannia, MGL, Lenskart are some of the others. They're all down. Britannia and MGL are the ones which are down about 3%. Lenskart, there's a block, and that is the one which is coming through as well. So we'll see and how things start up. But Paytm is the other one. The call yesterday sounded confident. Stocks done well has come up after the results, into the results and after the results. We'll see if there's more here. Keep an eye out on these insurance stocks as well, because last 2 days they've started to make a move. And I think it's about today or maybe over the weekend or on Monday, we'll get these monthly numbers for both life and general. And sometimes they do have an impact. What do we have? First rates come up, 24,200 on the Nifty, 0.5% lower, 0.6% down on the Nifty Bank, 55,575. You got the small cap index, which is absolutely flat. The mid cap index, which is coming up on your screen, and there is about a 30-odd point lower start there as well. So flat sideways at this stage, 130 points lower on the Nifty heat map. On the Nifty, where are stocks opening? Before we go any further, so we've got bulk of the names which are down, about 34, 35 names are down, 2 unchanged, and there is the rest which are higher. Asian Paints, Wipro, Tata Consumer are higher, HDFC Bank, Coal India and Mahindra. Vivek reported that there is a block in Coal India perhaps coming as well. So coal is under a bit of pressure, but nothing very large. I think it's a sideways kind of start with a 0.5% lower on the Nifty. Rima.
Private sector banks are underperforming, so the Nifty banking index is down nearly 400, with Axis Bank, HDFC Bank selling off more than 1%. Kotak Mahindra Bank also giving it company on the way down. Reliance Industries is seeing some profit booking. The stock's done well post numbers, but for the last 2 days, it's been a bit subdued. L&T is under pressure. Coal India remains your top loser, still down nearly 2%. M&M, Eicher Motors are selling off. On the way up, you've got Tata Consumer, higher in trade, top Nifty gainer, 1.7% up ahead of numbers later today. Asian Paints is also moving up. This week, Asian Paints has moved up nearly 4.5%. Same time, when we had wrapped up last Friday, Brent crude prices were a lot higher. Today, crude prices have inched up compared to yesterday's level, but still, it's just 101. BEL, Tech Mahindra, Wipro, so some of the IT names have also managed a positive start. All in all, Nifty Sensex down close to about 0.5%, so it's a muted start. Asian markets too have pulled back from record high levels following the skirmishes that we've seen. Nifty at 24,200. Banks weak in trade. Advanced decline ratio, though still in favor of the gaining side.
Well, the number of stocks actually that were advancing were quite phenomenal, and some of those stocks that were reacting to numbers are seeing some follow-through buying. Case in point being in Avalon Tech. The stock is up another 7%. Another one is Apotex. Yesterday the stock in fact was up and about. Apotex was up 20%. It's up another 6%. Volumes as well is picking up on this one, so just highlighting that. Besides that, a few more names that are really flying away on rather good volumes. Let's pull some of them up. Thyrocare. Stock is up close to around 8%. Big move out there. That stock has bounced back in style. If I'm not mistaken, in the last 18 months, the stock has more than doubled. So solid move is what we're seeing on Thyrocare. Sonata Software as well is up close to around 8%. So solid move is what we're seeing on that one. Thermax is up 6%. That's heartening to see, not just from a company perspective, but even from an economy perspective. So that's up 6%. Savita Oil is the other stock that's up. Smaller name, came out with a set of numbers. That one is doing pretty well in today's trading session. What's not doing too well? Shakti Pumps. Seems like, it's lost a bit of Shakti this morning, actually. That's down close to 6.5%. Volumes as well, fairly large. So that's coming for some profit taking. Aditya Birla Lifestyle came out with a set of numbers. That's down 6.5% as well. And Global Spirits, that's coming for profit taking. Not too high this morning, in fact, lower. Stock down 6.5%. While Vesuvius, not on very large volumes, that as well is down close to around 6%. Britannia, that's one of the frontline names that's actually disappointed, I think, in comparison to what the street was working with. Stock is down 4.5% as we speak.
We spoke about Asian Paints, which is the top gainer. So Investec has upgraded the paints sector. So Indigo Paints and Kansai Nerolac has been upgraded to a buy, while Asian Paints has been upgraded to a hold. And investors' thesis is peak competition behind us, and Birla Opus is focusing on reducing losses.
I think we'll come back to the paints thesis in a bit. 120 points lower on the Nifty, and 24,200 is where we are starting at this point in time. NetWeb is another one which I think has made a new high today, should be today. Has it already made a high or just about making a high? I think it's just about, in the process of getting to an all-time high. 4479 was the high, and we're about $20 away. October of 2025 is when the high was made, and then it had fallen. It's got the second largest amount of volumes on the stock. So that is an interesting one. Okay, let's welcome in Neeraj Seth. He's with us. He's founder and CIO at 3R Investment Management. Neeraj, good to have you with us here. We'll get to equities in a bit, but one important signal, of course, is the rupee as well. We got some strength yesterday, but it kind of depends on the vagaries of what happens in oil. And that depends on the vagaries of what President Trump does or says. So it's a pretty volatile kind of environment out there, Neeraj. What are your thoughts? Have you seen the worst with regards to the currency? If oil stays around the 100, it's 100, 110. It's very high compared to where we were pre-February when the war started. But, you get used to it, although there are real consequences. Go on.
Sure. So
I do think, first of all, the worst of what we saw in March is behind us, which then it means that the oil price spikes and to some extent the resolution path might take long. And then to your point, it will actually lead to the real impact, the second, third level impact of that from an economic perspective. But from a near-term knee-jerk reaction on the rupee, I think we've seen most of it. You can see a gradual decline, but not major moves in the rupee if the oil stays in this range.
Okay. There is a flash at the bottom of the screen, which is important. The Tata Trust's board meeting, which was scheduled for today, has been postponed. So it was being watched widely, but it's been postponed now to the 16th of May. There were two agenda items. One was to consider nomination to the Tata Sons board. And of course, it was basically the Tata Sons listing issue. 6 months back, everybody was opposed to a listing. Now there are, people on the board, at least two who want a listing, who are okay with the listing. There are others who are, Noel Tata, of course, is still opposed to the listing. N. Chandrasekaran, perhaps, the stance has been, we'll do what the regulator tells us. So it's an important one, and there's, of course, a power struggle at the top. But this is important information. It was supposed to happen today, but it's been now postponed to the 16th of May. Rima.
Okay, let's continue our conversation with Neeraj. While the US equity markets are surging pretty much at record high levels, barring yesterday's little bit of a sell-off from the peak, the bond markets are telling you a different sign, that they are concerned. The US 10-year bond yield is at 4.45%. The 30-year bond yield is hovering around 5%. So they're clearly concerned about the US economy, the inflationary pressures, gas prices, etc. What is your own sense?
So I would say there are three parts here, to be honest, from the US bond market perspective. You're going to go through the Fed chair change. That's obviously important, which changes the gear in terms of the discussion from an FOMC perspective. The second is the inflation impulse of oil, which obviously the markets are pricing in. And the third is the whole fiscal discipline or the fiscal financing requirements. And with the IPA canceling the tariff and refunds starting, as well as the geopolitical backdrop, the term premium is also increasing. So even though I don't think the Fed goes on a hiking path, you're not seeing the respite in 10 to 30-year part of the curve because of the oil price, as well as obviously the fiscal financing requirements. And I don't think that's going away in a hurry.
Yeah, no, not going away in a hurry at all. I completely agree. Just a quick word, Neeraj. This entire AI story, right? You must have followed the debate about why foreigners are staying away from India. Some have said lack of AI. Others have said it's very high taxes. Maybe it's a bunch of things. Earnings growth, of course, has slowed down quite a bit. It's all relative. Earnings growth is better compared to our own earnings growth in the past, but compared to the rest of Asia, US, etc., it's much slower. What, to your mind, is the big reason, Neeraj?
So I do think it's a combination of the AI link or the AI supply chain, where India is not really a big part of it, and the starting point of the valuations relative to the earnings growth. So as over the course of last 18 months, we have seen the valuation somewhat correct because of obviously the Indian markets lagging rest of the world. I think it's getting close to the point where it starts to look interesting with or without AI. And I think that's the part which I'm focused on. So to say, if I take a longer term view, now is the starting point from a valuation standpoint more reasonable or not?
Yeah. But by the way, Neeraj, do you have a sort of you're a macro watcher? Are you following some of the moves in AI related themes as well? And at what stage are we at right now?
So, see, the key thing is from an AI standpoint, at this point, the markets are still very focused on the infrastructure and the application layer, and not as much we have seen from the real productivity enhancement perspective and the disinflationary impact, which is more medium term, what you would expect. And in fact, one thing I would highlight that what would be interesting from an India standpoint is that productivity enhancement and the AI adoption by the businesses, that can be a real kicker down the road as you see more clear adoption from a lot of different businesses. But right now, it's still in the early innings of the euphoria around the whole infrastructure and most of the hardware where you're seeing the memory companies just flying because of the expected demand and the shortages, at least in the near to midterm.
We had the HFCL management with us 2 days back, right? Mahendra Nahata was with us. I'm not sure what he... I want to just go back and watch the interview because, I mean, you know, in India, the two best performing names this year, 2026, is HFCL and Sterlite Technologies. And, I mean, actually, both are in the optic fiber segment. I mean, it's possible that, you know, is that same AI kind of theme showing up here? And that's what I was asking Neeraj, at what stage are we at? Because it's the entire ecosystem where people are trying to find, you know, scarcity and the demand, of course, is there. So both are, I mean, if this is the optic fiber AI-related, you know, pulls that we've seen in both these stocks, we've had the AI effect in India as well, and ferocious, absolutely ferocious. I think Sterlite's gone from 100 to 350, and this morning it's up another 5%. So to speak. HFCL has done pretty well. I think about a month back was at 100, 150 this morning at this stage. Neeraj, anything else on your on your radar important enough to watch? You know, even as we trade another possible end to the war.
So I think there are two aspects, geopolitics and the policy. On the geopolitical side, obviously, how this resolution path evolves from here. There's been a little bit more noise over the last 6 hours in terms of the missiles again flying, which is not good news. But as I said, the market reaction might not or probably will not be what we saw in March. And the second, we have the NFP tonight in the US, non-farm payroll, where the expectation is very much, again, a strong month. And if we see stronger than expected, then I think, if anything, the markets start to price out any kind of rate cut expectations from the US curve.
Okay, Neeraj, we'll leave the conversation here. Thank you very much for joining in. We've got the management of Nalco joining in.
Well, that's right. Let's get straight to our next corporate that we have on the show. Mr. Brijendra Pratap Singh, the Chairman and Managing Director of Nalco, joins us on the show. Hi, Mr. Singh. Good morning. Good to speak to you. And thanks a lot for speaking to us exclusively on CNBC TV 18. Let's get straight first to your numbers and the way ahead as well. Tell us a little bit about pricing first. Alumina prices have been weak, while aluminium prices have gone to multi-year highs. What is the outlook you are working with on pricing with regard to aluminium as well as alumina from year on? If you could give us a broad band.
For this year, financial year 27, what we are looking, alumina prices will be stressed because of the excess alumina in the market, and we are expecting somewhere around $300 to $310 will be the alumina prices for this year. Aluminium, as of now, it is around $35 to $3,600, but it will come down after the geopolitical situations improves. We are expecting somewhere around 3,100, in between 3,000 to 3,100.
Okay, 3,000 to 3,100. Got it. Quick question, Mr. Singh. As you mentioned briefly, if the geopolitical tension cools off, then alumina prices will pop up, you think? You know, do you see it surge?
Alumina prices will maybe slightly, but there is already excess of alumina in the market. Because you see, when the situations is normalized, what happens, the starting of the smelter will take some time. It will take 6 to 7 months. So immediately the alumina requirement will not be there. After 7 to 8 months, the requirement will start coming. So that is the thing. So alumina, already excess of alumina in the market is there. It's not going to further increase.
Okay, all right. Let's talk then about alumina first, because your refinery is going to come on stream. If I'm not mistaken, I think the next 30-40 days it's going to be coming on stream. 500,000 tons or thereabouts. How do you see ramping up of this capacity that's coming up? What kind of volumes are you penciling in for this year? Because earlier I think you were far more optimistic in terms of ramping it up. Now I think you've scaled it back. So give us the updated number.
This 1 million ton refinery, which we are now, will start the commissioning process in next month, around June onwards. Commissioning process, it is a chemical plant, process plant, already a lot of things are there. So it will take around 3 to 4 months to stabilize and maybe come to maybe 50-60% of the rated capacity. This year, earlier we had planned of around 5 lakhs. We are optimistically what we are thinking, somewhere around 2 lakh to 3 lakh we will be getting this year. And next year onwards, we'll be ramping up to the fullest capacity.
Got it. Okay, all right. So now around 2 lakh to around 3 lakh in comparison to around 5 lakh.
That is the optimistic figure which we are thinking of.
Okay. Now, most of your alumina is exported, right? Could you tell us how much of that alumina that is exported goes to the Middle East? And if you could help us out with, are you looking at longer term contracts within India itself, since the globe is in a bit of a flux and a bit of a oversupply situation on alumina?
Yeah, you see 50% of our alumina production is exported, and whatever we are exporting, last year we have sold around 14 lakh tons of alumina. Out of that, around 40% is going to the Middle East, and rest of the going to the other countries. With this expanded capacity increase in the alumina production, what we are targeting is to increase our presence in the domestic market also. Last year we sold around 1.38 lakh tons of alumina in the domestic market. This year we are targeting around more than 2 lakh, maybe 2.5 lakh tons of alumina to be sold in the domestic market. There is a huge demand of the alumina in the domestic market also. We have to increase our facilities for loading of alumina and supply to the domestic market.
Okay, all right. So now you're looking at, incremental supplies in the domestic market because the Middle East has gone into a bit of a flux. And you said, sir, with regard to alumina, out of the total sales, how much is exported?
Around 50 to 55% we are exporting, because we are producing around, maybe at present, around 2.1 million ton.
Okay.
Out of that, 0.9 we require for our own smelter, and around 1.1 we export.
Got it. All right. So majority of your alumina sales are exported, and out of that, 40% goes to the Middle East. We're getting it correct, right,
Yes.
sir? Around 0.4, 0.5 million tons
It's
goes
on
to the Middle East.
changing. It's not that fixed, always it is going, because we do on a spot tender basis. On spot tender, sometimes it goes to some other countries. But
Brilliant.
on an average, maybe 40 to 45% going to Middle East.
Let's get to some input costs then. I understand, that CT pitch, you have your CP coke prices as well, they have moved up. So as a cost basket, how much have these prices moved up? You have a couple of listed players like Rain Industries, where they have been indicating that the pricing has moved up. Could you tell us, CP coke and CT pitch, how much has it moved up? Point number one. And point number two, what will help you actually is your coal. Out of your total requirement, your captive sources have picked up. So how much did captive contribute in the past year? And this year, how much will it contribute?
As far as the caustic soda prices, CP coke prices, and CT pitch prices are concerned, they have increased. Like caustic soda, it has gone up from 42 to 45,000 per ton. Caustic soda prices has gone by around 5,000, 4,000 to 5,000. CP coke also has gone up by around 12,000. It was 44 on an average last year. This year, whatever the latest prices are, it is somewhere around 52, 53. CT pitch has also gone around by maybe 6 to 7% CT pitch. So this all increase in prices will increase our our total cost of aluminium by maybe around 5,000 to 6,000 rupees per ton. Cost of metal will increase, and cost of alumina will increase by around 2,000 rupees per ton.
Okay.
We have advantage of our our coal production. Last year we did around 4 million ton, that is 40 lakh tons of production. In previous to that year, it was 2.8 million ton. This year we are targeting 4.8 million ton. So out of total 7.2 million ton is our requirement for our power plant. Out of that, 4.8 will be producing from here, and the rest around maybe 2.5 will be taking from our linkage source.
Okay, we have some color then on the input cost and also the benefit you'll be getting of captive coal. Now we'll focus on the EBITDA per ton, sir, because you're going to get the benefit of higher prices, but there'll be a bit of a mix in terms of input cost spike. And as I've been seeing, your employee cost as a percentage of the total mix, that has come down a little bit, which will give you some breathing space. On an EBITDA per ton basis, I'm looking at a Kotak note. For last year, you did roughly around $1,350 per ton for aluminium, EBITDA per ton. And on alumina, it was around $180 per ton. Now, they are estimating that this year you will do around $1,850 per ton on aluminium, and on alumina around $140 per ton. Is that doable, you think so? Or can it be better or worse?
If we talk on the rupees terms, in the rupees term, our EBITDA per ton is around, last year it was around 1,21,000. It will come down to maybe around $1,300. And alumina was around 21,000 per ton. Slightly it will reduce down because our interest and depreciation will be there. Our costs, especially input costs, are increasing. Totally depends on what will be the realization we are getting from the market. If the realization present which we are getting, it will remain almost same because the realization is on the higher side. But the cost, around 10% to 15% increase in the cost is there. We are expecting slightly reduction in the EBITDA as far as this financial year is concerned.
Okay. Final question, sir. My colleague Vivek yesterday spoke about an OFS in Coal India. And the government could be a little bit opportunistic with aluminium prices being up as well. But their holding is already around 51.5%. Have you heard any kind of divestment plan from the government of India for the NALCO on the whole or any kind of small OFS?
No, NALCO, as of now, there is no disinvestment plan. The shareholding pattern will remain the same.
All right.
All right. Thanks a lot, Mr. Singh, for joining in and giving us all of those details. Wishing you all the best for the coming year. For the time being, the street expect a little bit more, I think, in Q4. Well, we had some flashes that were at the bottom of your screen, and we understand that the Tata Trust meeting that was scheduled today has been postponed. Shireen joins us to fill us in with the latest on that front. Shireen?
Thanks very much, guys. Yes, this is the CNBC TV 18 exclusive. We are given to understand that the meeting schedule of the Tata Trust today has now been postponed to the 16th of May. No reasons have been given for the postponement, but the communication has gone to the trustees that the meeting now stands postponed to the 16th of May. This is a crucial meeting because, remember, there were two board items on the agenda. One was the inclusion of directors on the Tata Sons board, and the other was the comment made by the vice chairman, which includes Venu Srinivasan and Vijay Singh, on the possible listing of Tata Sons. Remember, they have been in favor of listing Tata Sons. So these were the items that were up for discussion at the Tata Trust meeting today, but that now stands postponed. This also is happening in light of a PIL that was moved in the Bombay High Court yesterday. So whether this is linked to that particular development, we're not sure. Also, it is important to note that the Tata Sons board meeting is scheduled for June, so one will have to wait to see what happens. But today's meeting stands postponed now to the 16th of May.
We were all prepared, but on the 16th now. Shireen, thank you very much for joining us and that information coming through. Have a good flight. And that is the Tata Trust story, which is, of course, we'll have to wait for a few days more for that board meet to take place. But two important issues closely watched. We'll take a break. We are back on the other side. We have the management of Escorts, Kubota, joining us on the back of their fourth quarter numbers coming back.
Welcome back. Let's talk about individual stocks. Britannia on our radar stock is struggling today, down nearly 5%. Mangalam is here to recap the numbers.
Well, we had spoken about how, the weak those numbers were as compared to street expectations. In fact, the street expectations were elevated, especially post Nestle and all the other food companies' numbers and outperformance. They were working with at least a double-digit revenue growth on Britannia, especially, again, because this was the first full quarter of post-GST rationalization. So the street was expecting some sort of stock retrading to happen and stock refilling to happen. And that's what happened in Jan and Feb. The companies reported 9% growth in Jan and Feb. But the impact of the West Asia crisis on their production, and perhaps as a result of which disruption that took place in the month of March, took their overall quarterly growth down to just about 6%. So that was much below street expectations, and that flowed through into the bottom line as well as the EBITDA as well. The net profit, however, was comparable to our expectations. That's largely because of a lower tax impact. Effective tax rate was 13.5% as against over 22%. So that's what explains why the net profit is slightly above street expectations. But operationally, this is a weak set, and that's largely because of the disruption. But more importantly, now as we speak, the first quarter also, the disruption isn't entirely away. Raw material prices, especially on the packaging front and the fuel front, have increased. And at the same time, we do have wheat inflation, which is coming back on the table after unseasonal rains in March as well. That's something that Nestle had called out. So not good set of numbers coming in the fourth quarter with not very good prospects in terms of margins for the next couple of quarters as well. Keeps the street on tenterhooks, and which is why the stock is lower today.
Thank you very much for that. On the other side, Thermax is surging. Order inflows in Q4 have doubled. Vinny now joins in with more. Vinny?
Hi, so yes, order inflows have surely doubled in Q4, 4,490 crores. There's a big order that they've received of around 1,600 crores during the quarter. That was for boiler package order. So overall order inflow is good. Order book stands very strong at 13,600 crores. So revenue visibility that comes in for FY27, that's strong. Overall, Q4 FY26, strong performance in terms of revenues. Margins have seen an expansion as well. And segment-wise, industrial products, that's done very well for the company, which saw a growth of around 17%. Margins over there were largely stable, 13.6% versus 14.6%. So slight bit of a decline, but not major concerns because of raw material inflation. Some concern there. But industrial infra, that's done well in terms of growth. Managed to see good EBIT margins over the last couple of quarters. So that's the positive sign that the street is taking as well. They've seen a strong performance in heating, cooling, water, waste solutions as well. So that is supporting the growth. Chemicals business profitability is lower due to input costs being higher, change in product mix. That's impacting the overall margins, EBIT margins of that segment. And green solutions, that also there's costs that have come in here. They're expanding this side of the business, relatively newer. So overall, they've seen a revenue growth there. EBIT margins will come up as well. We have the con call at 10 o'clock, so we'll start 11 o'clock. So we'll start seeing the highlights coming in on that front. But strong numbers in Q4. That's why the stock is running away.
Okay, that's a very large move on Thermax, 8.5% on humongous volumes as well. So it's not a small price, small unit value name. It's a 4,500 rupee share. And I mean, similar is the case with something like a NetWeb, which is surging as well. It's lost a little bit from the highs, but doing well. Well, L&T is back. The order, compared to the size, of course, is the backlog. It's small for L&T now, 1,000, 2,500 crore order, but that's what's coming through. Bharat Madan is with us. He's a whole-time Director and CFO at Escorts Kubota. And we're going to talk about numbers. We're going to talk about the outlook as well. Thanks very much for joining us. Good morning, Prashant here.
Morning,
Prashant. In the fourth quarter, sir, your tractor growth, domestic tractor growth has lagged industry, 23% compared to 35%. You're also guiding for a flattish FY27. You know, we had numbers from Mahindra and guidance from them. They're guiding for mid-single-digit growth. Could you just contextualize this for us? What are you seeing out there in the market? Is it about a specific product? Is it about regions that you operate in vis-a-vis, I mean, a player like Mahindra? Just give us that sense, sir.
So, Prashant, I think first I'll try to respond to your first part of the question, which is in regard to the last quarter numbers growth. So obviously, as you mentioned, so there has been a regional disparity in the growth. Within the last quarter, you've seen the growth in the western part has been very strong, especially the Maharashtra state, which has actually outgrown the subsidy-driven demand which was there. And since we're not very strong player in those markets, that's one of the reasons why we lack the overall industry growth. But in spite of that, the growth has been almost 23% in volume, in this quarter. So I think coming to the second part of the question, and it's to the guidance for the industry going forward. See, so right now we're starting the year with a lot of headwinds now. with this geopolitical scenario, with the cost pressure building up on the input side, and then the initial prediction of monsoon, which is not very healthy. So there are many things, I think, uncertainty which we don't know how it will perform. And then there's also going to be a large base effect will start pitching in from September. Since last year when the GST cut happened, so this impact had started coming in for September month. So first 5 months of this year, obviously we are bullish. So there will likely to be double-digit growth till maybe July, August. But after that, obviously many other things will likely start playing out, which is the reason we are expecting maybe second quarter may not see that sort of stronger growth. It may be a flattish sort of quarter, and second half actually can be a bit of degrowth. So which is why overall we look at plus minus 2-3% on the industry for this year.
So you're saying industry growth will be, in your opinion, 2-3%?
Plus minus 2-3%. So it can be either way, depending on how the second goes here.
And you'd be around that number, around that range, basically.
So we as a company should do better than that because we got a lot of product launches which has happened in the last 1 year or so, and there's more in the pipeline within this fiscal. So I think from application perspective, we intend to cover all geographical applications which are required for the tractor space. So that gives us, I think, some positivity for this year. So overall, volume-wise, we think we should do better than industry this year.
So plus, so should be what kind of, I mean, what should we expect?
As we'll expect mid to high single digit sort of growth for the company.
Mid to high single digit growth, volume growth. Got it.
Yeah.
So last year, because you...
Sorry, the monsoon is the monsoon which is below normal. So most of the areas in the south and west are more dependent on rains for irrigation. And since those are not very stronger areas, and if a stronger markets do well, so that will be positive for the exports in this year.
Got that. So last year, did you lose market share because you underperformed? And if yes, how much?
Yeah, there's a 30 basis point, I think, loss of market share on the retail side, because we normally follow the retail data only. So which is what we are saying, because that was basically coming because of geographical disparity in the growth, which hopefully in this year will get straightened out.
So you are hopeful of reversing that market share loss of 30 basis points this year. One more question on commodity side. Now, steel prices are up, tire prices are up. You particularly also get impacted on account of the increase in wages in states like Haryana. Overall, what has been the increase in cost, inflation for you? How much have you been able to pass on? I think 1.5%, but would you consider a second price hike?
So we'll be watching the industry. Obviously, if the input pressure remains high, I don't think anybody will be able to absorb. All OEMs will have to take a call and maybe pass it on a bit of that. But since the scenario is not very clear how long this geopolitical situation will last, if it's only going to be a quarter, maybe OEMs will absorb that impact. But if it continues for a longer period, then I think there will not be any option but to pass it on to the market.
But as of now, with this 1.5% price increase, sir, you've not been able to pass on the entire burden of cost inflation, which is 5-6%. So till there is a second price hike, your margins will be under pressure in Q1?
So this 1.5% increase was the normal increase which we do every year. So this is essentially to take care of the inflation and the normal cost. So obviously this does not factor any inflation on the commodity side, which will be separately tackled. So the assumption normally is any inflation gets passed into the market. And we have seen it happening even in the last war scenario in the Russia-Ukraine time in 2022. So the similar thing had happened. So, but like I said, since the demand right now is strong, nobody wants to really touch the demand side as of now because the GST impact is still running. If you end up increasing the prices too much, then that will start impacting the demand adversely, which no one would like to have.
Could you give us a sense of the cost breakup? Sir? I mean, the steel, I'm assuming, is a single largest component, right?
It will be a mix of everything actually. Also in tractor typically is casting, forging, sheet metal, which is essentially like the steel, and then obviously the tire tubes, which is again a major component, and electronics. So we'll have a couple of, I think, all metal, steel, copper, aluminium, which will be all coming in together. And we've seen the cost pressure coming across all commodities now. In addition to the cost on the process side, with the energy costs have gone up, and then the manpower cost has gone up because of this minimum wages increase in Haryana and UP.
On an average, taking all this into account, how much have costs gone up for you when you procure all this now?
So like I said, since the procurement team is still not finalized the discussion with suppliers, but the indication we are getting is it can be anywhere between 5 to 6%. Obviously, it will depend whether we pass it on in one go or it happens in stages, and most likely it will happen in stages in the phases quarter on quarter. So overall, the expectation is even if there's an initial increase in the commodity prices, it will get rolled back by the end of the year. So overall, we try to protect the margin for the company on a full year basis.
13% margin, sir, should hold?
Just the effort for the full year. Assuming the war doesn't last too long, and hopefully we are able to recover it back in % of the year.
So the effort is 13% margins, protect that. Export contribution through the Kubota channels has reached 67% of exports. What's the medium-term aspiration for this?
So medium term, our expectation was to take exports to 15% of our top line, and this will remain one of the priority area for us. Though this year we don't expect export will play a major role because of most of the products which we intend to export will start coming in from FY28, and that will be a major boost, which will give to the export numbers. So from next year onwards, we expect the export numbers should do extremely well, and we should be able to double the export numbers in the next 4 to 5 years.
So, just one question. In terms of financing, right, is there any issue at all for tractors? Are lenders becoming a little more cautious at the margin?
No, not at all. I think credit availability has never been an issue, I think, in the market. And then we also started our own captive finance company last year. So it's just completed 1 year of operation. So that's also doing well. But we don't think credit availability is an issue for the agriculture sector right now.
That captive NBFC, I think, has a 100 crore loan book against the 200 crore of equity that you've deployed. So as of now, at least, there is no leverage. What is the target loan book that you have for this captive NBFC by, say, FY27 end?
So board has authorized us to put in 700 crores of capital into the company. Until 700 crores capital, there will not be any leverage. And we expect that book should hit somewhere, I think, in the first quarter of FY28. And that's the time when we look at further leverage, on the books. So by that time, we expect the company will start doing break even. And then after that, only the leveraging will start.
Hi, Mr. Madan. Good morning. Good to see you. Could you tell us a little bit more about the new upcoming greenfield capacity that's going to be coming on stream? I think the phase 1 is scheduled, right? What is the total capacity that will come on stream? What is the total capex, and how much has already been spent?
We are in the process of acquiring the land, actually. So the allotment has been done, and we just made the initial payment to the government. So we expect them to do the groundbreaking ceremony sometime in this quarter.
Okay.
And the construction activity will start. So our idea was to start production somewhere in FY19, 29, FY30, depending on the demand scenario. So we can expedite also a bit. So that'll be the first phase. So in that, we intend to start with the additional capacity for both tractor business as well as construction equipment business. And there'll also be a global part center for the spare parts, which will be created in that capacity as phase 1. This is a phase 1 initially, and then obviously we'll keep expanding capacity in phase 2 and phase 3.
You want to put some numbers to it? Total capex you've lined up for this capacity that comes up on stream in FY29 in volumes as well as in value terms?
So we had given I think, an indication of about 2,000 crores in the project report, the DPR to the government for phase 1. And this will include both tractor and construction equipment capacity. So tractor capacity, I think, will be somewhere around 60-70,000 units initially in the phase 1 to take care of at least next 3 to 4 years demand. And then phase 2 again will be similar capacity, which will get ramped up. It will happen in 3 phases, but the idea was to double tractor capacity from the current level. And 60,000, there will be 3 phases for the tractor business, capacity build-up, which will happen over there.
What is the current utilization level, sir, and the current capacity before adding this 1.2 lakh?
So we are almost at 75% plus capacity utilization in the last year. So total capacity today is about 170,000 tractor, which can go up to 185 if we stretch a bit. So right now we're still at about 125 or 30,000 sort of unit last year. So hopefully this year then obviously we'll expedite the greenfield construction activity.
These state subsidies can have a tremendous impact, right? I mean, the subsidies are 30-40% of the cost of a tractor. So what states do can have a meaningful impact on how much companies are able to sell, right? I mean, apart from what you do.
Yeah, that's right. So like you mentioned, the Maharashtra, like last year, has become the second largest tractors volume state, which normally used to be number 4, number 5. So obviously, major boost has come because of this state subsidy. And then obviously the state elections will be a lot of loan waiver schemes which keep coming up, which can also, in some way, help the industry.
These are factors external to what you can do as, running the business, but has an outsized influence, as we've seen this time around as well. Thank you very much, sir. Appreciate you joining us. Good speaking with you, and good getting that perspective. I think we have Sudeep Shah of SBI Securities with us with a quick sense of the technical levels and what he'd want you to do. I think we're down about 145. Sudeep, good morning. What's your recommendation?
Good morning, Prashant, and good morning, Nigel. Prashant, what I feel is that markets right now, post this move in the last few days, is just we are just going into some kind of a range. However, what is important is that the market breadth is still not bad. The mid caps and the small caps segment of the market is doing well, and they are the first one to pick up since the first 15 minutes dip. So overall, I feel 24,050, 24,100 should hold out as a support on Nifty, and it's a matter of time before we break out beyond 24,300. So all in all, for the next couple of days, I feel 24,050 should act as a strong base, and we are heading towards 24,300 and beyond that 24,500.
Okay. All right. Hi, Sudeep. Good morning. And my colleague Rima as well as saying good morning. I think you missed her out. She's in studio as well.
Good morning, Rima. Good morning.
All right. Sudeep, what about individual stocks? What's on your radar?
Couple of them, the two mid caps. The first one is CG Power. Now, 2 days back, the stock has come out with its numbers, and the numbers have been fairly good. And we have seen that the stock has broken out of a symmetrical triangle breakout a week back, and strong volume. So from here and on dips to 850 can be bought, can be accumulated. 835 will act as a stop loss. The targets positionally would range from 900 to 930. The second stock is GE Shipping. Here also we have seen a strong breakout on cards on the weekly charts last week. This week we have seen a follow-up action also. 1550, 1530 zone has acted as a support since last few days. So we feel that this can be bought with a stop loss at 1530 for our targets of 1650, 1700 on the upside.
Got that. In the large cap space, we are seeing weakness in a couple of these private sector banks. In fact, even the Nifty Bank is underperforming today. HDFC Bank, Axis Bank, down nearly 1.5%. Any trade here?
Rima, what we feel is that the bank Nifty is kind of more weaker than Nifty. And here, for Bank Nifty or for all these private banks to move up, Bank Nifty needs to now sustain about 56,200. So till the time that does not happen, all these private banks would be on a weaker footing. And specifically, if we talk about HDFC Bank, here the important level is 801. 800, 802, this is an important resistance. Until and unless this is not crossed on the upside, I feel lower levels of 765 to 770 also can be retested. And it's not a matter of this thing that whether it is moving up or not. Even if it consolidates here, Bank Nifty would still continue to underperform.
Thank you very much for joining in, Sudeep. Great chatting with you. Let's get to some of the big movers in the market now. Sonal first joins in with MGL.
Well, Mahanagar Gas, it was expected to be a weak quarter because of the West Asia crisis. However, volumes have been strong this time, but there was a big miss on margins. Overall, revenues are down 0.4%, absolutely flat on a quarter-on-quarter basis. EBITDA is down 26% for the company. Margins are 12.7% versus 17.1%. Profits down 35%. As I said, volumes very strong, 11% higher on a YY basis, 1% on a sequential basis to come in at 4.7 MMSCMD. The EBITDA per unit, however, was lower, down 26% on a YY basis. It was down 27% on a sequential basis because of higher gas costs. However, this was the sector which was most impacted because of gas crisis. We have the conference call at 4 p.m. today, so we'll get more clarity on what is the outlook, how are they sourcing their gas, and what is the current pricing as far as input costs are concerned.
Thank you very much for that. Thyrocare is the other one, which is surging in trade right now. Ekta joins in with the numbers. Ekta.
Well, good quarter coming in for Thyrocare. So the revenue was up around 19%. The EBITDA margins expanded to 33.5% and the profit came in at around 48.7 crores. Now, in terms of the key highlights, revenue up 20% in Q4, 59 million tests conducted, which was up 29%. Complaints per test was down 34% on a year-on-year basis. Pathology, which is basically their bread and butter business, within that franchise revenue was up 21% and partnership revenue was up around 23% on a year-on-year basis. Even FY26, they did well, revenue up 20%, margins 31%, profit at around 162 odd crores. Revenue per test was at around 36.1 rupees. We had revenue per patient, which was up 8% year-on-year. Tests per patient, which was up around 8% on a year-on-year basis. And again, franchise revenue was up 18% and partnership revenue, which was up 32%. So overall, good performance coming in for Thyrocare. They've said that their vision is to go deeper into India, focus test menu, strengthen the existing franchise segment, as well as expand partnerships, plus strengthen their presence in Tanzania.
Okay, all right. Thanks a lot for that, Ekta. Well, focusing on Vesuvius, the stock is under pressure. Remember, this is one of the stocks that saw a big re-rating. And, any kind of miss when a stock goes that one way up, as you have seen the last 3-4 years, the stock has gone up big time, I think from around 1,000 rupees. It went all the way to 5,000 rupees, and that's the adjusted price you're seeing post the, the corporate action out there. Last 1 year, it hasn't done anything. In fact, from the recent peak, the stock has already corrected a good deal. And the numbers are fairly disappointing. I say that because the revenue growth is only around 4%. Remember, this is the company that added capacity as well. They were talking about adding, getting into more verticals as well. So 4% growth is something the street doesn't like. In addition to that, the EBITDA was up only around 1%. So you don't have the benefit of operating leverage, and then the EBITDA grows only around 1%, telling you that the margins actually came under pressure. So the margins on a sequential basis, it's more or less steady. However, on a year-on-year basis, it's down by close to around 50 basis points. When a stock runs up, expectations are very high, and they haven't delivered on this front. And other expenditure, employee costs, both of them have gone up by more than 10% when your revenue growth is up only around 4% or thereabouts. The PAT number, well, that's a little bit lower by close to around 6% because the other income on a low base was down close to around 7%. Net, the stock isn't cheap. It already ran up a good deal. No margin for error. That's where the stock came under pressure. I'll tell you what, this market, they have been talking about reinventing themselves. So let's see how the remaining of this year goes, because they're a company that actually have gained market share over the years. Can they get back to their winning ways? Well, that's something that the street will track. For the time being, numbers disappointing, stock down 7%. I'll tell you what, we'll slip into a short break. On the other side, Manisha Gupta is waiting for you. She's going to tell you all that's going on in the commodity markets. Stay tuned.
Welcome back. Let's talk commodities now. Manisha is joining in and she's got her eye on crude oil prices.
And why not? Because we're looking at very, very volatile moves coming in for this one. While we have rebounded in the overnight markets and we are holding around 102, but for the week, we're down by 8% for the crude oil prices. It continues to be a very, very volatile commodity therein. There are reports of fresh clashes between US and Iran. And from what we understand is that the US Central Command has issued a statement suggesting that they have intercepted Iran attacks, carried out defensive strikes and some guided missiles via the Strait of Hormuz as well. In the meanwhile, Iran also says they have set up now a mandatory record taking in which all the vessels that are wanting to pass via Strait of Hormuz have to mandatorily fill a form which is about vessel information declaration or risk and attack therein. The IEA suggests that the war has disrupted nearly 14 million barrels per day of global oil in the markets therein. And Shell CEO has said that nearly 1 billion barrels of crude of a shortage is what the global markets are dealing with right now. Then when it comes about the Iran peace deal with US, well, there are 3 stages that we understand from various tweets that both countries are working with. One is the formally ending the war, declaring that. Second is resolving the Hormuz crisis, and then a 30-day window for the actual deal to happen. The markets believe that this is how the whole thing perhaps will flow. But a lot of money clearly has been made in case of crude oil. The way the prices have been moving, 10 to 12% at some days. So there are bets on falling prices, leading to nearly 7 billion of money being made between the month of March and April. This is as per various reports that we have collated there into the market then. Also, when you look at the overall prices impact, that also has been quite on the stronger side. And there have been bets made just before you have seen those announcements come in, either from Iran or from US for that matter. So bets have been made just minutes before those announcements perhaps came in. And that is the reason there. I just want to quickly take you through some dates. And the most recent clearly has been 6th of May, which is in this week itself. When we saw US and Iran are close to a working deal, this is what Axios reported. And as soon as that report came out, we saw the prices decline by nearly 12%. And that Axios story, US and Iran did allude to that in some parts there, not totally, but the market had moved already. And we haven't seen the prices come back to those 113, 114 levels even now. Seems to be holding around that $100 to $102 therein. And then go back slightly more, and then you have 21st of April. That is where you had nearly 830 million worth of shorts that were created in Brent and WTI and various other commodities. The announcement at that time came in was that the US is extending the ceasefire with Iran. There's money that has been made during that time as well. Go slightly before, and 17th of April was when investors shorted 2 billion worth of contracts in crude and varieties. The announcement at that time was that Iran said that on Friday that the Strait of Hormuz was open. We saw the crude oil prices decline nearly 11% at that point in time. It was a Friday on 17th of April, and before the markets headed for a weekend, you saw the prices decline very, very sharply. In the month of April, this has happened 3 times, by the way. So not just 17th of April, but 7th of April as well. We saw shorts being created worth nearly 950 million therein. And at that point in time, US and Iran had announced a 2-week of ceasefire. Prices on that day declined 15%. And then it was 23rd of March when the trade investors sold nearly $2.2 billion. We saw US President announcing that he would delay attacks on Iran's energy infrastructure. At that point in time, on that one day, you saw the crude prices decline by 15%. And there is quite a bit of records being created by various agencies on how the announcement came at 11. And between 10:50 to 10:55, there was huge selling that we saw across exchanges, across energy products as well. That has led to nearly $7 billion being created just in the month of March and April. So while there are statements that have been put out from US administration warning staff against taking any information that has been not made public yet, while the US CFTC is looking into the matter, there's no official comment from them, but the market's clearly making or putting those dots together.
When you hear all these instances, the positions were taken before the announcement?
Before the announcement.
All of them?
5 to 10 to 15 minutes before the announcements, yes. You can see that volume jump suddenly and the short positions that have been created in all of those contracts as well.
So we've ended the war at how many times? 6 times?
Yes, 6 instances till time.
Crazy, absolutely crazy, but interesting as well. Thanks very much, Manisha, for that. So that's trading around these events when there is signs of de-escalation, prices slump, and then, of course, so far, we're still waiting. I think just a couple of more names, right? The market's down 130 points. Tejas Networks saw a very large move yesterday. It's down 3%, seeing some profit booking. Hitachi is another one. Hitachi, was down day before, was up yesterday, is down 2% again. MTAR Tech is down about 1.25%. I mean, it's the number two. It's number 2 on the leaderboard, YTD, with 175% gain. So, very few come close. Shakti, of course, we mentioned in the back of results. Data Patterns is down about 2 1/3. Some of them are just movers from yesterday. Raymond Realty, for example, was a big mover yesterday. It's down 2%. Godrej Industries was locked up 20% yesterday. It's down about 1.5% or so. So it's just some reversals, nothing more. Idea Forge is another one, for example, down 3 today. But again, it's done very well in the recent past. Global Spirits is down about 10, 11 odd %.
That's numbers.
That's numbers, yeah.
That's
it's a very sharp cut coming through. And I think the stock's done well coming into... Okay, maybe not quite, but it has actually. So from 860, it's come up to about 1100 in 15 odd trading sessions. So yeah, I mean, it's just 10, 11% lower. BSE was the other one, right? Numbers are super strong. Stock moved up $500 over the last 10 trading sessions or so, and seeing a bit of profit booking. It came back into the green, but holding on despite the run-up. We'll take a quick commercial break here. We come back in just a bit. It's our segment. It's the economy. Lata speaks with economists, Maitresh Ghatak and Debajit Shah, on how West Bengal's economy may be boosted post-change in the government there. Stay tuned.
Welcome to It's the Economy. Today, it's the economy of West Bengal that we discuss. This richest province under the Mughals, West Bengal still contributed 10% or 10.1% of India's GDP in 1960. Today, that contribution has fallen to 5.6%. Likewise, West Bengal's per capita income was 127% of India's GDP, India's per capita income, that is 27% above the national average. Today, it is 12% below the average, per capita income of India. So what went wrong? The leftist policies are often blamed for the supposed decline of West Bengal. But today, with a rightist BJP government winning the elections, there are expectations in some quarters that the state may once again attract investment and increase its GDP and per capita incomes. To analyze the pluses and minuses of West Bengal's economy and the economic policy, I have with me two absolutely eminent experts, Professor Maitreesh Ghatak. He's Professor of Economics at the London School of Economics, who has written a lot about West Bengal, and likewise Professor Debajit Jha of the Jindal School of Government and Public Policy, again author of a recent book on West Bengal's economy. Professors, thank you very much indeed for your time. Dr. Ghatak, let me start with you. You are sympathetic in your recent April articles to West Bengal. You say that if you adjust for inflation, because West Bengal has about the lowest inflation in India, its real income is better than is normally mentioned. Can you explain?
In economic analysis, there's very little room for sympathy or antipathy. If you look at the numbers, I think as any serious policy economist would do, is to look at the ratio of, say, whether the NSDP level or NSDP per capita, take it as a ratio with the rest of India, or all India average, or the best performing states or the worst performing states. They've done all of that in a paper that will soon be available publicly. And some of these newspaper pieces are based on this research that's been going on for about a year and a half. So the main idea is the following, that it's true that most of these numbers that you're showing, it's with respect to nominal numbers, right? Nominal is price times quantity, right? So if I told you that, look, your salary, your grandfather's salary in 1950 or 1960 was this, and your salary in 2024 was this, inflation adjustment becomes obvious. And if you compare, say, the person in 60's salary with the maybe all India average of the corresponding peer group, versus the 2024 or 2026. And the reason I mentioned 2024 was because it's the last year for which we have comparable state data available. So I think this is a basic discipline to do. We shouldn't just compare nominal numbers, number one. And you took the percentage. I think that's the right way to do, because a lot of people talk about ranks, and we all know ranks can be very fragile depending on how you do. There's no population estimates, our numbers since 2011. So depending on what you divide in the NSDP numbers by, you have to take into account both the prices and the population.
Okay.
No, that as it may.
Yeah. Go ahead.
Yeah. So I would just say that this is the broad trend you described is correct, and this is well known, right? There's no surprise here. There's no Sherlock Holmes moment where suddenly people have realized that there's been a long-term decline going on, right? I think the non-linearities in the narrative are as follows, that if you do real income, then the sharp is still there. I mean, the decline is still there, but it's just not as sharp. That's it, as you would expect, right, in real incomes or wages. And number two, and this is very counterintuitive maybe to many, because the left-run regime had enough policies that could legitimately be critiqued for economic stagnation. But the period in which West Bengal's NSDP per capita actually shows a rising trend, even catches up with the rest of India average, was a decade and a half, starting from 1990 to about 2005. Now, we have done sectoral analysis that shows that that's largely driven by agricultural success, which may have been the wrong bus to board at a time when liberalization was happening and services and industry were taking off. I'll pause here.
Fair point. Professor Jha, the southern states actually barge into the top 5 ranks after 1990. I mean, there's that Sanjeev Sanyal study also for the PMEAC. Until then, they're also very close to the national average. Now, Bengal had the first university in the country. Presidency College 1817 is 100 years before Banaras Hindu University, and a good few years even before Madras Presidency College and Elphinstone College in Bombay. I mean, the short point is Bengal was educated before the rest of the country. Why did they not get into the software bus? Is it industrial policy? Is it government policy that did not allow Bengal to take advantage of either the software IT boom or even commerce boom? They have a port, something which the Bimaru states don't have. What is the reason for Bengal not being able to become industrialized or higher in services?
Yeah, so basically what we try to look at the last few, say, 10, 15 years. Basically, we compared longer period. But our main focus was actually the last 10, 15 years. So when actually the major decline has started, what Professor Ghatak has also pointed out. And you have also rightly pointed out that actually location-wise, so West Bengal is one of the best, having one of the best locations. Say, for example, it is sharing the national border with the 3 different nations. It is the gateway to the northeast. So if it is becoming an industrial hub, then this region can be easily catered through this place. So now, what is the problem? So basically, say, for example, showing just only that West Bengal is declining, that's not sufficient. And definitely, we need to go deeper to
the cause,
to the causes. So basically, what we try to understand is actually what happened exactly after 2011. And we try to actually link with 2 different kinds of corruptions that are going on in the West Bengal economy. And we try to find out that so how much those can be responsible for that. Say there are 2 major corruptions those are going on, or maybe we can say that there are several kinds of corruptions going on in West Bengal. But what we can do, we can classify them into 2 different categories. So one is a syndicate Raj and one is Katman. So how we are defining it? Syndicate Raj is actually it is urban centric, so urban or semi-urban areas. So it is the simple thing that some of the say local unemployed youth. So those are actually, say, whenever someone is or some investor or maybe someone is trying to construct something. So they're saying, okay, you have to purchase the raw materials from us, right? And so they will provide you poor quality material at a higher price. And the history has started from the, say, early 2000s. So these things has started coming up in the Rajarhat Newtown area. So when the land.
And what is the other one?
And the other one is the Katman. So basically, the syndicate is basically the simple extortion. Right? And extortion always have a negative impact on investment.
Fair enough. Now, the bigger question is, I mean, corruption is an all-India phenomenon. It isn't as if cut money is not demanded in other states and sometimes even by central government officials. So, Professor Ghatak, let me come to the simple hope that the market has. Bengal has a large number of Marwadi business houses. I mean, the Goenkas. There are a whole lot of business houses who have come from there, the old Williams and Magor. Do you think that they get a better chance now that it is a non-leftist government? So you're on mute.
I agree with the broad drift of what my co-panelists said. I think there's no doubt anybody who has studied West Bengal or just reads newspapers, these problems are around. And the question is when they started. I mean, they clearly didn't start in 2011, but yes, early 2000 and, Newtown, all this is consistent with my assessment. But I would say that, again, to keep in mind the fundamentals, because, the left front clearly missed the IT bus in the 90s. That was clearly a mistake. And I'd be surprised if somebody tries to say at this point that was not a mistake with all our universities and human capital and the, kind of big metro city advantage, right? We missed that, right? That Bangalore and Hyderabad have deservedly benefited from it. But I would still say land issues are very important. And you know that the earlier government fell on the land issue. And you will also remember that the previous government was elected on agrarian issues. Of course, it was ranking on a countrywide anti-emergency mobilization too. So land, I think, and it goes back to really, I know I'm sounding like a typical academic when I say it, but it goes back to the permanent settlement. This is something that Kapoor and Subramaniam also,
referred to. No, Professor Ghatak, we may not have time for that much, but I just want to know whether, the coming of a non-left government can make a difference because it has a lot of businessmen. It has a good trading community.
No. I think that this is, I understand from the market point of view and from the point of view of the, ordinary viewer.
Yeah.
They want to know the, details. It's like a doctor who gives you a detailed analysis. You may not be interested. But my point is, unless somebody has a very good plan to deal with the land issue and curb the syndicate Raj and the cut money business, part of it is also these are symptoms. If you have better employment opportunities, all this unemployed youth will not be, spending their time trying to collect the cut money. I think that is the core thing. Whether just shifting the culture would make a difference, I hope so. But we'll have to wait and watch whether that itself, the goodwill that leftism is all there is to blame, or Trinamulism, or regionalism, or Bengali exceptionalism, or whatever you want to call it, whether that is to, that may well be.
Okay.
But I do think that there are some structural fundamentals that need to be dealt with, and it'll be challenging for whichever.
Which is connected with land, you are saying?
I think that the land is one of the fundamental issues. Absolutely. Yeah. I mean, you just think of the highway construction, the railway roads projects that are delayed and stalled. And I think that is where an innovation is needed. And surely the last two governments were not able to do it.
You're saying land acquisition is a big problem in Bengal?
Land acquisition in general, try building a house in Calcutta.
Okay.
The parcelization, the fragmentation, people holding on to their land as because that's some kind of a security. It's not just the farmers in Singhu. I think that is a real, it would need an administrative and economic package to essentially, and credible commitment on the government to do certain things properly, that this can be overcome, I'm sure.
I mean, this is hardly a well-understood problem. Thank you very much for bringing that to the table. Professor Jha, I'm sorry we are, constrained on time, but what's your expectation? Can government policy change? How should it change?
So definitely what Professor Ghatak has also pointed out, that the agriculture is actually pulling the economy for quite a long time. So now the problem is basically then actually there is a limit to the growth of the agriculture sector. So basically you have to shift towards industry and modern services. So now this structural transformation will happen. Definitely what I have tried to point out, that first you have to restore the law and order. So without restoring the law and order, it is impossible. So, and in a semi-legal environment where actually, say, even if you're going to the court, it will take huge amount of time, say 30, 40 years. By that time, your investment will entirely go wasted, right? So that is one of the major problems. And this is a general problem across the country. But at the same time, so basically that I point out that actually this restoring law and order also needs some kind of willingness.
Okay.
So that willingness should be there for the first thing.
Fair point.
And the second thing is actually it is not that easy as well. Why? The easy is not because it is, say, for example, the people who are earning money from those corruption rackets. So they will, so without giving them any kind of employment opportunity.
Fair enough.
So how can we transform? Because even if we are actually industrializing the state. So it will take some time.
Absolutely.
So during that time, how it is possible, how to do that?
So that's exactly what Professor Ghatak has also pointed out, that, the corruption exists. Unless one can give them an alternative job, it's going to be very difficult to resolve this problem. Unfortunately, out of time, but you'll have whetted our appetite for a longer debate, which we will do shortly. Thank you very much, Professor Ghatak and Professor Jha. The key takeaway, it is not going to be easy for a new government as simply left policies versus right policies. There is a seeped-in corruption, and very often the winning party sees politicians and goons from one party move over to the other party. So the corruption may also simply move over to the new administration, and land acquisition is a very big issue in Bengal. Well, all the best for the new government. Thank you very much for watching this edition of It's the Economy. After a break, time for Chartbusters.
US and Iran exchange fire, renewed tensions stoke fears of continued disruption in the Strait of Hormuz. Crude crawls back above $100 per barrel. Indian equities kickstart trade on a soft note. Nifty below yesterday's close, but still above 24,200.
Britannia is brittle in early trade on the back of a weak showing in Q4. The revenue and the EBITDA miss estimates, but lower taxes and over 20% jump in profits.
On the flip side, Thermax fourth quarter earnings beat estimates. Order book spikes 27%. Steady inflows driven by industrial products and infra heating, cooling and water solutions aid growth in the March quarter. Stock up 9%.
Similar to the story for Thyrocare, the Q4 top line grows 20%, margins at a 2-quarter high. Operational efficiencies in pathology segment trigger profits to more than double. The stock sees some solid gains in early trade, up 5.5%.
Pidilite delivers a solid beat for its March quarter results. Underlying consumer volume growth at 15% versus expectations of 9 to 11%. Management sounds optimistic, believes demand momentum is here to stay despite input cost risks. Stock off opening highs.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are a little under pressure today, but par for the course, one would say. We saw a bit of a spike up in terms of crude oil prices. Trump as well as Iran, there has been a bit of a skirmish out there, but Trump says that the ceasefire is still intact. So I don't know what's the takeaway out of that. But Mangalam, I'll tell you what, the Nifty seems to be in a bit of a range. But the one that's on the top of your screen, that's the one that we're talking about. I think we should get the white frame again up because that one is in fact in the green.
I'm just holding it up, Nigel. For you, it hit a record high yesterday, still holding well in today's trading session. No worries about Trump, because the good part is that earlier we were in a range between 23,800 to 24,200, 24,250. Now that range has moved higher by about 300 points from about 23,800 at the lower level to about 24,100 to 24,200 at the lower level now, and upwards would be 24,500 to 24,600. But a lot of companies on our radar.
Well, that's right. Greaves Cotton reported a mixed set of numbers, with the core business continuing to see double-digit growth, but also seeing margin pressure at the same time. We have Mr. Parag, the MD and Group CEO at the company, who joins us on the show. Hi, sir. Good morning. Good to see you in. And, the street seems to be a little bit optimistic on prospects of the business. In the last couple of months, I think from around 150 rupees, the stock had rallied to around 170 rupees. That's about the share price. Let's talk about business. And the most exciting part of the business is the EV business. Your market share, I notice, has gone up a little bit. What is the target market share you have on this business? And in terms of profitability, I'm observing the losses have come down. When do you break even?
Good morning, and thanks for having me. And really happy to be here to share some more business details about Greaves Cotton Limited. So very valid questions. But before I go into those, let me reiterate what you just said. We have had a very strong year. I would call it defining year for Greaves Cotton. During this year, we moved from just defining strategy into execution. And at a consolidated level, for the full year, our revenues grew by 18% over the past year. And in fact, even the bottom line, the PBT grew by 58%. So it's really significant improvements both in top line and bottom line. And what gives me pleasure is that this growth is actually quite broad-based. All our business segments have been reporting a very strong year. In energy solutions, we delivered a 20% growth. Our mobility solutions started a new business in Europe, and on the back of that has grown 16%. And Greaves Electric has also registered a very strong growth, not just in revenue, which was up 19%, but also the market share, as you pointed out, has improved steadily. And now we are in the top 6 electric two-wheeler manufacturers in the country. So to your question, Greaves Electric is focused on execution, and they've been improving their results steadily. As you know, they have filed a DRHP for an IPO. So we are constrained by what we can disclose as per SEBI guidelines. But I can assure you that we are very excited about this business. And the team has really demonstrated over the last 2 quarters how operational execution is improving the business and the financial results.
Just a quick question. That approval from SEBI, is it still valid? What is the deadline by which you have to come out with the IPO? Because of the last 18 months or so, it's been moving in that direction, but we haven't yet heard about it. So could you help us out in that parameter?
You were mentioning the Iran war. So given the very uncertain geopolitical situation, SEBI has looked at the situation, has extended the deadline for all IPOs till September 2026.
So before
we
that,
are
you'll have to
still
come
on
out with,
track.
with your issue, right?
That's right.
And
Okay.
you will.
That's right. We are all working towards that.
Just to understand, the listed entity owns how much in that, in the EV part of the business?
We own 66% of the total shares.
And this will be a mix of fresh issue as well as an OFS?
Indeed. So we are mainly looking to invest money into the company to continue to drive the positive growth that they've had.
So it'll largely be a fresh issue and not necessarily an OFS. Will you not be selling any stake? I mean, the company?
So we have first focused on getting money into the investment to continue the growth of the company. That's what the two partners are really focused on.
All right.
So from 66%, you intend to bring it down to what levels?
So that is very difficult to say now, Nigel, because it all depends upon the valuation. Like I said, the team is really focused on execution at the moment. The key here is to see that our market share continues to grow. And really, we have had very positive response about our products and how we have continued to grow the business across the country.
And we understand that you're, you won't be able to speak much about this business because of the current predicament. But just a final question to complete the loop out there. How much money are you looking to raise? Let's just keep it simple as that.
So you rightly pointed out, we really cannot get into the financial details of this because we are restricted by the DRHP filing.
Okay. But in terms of a trajectory, market share improvement and losses coming down in this segment would be the way to go. Is that correct?
Market share improvement on the back of a very strong product and on the back of improving distribution. And therefore, of course, it helps the financials.
Do you have a target there on market share? Because, I mean, in the states where you're present, and some states you've done almost, 12% market share as well. 4 states contribute about 23% of the market volumes that you have. Obviously, the entire country is open.
Indeed, and that's how we have seen the growth. We have been focusing very clearly on areas which are of our strength and starting with a very strong product into the market.
Okay, let's focus on the other parts of the business then, industrial solutions as well as the energy solutions. I'm just looking out there. That's around 340 crores for this year, if I'm looking at industrial solutions, and energy solutions are at around 740 crores. On this sort of a base, what sort of growth are you looking at?
So the energy solutions business we have called that out as a growth driver for us. It has been consistently growing at 20%. Even this year, it grew at 20%. So we hope to continue this momentum. And on the core business overall, in our strategy of Greaves.next, we are aiming to get an organic growth of 16 to 18% over the next 4-5 years.
All right, just to final one before we let you go, what's your margin target here?
We have been operating our core business at between 13 to 15% EBITDA margins. And in this Greaves.next strategy, looking at the portfolio that we are developing, and also because we have started to get a lot of good traction on our international business, we will continue to maintain the 13 to 15% EBITDA levels.
All right, so 16 to 18% revenue growth with 13 to 15% EBITDA margins. That's what we should take on board, right?
All right, Parag, we appreciate you joining in. That IPO has been a long time in the works. It seems, as you said, that IPO is on and you've got an extension till September 2026. The stock has spiked to the high point of the day. We look forward to chatting with you and, in fact, request you to join back on to CNBC TV 18 when there is some movement on that front. Thanks a lot for joining in.
And thanks for allowing us this platform to share our views.
Pleasure having you. Well, time to slip into a short break. Up next, we'll have the management of Westlife Foodworks who will be joining to detail the past quarter's numbers and tell us how yummy things looking going ahead.
Welcome back. You're watching us here on Chartbusters on CNBC TV 18. Let's speak about Westlife Foodworld. The company reported positive same-store sales growth after 2 straight quarters of negative growth. This despite facing multiple challenges in the quarter that went by. I spoke to Akshay Jatia, who's the CEO at Westlife Foodworld. Began by asking him about the expansion, more importantly, the growth strategy for this year and how the demand outlook for the QSR space at large is. Let's listen into that conversation.
We were very encouraged and happy to announce the results that we have. What gives me confidence is that they're coming from a lot of the inputs we are focusing on, which is primarily making sure that our brand remains that destination for everyday value. And that means the right price point, the right experience, and making sure that we're relevant to all our customers. So that's been very encouraging. And I think in terms of the next year, we're gunning for strong improvement from where we are even today. We're encouraged to see the momentum going into this quarter as well. So I'm quite optimistic, and I think all our inputs will, give us the outputs that we've been talking about.
Could you give us some more color on what a strong improvement over last year would mean in terms of numbers for you? Largely because as we speak, there have been some disruptions geopolitically as well when it comes to raw material prices or even the availability of gas, etc. So have those factors impacted any sort of performance in the first quarter?
So in terms of our projections and our aspirations, I can share that we are gunning for mid to high single-digit SSSG for the next year. This is baked into our plans, but obviously, we do want to call out that we are encouraged with the momentum, but we don't want to, say we're out of the woods just yet until we see a couple of quarters of this positive momentum continuing. But we are encouraged to see even in, the month of April, some of that momentum continuing. I think in terms of the macroeconomics, obviously everything is very challenging, and we're very, fortunate that our government is handling the matter in the best way possible. In terms of having availability on the ground of the LPG, in terms of our stores functioning, I think we've taken some good steps to ensure that only less than 10% of our restaurants are impacted by this disruption. A lot of it is due to a lot of forward-thinking decisions that we made many years ago when we fitted out our kitchens with electric fryers, for example. And I think largely in terms of managing the situation on the ground, we have a lot of experience doing that. So I'm quite encouraged to say while there was disruption in the last quarter, it isn't meaningful enough in terms of its impact on our momentum.
Right. And the reason why I ask you for more color on the year going forward is also because a few years ago you had given the Vision 2027. And I'm stacking those numbers against where you stand right now. The revenue target was 4,000 to 4,500 crores. You're standing at around 26, 25 crores right now. 18 to 20% EBITDA margins. Your exit EBITDA margins have been closer to 13%. 580 to 630 total stores. Now you are at around 478. So I just wanted to understand whether you'll be able to, reach those targets that were earlier projected, because it looks like a bit of a stretch.
So we are quite confident with the momentum that we're seeing that we can make up some of this lag over the last couple of years. I think in terms of new store additions, for example, we have upped the ante, where this year we're talking about 60 plus restaurants. And in the following year, if all things go well, we'll continue to refine that number. So I think in terms of the total goal that we've set out, which is 4,000 to 4,500 crores, with a mix of our comp sales as well as our new store additions, we should be closer to the lower end of that number. What I will share is that we will share more color closer towards the beginning of the next financial year in order to explain the accuracy at which we will achieve our goals.
All right. Just a final question before we let you go is on your margins, obviously, but also some of the things that drive your margins, right? There is delivery versus dine-in. Then there is McCafe, which is revenue and margin accretive. And add to that, you are looking to increase your salience coming in from South as against West. I remember your target being 50-50 at some point for both South and West. So if you could give us a sense on how dine-in versus delivery has performed in the fourth quarter, how is that likely to do? What margins are you targeting next year? How is South versus West doing for you as well?
Sure. So I think, 3 key levers for us in the coming year. Number one is to make sure that our brand and our restaurants associate with everyday value, both in terms of the products and the price, as well as the experience that we offer. So I think that's number one. And I think that strategy remains sacrosanct for both West and South across channels. I think that we've already seen momentum there. So I can say quite confidently that should allow us to drive the positive same-store sales growth that I'm talking about in terms of our targets. Number two, in terms of McCafe, we've launched a subscription program, again, where we're seeing a lot of positive traction and momentum, which will allow us to drive our goal to make McCafe a daily habit, an everyday habit, which will again allow us to drive repeat visits as well as the margins that we aspire for. And lastly, there's digital and delivery, where we've deployed a very strong initiative along or across our own channel, as we call it, which is our Mick Delivery. And we're ensuring that, again, across the levers of operations, experience, as well as, the products and the menu that we offer, we're making sure that customers get extreme delight. And I think with a combination of these levers, we are gunning for that mid to high single digit SSSG, along with margins that reflect our Vision 2027, moving closer towards that.
All right. And there are no input cost worries or cost of delivery increasing worries or competitive intensity that keeps you on the tenterhooks when it comes to margins and incremental sales, right?
So, we've been doing this for a very long time. Obviously, the macroeconomic volatility is at its highest over the last few years, but I think we've developed a good formula in terms of managing the input cost pressures as well as the inflationary environment that we witness. I do think that there will be obviously a substantial impact in terms of inflation over the next, say, 6 to 12 months. But I think as a company, we are very well equipped to manage that through our supply chain efficiencies, through our pricing, as well as through, how we play our product mix. So as a result of that, I still maintain that we are going to move towards the margins that we have committed for Vision 2027.
All right, standing by the 2027 targets and mid to high single-digit SSSG is what the management is targeted for this year, and the street likes that. The stock has moved to the high point of trade by about 2.5% from the lows of today's trading session, currently spiking as we speak. We take a short break, come back on the other side, more stock-specific action, more on the markets.
Well, Jio BlackRock has received a license from the IFSCA for setting up operations in GIFT City. The AMC has also received a license from SEBI to do so. My colleague Furkan caught up with Sid Swaminathan, the CEO at Jio BlackRock, and asked him about the upcoming product launches and the offerings that could be in the pipeline after receiving the license for GIFT City operations. Let's listen in to that conversation.
The AUM that we have right now, this is April, so just 10 months since we launched. Very, very happy with the overall level of AUM at this 18,500 crore mark. We still have a very strong institutional base, which is about 13 and a bit thousand crores, and then 5,000 crores of retail, and that to retail with our direct digital model. So we're very happy with the numbers so far. Now, in terms of targets, I've been asked this question before. I haven't yet set any, let's say, even medium to long-term targets yet, and I'll explain why. The business that we're building, is going to be a full-scale solutions provider for investments. We have only just started scratching the surface of what we want to build. So we are here. We have 14 mutual funds. We have a direct digital model. Over the next 3 months, we're going to be expanding pretty significantly. Some of that has already been kicked off. So we launched a model portfolios offering earlier this year, so in January. That's going really well. So this is for people who want to come to our website or app, and rather than buying a single fund, they can actually choose to buy a basket of funds which can fit their profiles. Now that's already up and running. Now we have up and coming international exposures through Gift City. So we are very, very pleased to share that yesterday we received our final license for setting up our entity in Gift City. And through that, we want to be offering international exposures to our investors here in India, as well as offering international investors access to Indian markets. So that's coming online. SIFs, which are kind of hot topic right now, is also something that we've been building towards. And we now have our first proposition that is very close to being ready for launch. And that's going to be in the hybrid category. And again, that's a completely new sector, new category for the market. We have an interesting proposition. And with that, we're also going to be opening up access to that fund beyond digital. So we're going through the physical channels as well for that. So that's a big kind of new area for us to explore. And then we have ETFs coming in probably the next 3 months. So with the volume of things that are coming online, we still don't set ourselves any kind of hard targets. Our approach up until now has been a test and learn approach. So we launch a few things, we see how the markets are reacting to our funds, to our strategies, to our distribution style, and then we grow and evolve. So the short answer is no immediate targets, very happy with the start, very excited about what's coming forward.
There are a lot of things planned out in next 3 months. One is SIF, if I'm not mistaken, another is Gift City. And what are the other things that you're planning to come out with in the next 3 months?
So ETFs. So ETFs are also in the plan. So again, we're working really, really hard towards getting all of those launched in this time frame, because it is a lot of work. With ETFs, we're going to really start with a focus really on commodities, so gold and silver. We feel that, again, not to beat around the same drum again and again, asset allocation. So one of the missing kind of offerings that we have right now from our range is commodity exposure. So we want to make sure that we are able to offer that as well. So that'll be the first kind of set of ETFs that we will look to launch. And then we will build upon that as well through time.
All right, with that, we'll wrap up on this edition of Chartbusters. The news, the Nifty is holding around that 24,200 mark, down by about 120 points. All the market action taken forward by the team of Trading Hour. Thank you for watching. Welcome. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu with me, Hormas Patakia and Ritu Singh. For the markets, 120 points lower on the Nifty. Mid-caps continue to outperform, but the advanced decline tells you it's absolutely split right down the middle. Hi, Ritu.
Hi, Hormaz. Yes, even Steven on the advanced decline ratio. But the India VIX, if you look at that, that spiked by almost 3%. So it remains quite volatile. The broader markets are doing better, but the large caps are under pressure. And the banking stocks, they're also seeing cuts. The Bank Nifty, trading down almost 500 points. Hormaz.
Well, indeed, and that's the kind of market that we've been in, and the bulls would like to defend this 24,200 level, at least end the week on a high. There are plenty of earnings reactions that we've been talking about all through the day, some on the good, some not so good. We'll talk about that over the next 60 minutes, but the first one, Dabur.
The first one, Dabur, slightly better than street expectations, but more importantly, the internals have been very strong. The home and personal care business actually grew by about 17%, and the management is quite upbeat on growth out there, and which explains why the stock is marginally higher as well. We do have with us Mohit Malhotra, who's the CEO of the company, who joins us to discuss this performance and more importantly, the outlook going ahead as well. Mohit, always a pleasure speaking with you. 6% volume growth is what you've done this quarter, but the internals seem fairly strong. So just a two-part question. One on the demand and revenue growth outlook that you have for FY27. And the second part on raw material, because inflation has, how has that played out in the first quarter? And what kind of price hikes have you taken? What's your margin prognosis?
Hi, Mangalam, thanks for having me. So I think the results have been pretty steady, and sequentially there's been an improvement in the demand situation as far as India business is concerned. And we expect demand situation to continue to be resilient and get better, both driven by urban and rural. Urban is steadily improving, and rural resilience is also continuing, and rural happens to be ahead of urban by around 300 to 400 basis points. So these two pivots of growth, both urban and rural for the demand. Between the category breakup, our HPC business continues to do very well on count of GST benefits on price, which structurally drives the HPC category, where 70% of the category, 70-80% of the category came under 5% ambit now. So therefore, that drives it. Plus, there will be some price increases because of the inflation which is hitting us, and volume growth also happens to be steady. So that's as far as demand is concerned. On inflation, yes, when we penciled the budget, we had penciled a flat inflation because it was coming on a base of 6% inflation of last year. But the first quarter, because of the Iran war, now the inflation is to a tune of 10% that we've seen. We've already taken a 4% price increase to mitigate that inflation. But going forward, I think there'll be another round of price increases which we'll have to take to mitigate the inflation impact, not to have any impact on the margins. So that's as far as inflation is concerned.
Right. You said that you will take another round of price hikes as well. So basically, just to get a little more color on, again, demand and margins itself, rural, the monsoon projections aren't very good. And with inflation hitting pockets of people, the GST benefits tend to get withered away as well. So in the very near future, is there any downside risk to demand out there? And if you could quantify your revenue and margin targets for FY27 for us.
See, the GST benefits will not wither away for at least 2 quarters to come, because the GST cuts actually happened in quarter 3, the impact was felt. So in near term, first 2 quarters, we will see price increases coming in, along with the GST benefits also flowing in. So I do not see any problem in the first 2 quarters. The quarter 3 is what we have to watch, and that depends upon the Iran war situation, which is very fluid and dynamic as we speak. So I think absolutely value growth is no problem. Demand should not be a problem. Now the mix between the volume and the price may vary, because price increases will come in, volumes will reduce, and the price increases will go up. So that's the variation that we will see. As far as inflation is concerned, I think we are bound to take up a little bit of price increase to mitigate that inflationary impact, not to impinge on the margins of the company.
But when, by what quantum are you looking to raise prices, Mohit? And that's one. And as a result of that, do you see any impact on demand going forward? If you could share more color on the urban-rural demand picture first, and then, of course, once this inflationary impact starts to set in, what kind of impact are you anticipating on the demand? Because the actual impact is still yet to be felt.
Yeah, so in terms of urban-rural demand, so the overall rural demand is pegged at around 11.4. That's the numbers that we actually see. That's 11.4 is the rural demand as we speak. I'm talking about the value numbers. And the urban demand is the range of around 7.9. Now, this gap happens to be roughly around 340 bip gap in which rural is firing ahead of urban. Now, the gap, as I was saying, has got reduced from 540 or 500 thereabouts in the previous quarter to now 340. Rural will continuously be checking for next many quarters ahead of urban, but urban is also increasing as we speak, driven by drivers of e-commerce and modern trade, which is growing both in double digits for us and I think also for the industry, and quick commerce actually driving it. So that's the color on the urban and rural going forward also, and this trajectory I think will continue. Now, what the canary in the coal mine is the war of Iran which has come in, which is driving and fueling the inflation. Because of inflation, price increase is coming in. Because of price increase, there will be a little depression in the volume growth. While the value will continue to be driven by price and the inflation, but the volume will be depressed a little bit. So the mix between volume and price will change. Volume will become lower, price will become higher, but absolute growth will not stem at least for a couple of quarters to come in.
So very quickly, Mohit, three numbers in light of all of this: volume growth in FY27, value growth, and the margin picture as a result of all of this.
So first of all, margins. We want to maintain the margins and increase the margins, and the inflationary pressures to be mitigated by price increases. So we will maintain the margins. We expect the growth in terms of volumes to be around mid to single digits, and 50% by volume and 50% by price. That is the broad color on how the outlook will be.
Mohit, got that. Quick word on Herjit Bhalla's appointment also as the India business CEO. Does that come with any strategic changes we should watch out for?
Not really. I think we've already made the strategic vision, and all the 7 pillars have been discussed and detailed out to the market also. So no strategic directional changes in the business. I think Herjit is coming in to strengthen the bandwidth in the India business, and that's the objective. But strategically, not many changes will happen.
Right, Mohit, thanks a lot for joining in and giving us your outlook on FY27. Short but insightful conversation. Obviously, the canary in the coal mine will be the impact on demand on account of price hikes, but you're confident of double-digit revenue growth, split equally between volume and price, with margins maintaining, if not improving, despite the raw material inflation. The street likes that. Stock up about 1.5%. More color on internals on another conversation. But for now, a lot of stocks moving around as we speak. Apollo Hospitals has moved to the high point of trade. Asian Paints doing well. A lot of the consumer staples actually spiking right now. Nestle, Tata Consumer ahead of its numbers, and a lot of the other numbers as well, which are expected today. So for all the buzzing stocks, let's go across to Hormaz, who's hopped across from the chair to the wall to tell us what's moving around. Hormaz.
The index has also been hopping around between gains and losses, at least from the highs to the lows. And now from the lows, it is seeing a bit of a recovery from those levels of around 24,150 odd. We are back above that 24,200 level, and we're moving higher towards the 24,250 mark. So the bulls definitely will end the week on a high, yes, because we need to close above 23,997 for a weekly gain. And unless something really dramatic happens, that seems unlikely as of now. So that's the index bit for now. There are plenty of earnings, stock-specific reactions that are taking place. Look at Sonata Software. That's up 8% after its results. The AI push that the stock is doing. Thermax is up over 10% as well. That's a double-digit gain that the stock has seen. And Biocon too doing well for itself. But the results from Sonata Software has had an impact on the entire mid-cap IT space. FirstSource reported results earlier this week. That's up 10%. Coforge is up 5%. These two reported results earlier this week. And as did Hexaware. All of them reported results during this period. They did not react significantly then. But look at Hexaware now is up 5%, of course, significantly below its issue price, which is well over 700 rupees. So take a look at the negative earnings reactions that we are seeing today. CCL Products is down 6%. Aditya Birla Lifestyle, yes, recovering from the lows of the day at the start of the session, was down over 10%. And Britannia too, no let up as of now, still down around 4%, among the top losers in the broader markets today. The newsmaker of the day, though, is Lenskart. And the stock has oscillated between gains and losses, fell as much as 2.5%, then gained as much as 2.5% as well. Now trading around 1% and a quarter lower after that 6,000 crore block deal that has taken place. And lastly, of course, the stocks at 52-week highs. Bharat Forge, after its results, did very well yesterday, extending those gains, as is Craftsman Automation, now heading towards the mark of 10,000. So another 10% added on Craftsman Automation. And Aurobindo Pharma too, having a very good day at the office, 2% higher on the stock. But of course, Lenskart is the stock of the morning. The stocks of the afternoon are going to be SBI and the other PSU banks that report results today.
Oh, absolutely. And those are expected later in the day. Big ones to watch out for. But that's the markets. Let's quickly also get you the macro setup as well as we go ahead in the show. You have the oil prices above 101, 102. And as a result, there's been some weakness in the rupee. But keep your eye out on the 10-year benchmark yields. Now, the bond markets today, it's an important day. We've seen about a 3 basis point increase on the back of what's happening in the macro markets. But, what the market will actually watch out for is an auction later today for about 34,000 crore rupees that the RBI will be conducting for the new 10-year benchmark. That coupon rate is set to be above 7% for the first time in 2 years. So that's the big cue that the bond markets will take. For now, it's a 3 basis point increase over yesterday's close. On that note, we'll slip into a short break. But up next, we'll focus more on the bond markets with Manisha Gupta in just a bit.
Hello and welcome to Bond Street. Joining us on the show today is Vishal Goenka, who's co-founder India Bonds. Vishal, hi, thank you so much for joining us here in CNBC studios. Let's start with the big picture. What really would you say is happening in India's bond market right now with the current scenario and, of course, in sense of growth, landscape, overall structure? Hit us with the numbers.
Manisha, thanks for having me here. It's very timely because the annual data for the bond market just got released by SEBI. So the bond market in India overall grew by another 10% last financial year. We are at 2.6 lakh crore size of the market. It's $2.74 trillion as of now. Very interestingly, the corporate bond market is 59 lakh crores and grew at about 12 to 13%, standing at 625 billion. One interesting data was the SDL, or the state development loans, actually grew by 15%. And Treasury bills, outstanding T-bills decreased. So, the steepening of the yield curve that we talk about is clearly evident in the data, where the massive issuance has happened in longer dated state development loans and lesser so in T-bills. So it continues to grow.
There also is a clear shift happening, as you said, to the bond market, through the debt market they're in. Traditionally, an institutional product now seems to be getting a lot of retail interest as well. Are we witnessing a real retailization of bond market, as it is coined?
No, absolutely. People have been talking about retailization, and people say deepening of the corporate bond market is a myth. I clearly debunk that. And there's data that we're going to see. The number of transactions in the secondary corporate bond market were flatlining at about 12 lakhs a year, 11.9 lakhs last financial year. In FY 25-26, they've gone to 28.4 lakhs. So 6 years, they've flatlined and have grown by 2.4x. So anybody who wants to deny that it's happening, the numbers say a different story. The second aspect is the trading volume in the secondary corporate bond market. So in FY 23-24, it was 13 lakh crores. 24-25, 17 lakh crores. And now it's gone to 22 lakh crores. So it's growing at 25% a year. And if you divide the volume by trades, utilization is happening. The average ticket size from 1.4 crores has gone down to 75 lakhs. So the story is in the numbers. It's not in conversations anymore.
And we do see a lot of push coming in from the regulators as well. The SEBI's recent consultation report proposes letting OBPPs offer overseas bond via GIFT IFSC. And how significant is that for Indian investors?
Firstly, I think we're truly blessed to have a very proactive regulator. We've been working in this online bond platform journey for the last 5 years, and every conversation is so welcoming, and ideas are actually thought of and accepted. This IFSC access for online bond platforms put asset classes on parity. There is a lot of talk these days, and the talk usually happens at lifetime highs of US equity markets, that Indian investors should invest in the US equity, dollar equity markets. So if we give access to US dollar bonds, then again, as an investor, I can diversify my dollar portfolio as well. What we talk about, in rupee, you should be diversified. You also have access. So I think it's a tremendous move. It's a discussion paper. And who better than online bond platforms? Because we are already making the tremendous moves in mass retail in India. And access to that IFSC and dollar bond offering for a common man is going to be really phenomenal. The second point they said was access to 54 EC capital gain bonds. Now, these will help infrastructure building in the country. These are issued by large public sector. And again, opening that to retail and having a proper regulation around that is only going to enable, which shows that the thought process is right to grow this market.
What structural shifts would you say that you are looking at within the corporate bond markets right now?
I think, so there's another chart, the composition of the bond market is now being driven by the private sector. So when we used to look at this, a composition of public sector-driven issuers and private sector, it was evenly 50-50, or even public sector was higher. Private sector now is 55% of the corporate bond market and is growing at a much faster pace. The total NBFC issuance is only at 30%. People say NBFCs issue a lot. They're only 30% of the market. The largest segment of the market is actually private companies who have access by 31%. So I think the composition of the corporate bond market being heavily led by public sector is changing now. And it is making a tremendous move for issuers. People who would rely on bank loans or large institutions for the capital needs of 200, 500 crore actually only have online bond platforms on the table now. So if you're an issuer looking for 200-300 crores, you call bond platforms and it's done, right? So the way underwriting, the way capital creation for corporate sector is happening is thanks to the retailization. Because as we say, people want to lend money to people who don't need the money. So the large corporates who everyone wants to lend to actually don't need the money. For capital creation, you need to lend to people who need the money and growing the economy.
With the kind of scenario that we're living in right now, what's your opinion on the Indian bond markets, given the fact that there's geopolitical tensions, rate cycle seems to be turning, rupees declining, there is crude prices surging higher, and there's a CAD stress as well?
So two things I want to highlight and take back into the history. When RBI did its last rate cut, it said it's front-loading the rate cuts, right? Which means that they want to impact on the economy almost immediately. what happened was an yield curve steepening, which is longer end rates became more expensive, right? So thinking what the next action might be. The second thing that happened this year, that the US forward market in January was betting on 3 interest rate cuts by the US Fed. As of last week, it's gone to 0, right? So we just had Powell who's gone away. So this whole war situation, the geopolitical situation, and its impact on the oil prices and the movement of the rupee, I think for RBI or for India, it's when and not if. That we will probably have a shallow rate hike cycle. You know, I was joking that the last time RBI moved mid-policy was a few years ago. The next policy is in June, but who knows what the development of the war situation is, because oil is going to remain at pretty elevated levels, even if the war shuts down because of the supply chain logistics. I think it's clearly going to hamper some growth aspects of the country. And I would call for RBI hiking rates as the next move and as imminent as possible.
All right, there you have it then. And finally then, how has the technology and OBPP framework improved access and changed the game for retail investors?
See, I always say that fixed income is the last bastion to be taken over by technology. I think technology has done 2 things. One is information dissemination. It's reaching out to masses, to lakhs of people. It's providing clarity of pricing and transparency. It's providing all documentation like rating reports, information memorandum, which are available on bond platforms like India Bonds. And the second thing is ease of access. You know, I talked to some of my CIO fixed income friends who haven't yet tried our app, and I'm like, you can buy a bond in 2 minutes, you know? And that simple message that it's your money, tech has enabled that for you. It's not rocket science, but make your money work, use technology, get yourself educated, and go and invest.
Welcome back. The one stock we're going to focus on for the next 15 minutes or so is an absolute blistering name. BSE Limited is what I'm talking about. It's flat today, but it's creating a record of sorts. 50% this year in terms of return, 50% in 2025. And of course, 2024 was an outstanding year with the stock going up 100%. So, I mean, go figure. Look at the CAGR in terms of what the stock has returned for investors. The numbers have matched up as well. So, for the latest quarter, that's the fourth quarter, numbers look very, very solid. We have the management with us, Mr. Sundaraman Ramamurthy, MD and CEO at BSE Limited. Sir, good morning. Great to have you with us here. Thanks very much for joining us. Prashant here.
Namaskar.
So as you continue to beat, you're raising expectations all around, so which you will have to meet. But that's I guess something which you'll be able to manage with the kind of growth you've shown. So let's just take it from the top, sir. Fourth quarter revenue, 85% growth year on year. Profits up 60%, almost 800 crores. Could you give us a sense of how much of this was on the back of what you would describe as, structural, here to stay market share gains?
See, first of all, I thank you for having me in the show. And second, I congratulate you for the tenacity of asking about market share in every time you have me on your studio. But my metrics will continue to be what they have always been. And we measure our success only in terms of those metrics, not in terms of market share in respect of equity derivatives, which I have always told. It has been a stupendous growth for me from 446 members in the beginning of the year to around 587 to 590 members, I must say, who are actively participating with us in equity derivatives. FPIs from 100 to 520, Colo racks from 300 to 500, monthly contract volumes 5 times going up, index futures 3 times growing up. Of course, it's on a small base. Our options premium growing up from 15,000, almost doubled in the last 1 year. These are some of the parameters that we look at it, and we are very proud of those type of growth, and that is where we will be working.
Those are, you've given us the recipe for the dish. The dish itself, of course, is. I'm coming back to market share for no other reason, but you would understand, right? I mean, that is what markets also look at pretty closely. So just give us a sense, sir. I believe, in terms of premium market share, you've moved up to about, you were 27% in Q3, actually under 27% in Q3, 27.5% in Q4, 34% in April. Just give us a sense of, what's the ambition, what are you looking at, and what has changed for you to be able to sort of, grow this way and gain this share?
So what has changed is a wonderful question, and what I am looking for is another wonderful question. Let me reply. What changed was, based on the market participants' requirement when we introduced this contract initially required sort of being told to the people as to what it is. Subsequently, what we found was there was no need for going and telling people, why don't you look at Sensex? People started automatically looking at. The software vendors came in and all people started pouring in to support this product. A significant and huge market support from all corners was what was the major thing, which made us to change our technology, improve our capacity, peripheral system changes, specific human resources needs being taken care of, and of course, actively talking to the FPIs to make them look at this product. All this changed, and because of this, we started doing whatever we are doing. What we are looking in for, as I say, always deepening and broadening. Now in this situation, the concentration is on monthly options volumes and more products. That is what we are looking for. We are making BankX sort of another product which we wanted to succeed. We are talking to a lot of people. It is showing some signs of success, initial success. We would like to work on it. Futures, we will work on it. And more indices on which monthly options and futures will be introduced is what we are looking for as a next path of growth.
And you've given me the segue for the other questions that I want to get to, which is longer dated options and futures, etc., which I'll just get to. Let me just close the loop on this one, on the options bit, sir. So transaction revenue is now about 84% of total revenue. Options alone are about 72%. And I'm assuming that is the reason why you want to kind of sort of widen the base as well from where you get your revenues going forward, right? I mean, don't want to be too concentrated in one segment.
Correct. No, it's a very valid point that you are making. you cannot have concentration anywhere in whether it is your earning or whether it is the market. Everywhere it has to be distributed. You are right. That is the reason why even within the product, we don't want to have concentration on the expiry days, which we have accomplished. From around 90% concentration on expiry day, today it is not even 40% of total weekly volumes traded on the expiry day. Same way, we want to have more monthly and more products, because the market also should not be just focusing on only one product. It has to have variety of product to take care of different needs at different points of time and different flavors of the market.
Got it. Got it. Will you allow me to just get that ambition on the option side out of the way, if I can, if I may? From where you are in terms of the share of the market in options, I mean, you look to expand other, of course, you'd want to grow here as well, and I'll get to the other segments in a bit. But just ambition in terms of share from here, sir?
Ambition in terms here, honestly, it is not again in terms of market share. Our ambition is we should have at least 800 FPIs with us, at least 700 brokers with us, and we should increase the client base. Today, we are hardly having 3.5 lakh clients regularly trading with us. It should go much higher up, because if you look at the total demography, it is not that small number which can work. It has to grow up. So that is what our ambition is.
Okay, good. So let's get to the longer dated options, right? I mean, you want to grow. The share right now is, I think, about 6-7%. So how will it happen? I mean, how will you kind of sort of, because that will require more institutional hedging-led activity, right?
Absolutely.
Yeah.
Very, very valid point you're asking. It requires institutional-led longer-term hedging activity. Some of the people who are currently in the marketplace, who are already doing this type of trading in other places, who are not yet there in BSE, has to come into BSE. Further, there should be some minimum liquidity in other than current week's expiry, which is happening. But if you look at it, the liquidity is still restricted only to the current month and next month maximum. We should not be just having only this month and next month. We should have the third month, fourth month, up to at least 1 year the product should trade. So this is one thing, therefore, where we go and represent to the market participants should look into it and have some people who are ready to be on both sides of the market and provide liquidity for liquidity takers. That is what we are working on. And bringing in such of those institutions who generally look into the longer term part of the hedging. Apart from that, we also feel that the entire structure of margining in terms of longer term options need to be relooked in. The margins are sometimes detrimental for people to take a longer term position because it becomes very costly if you trade a longer term option. So we have submitted our viewpoints as to what all could be done to make the market move more towards longer term options than towards the shorter end of it. I'm sure the regulators will be looking at it, considering it as appropriate as it could be in a due process. And we feel that will bring in, not necessarily only for BSE, for the overall market, more interest in longer term products.
Got that. Mr. Ramurthy, on the future side, right? The general feedback I get when I speak to large traders, etc., is that index futures trading has kind of gone down quite a bit for a variety of reasons. Taxation perhaps is one, STT high. I mean, I guess the break-even has gone up on a single trade to be able to sort of, what's the plan here? If you can give us a sense of, since the STT hike from the 1st of April, what kind of impact have you seen?
I will answer it in parts, Prashantji. One is, no, I'm not able to see any impact at this point of time because of the STT hike for only one reason. In a steady state of affairs, you can talk about an impact. And also with some meaningful good volumes as the base, you can see as an impact. In respect of both, no, today the answer is no for BSE. The steady state of affairs is not there. The global volatility is so heightened. We are not able to see the impact of one parameter alone. And secondly, the base for BSE is small. It is, we have to understand, it is just a 3-year history, and in this, this futures is even shorter a history. Because of that, BSE's base is growing. That does not mean the market in entirety is growing. Intuitively, I also get to see and understand that the futures market is somewhat tepid at this time, where compared to what sort of steady at this state at this point of time compared to what the options is happening there. That may be because of variety of reasons, as more people may be synthesizing futures that may be cheaper, or what it is, we wouldn't know. But certainly the impact of SGT and other things, we have to wait and watch.
Yeah. No, fair enough. So Star MF, right? I think it grew about 13% on a quarter-on-quarter basis, right? So what's the thought process here? I'm talking about to sort of, grow the non-transaction side of business.
No, I totally appreciate it. The Star MF today, what we find is, the total unique investors in the market itself is 6 crores. I think we are rejoicing a lot about a very small growth at this point of time. I feel sky is the limit. If there is only 6 crore unique folios in the country, and if you are having a population of whatever size we have with a median age of 29, I don't think there are a lot of, I think there are a lot of people who have not yet gotten into the mutual fund industry. In my opinion, if somebody wants to enter into the capital market, they should, because they should some way or the other contribute to the capital formation of this country and economic development. For a first newcomer, it will be better for him to enter through a mutual fund because somebody is doing a portfolio risk analysis for him. And it will be better if he comes through a large cap fund because that will be subject to lesser impact of growing volatility. I think more people will be joining in. The financial awareness is increasing. AMFI is doing a good job. We are doing a good job. SEBI is doing a good job in propagating safer investments. I think if more and more people come in, and this is just the beginning, I feel, mutual fund and Star MF have a long future, is my opinion.
Well, on that sort of optimistic, positive tone, tenor, and thought process, we'll leave it for today. Good luck as you continue to execute. As I began by saying, I think investors who've invested in BSE, of course, have rejoiced over the last many years. And we wish you all the best of luck to you and your team.
Thank you so much.
Okay, that is Mr. Ramamurthy at the Bombay Stock Exchange at BSE Limited with some perspective on what the thought process is about various segments. Of course, there is the weekly options, short-term options, but there is, of course, focus on longer-dated options. There's focus on building out futures, the cash segment, and the non-transaction-related businesses as well. 39.46. Today, as I've been saying in the morning as well, 500 rupee surge in about 10 days coming into the result, so it's taking it a bit easy. Take a break. We're back. More results on the other side.
Welcome back. Let's continue to focus on earnings that have come in. We had shares of Karur Vysya Bank that were down in trade today, almost 3.5%+. Despite posting a decent set of fourth quarter numbers. So let's bring in Ramesh Babu B, the MD and CEO of Karur Vysya Bank, to discuss the performance and the outlook for the quarters ahead. Mr. Babu, thanks very much for being here. Let's start with your, credit growth numbers as well. They've been pretty decent. And for FY27, you've told us, you'll continue in this kind of a range, 1 or 2% above what the industry is seeing. Specifically, what will drive the kind of growth you're expecting? And if you could also give us a sense on what's happening with your CASA, the decline that we've seen in the quarter.
Good morning, Mr. Ritu. First of all, the year passed through. It is a very satisfying year for the bank because we could get the maximum, highest profit in the 110 years. And all three parameters which we track, business growth, asset quality, and profitability, all we are above the guidance, and we could tick all the boxes despite making sufficient provision for the impending West Asia war. So coming to the question what you asked about the credit growth, agreed. So last 3 years back, we have changed the business model of the bank. Earlier, 35 to 40% used to be the corporate. And later we realized saying that it is better we shift the corporate focus to MSME as well as commercial, what we call. So now if you look at it, corporate constitutes 14% and 86% comes from the RAM segment. This RAM segment, it varies actually. Out of that, the highest share comes from our commercial, which is MSME, 35%. And corporate, retail as well as 27-26% that way, and rest is agriculture. So these three are fungible. So depending upon the product and the opportunity, what all are available, we'll be going ahead. There's a reason the guidance given by us for the next year would be, it is around 80-20, 80 can be RAM, around 20, because we are seeing some sort of a green shoots in the corporate and good opportunities we are able to see. So where it makes sense economically as far as the pricing is concerned, we want to go for that. We found out few sectors and geographies where we can do that. There's the reason our focus will still continue to be on the RAM segment, particularly on the retail and MSME and agriculture. These will continue.
Okay. Also, the dip in CASA, whether you see any improvement going ahead, the measures you're putting in place.
No, absolutely. If you look at it, last year, our CASA growth was only 1%. That is 2024-25. This year, it is 12%. But it is disproportionate and not commensurate with the growth in the time deposits. Because what we did is we front-loaded the deposit growth in the first quarter, particularly the retail time deposits. When the rates were fine, we did it. So that is the reason, if you look at it, CASA looks subdued, whereas SA also has gone very well. But we need to do some more work on the CASA so that to make it back to 30%, which we used to have a 33% at a point of time. So consciously what we thought, if we take the retail, at least it will support the growth. One more point I'll tell you. Why we have gone for the RTD is, even at this cost of 5.41% of the deposit cost, we are able to get a decent margin. If you can look at our NIM this time, it is 4.25. Suppose if you focus only on the CASA, if you are not growing and we wait for the opportunity, then you may be missing the total opportunity. When you are able to maintain 4.25 and SMA 30 plus at 0.17, then we thought, so money has no color, either it can be CASA or TD. If you are able to make money, raise that.
Mr. Babu, thank you for joining in today, sir. You've mentioned earlier that the ECL implementation impact is likely to be minimal for you because you have adequate provisions for the same. But if you could quantify that for us, the likely impact that you say, as minimal as it may be, once these norms are implemented, what is the kind of impact that you are anticipating despite all the provisions that you've made?
No, in fact, still we are working on that because very recently the final guidelines have come. But if you can look at it, the various provisions what we have made all along, in the recent quarter also 163 crores we made a provision for the West Asia. The war is not going to be permanent. Maybe 3 months or 6 months, once that is over and all, you can reverse that. So we also guided saying that our total provisioning, what we have kept is 1.7% of the book. So which will sufficiently take care of the ECL. And another thing also, if you keep in mind, our SMA numbers for the last 3 years are absolutely under control. If the stress is so low, naturally the need for ECL also will be down. Third point is, suppose if it is 5 years back, our profit used to be around 200 to 300 crores. At that time, this sort of hit comes up and all. Managing this in an year will be very difficult. But whereas with the 2,500 crores profit now, here and there something comes up and all, we'll be able to manage. But somehow internally what we felt is back of the envelope working when we did. So we may not have much hit on account of ECL with the various factors what I said.
Mr. Babu, you mentioned about the focus areas that you're going to have on the road ahead, but this corporate credit substitution has suddenly picked up pace over the last few quarters. And how large a business can this become going forward?
No, I'll tell you, it's not that straight away we are going into the market and picking up. many of our existing customers. So we are trying to shift them from the working capital towards that route. The advantage will be you need not go for the ALM. Otherwise, the working capital day and night you must go on managing. And second thing, pricing also. Suppose some other banker is giving a finest pricing, they'll come to you and straight away say that you reduce it. Lot of volatility is there. So rather, if you lock in your rates in the corporate bonds, at least 2 years or 1.5 years, whatever it is, it will be useful for them as well as for us. That is the reason what we thought we can go for that. Another advantage will be you need not have these PSL implications there, priority sector, because if you go for the normal working capital route, you may have to book that there. Keeping all these things in mind, yield-wise also we are getting better there. So that's why we thought let us go there. I'm not saying we are going to go aggressively there. To the extent possible, majority of our existing customer, if a good opportunity comes up there in the corporate, we will go for that. That's why it's in a moderated approach, we'll go for the substitutes too.
All right, Mr. Babu, we leave it at that. Thanks very much for joining in, and we hope to have you back in the next quarter to carry forward this discussion. Let's slip into a short break on that note, but up next, we'll get you more on the markets in just a bit.
Welcome back. Continuing with corporate conversations, and the management on our show now is Pidilite, and the stock is doing well today after a very, very strong fourth quarter. Mangalam also caught up with the managing director Sudhanshu Vats and discussed the factors that led to this strong performance in the quarter gone by and the way forward as well.
One thing which we want to do is to keep lifting the growth. So I think, you know, and I'm very happy that we are on that journey now. I think what has happened is that our growth businesses performed even better, Mangalam. So when I say growth businesses, I'm talking about ROF, I'm talking about Dr. Fixit. So they performed even better. The momentum continued, but they performed even better. And secondly, our core businesses, specifically our big brand Fevicol, also delivered well. I personally feel that I think the quarter that went by, overall for India, there was a robust demand environment that was beginning to come in. I think it will sustain. Let's see how the Iran war plays out as we go forward. But my view is that the demand situation was better. So there was that tailwind a little bit for us as well. And on top of that, I think the work which we've been doing all around on innovation, on field marketing, and also on impact properties helped us to continue to inch up our shares along with the demand.
Could you then give us a sense of the breakdown of the quarter?
Yes.
So Jan, Feb, how fast did they grow and what was the impact of the crisis in the month of March?
We had one of the finest Jan Febs. Actually, we had an outstanding Feb month. As you know in Pidilite...
Over 20-25% in Feb?
Yeah, well, very strong Feb month. As you know in Pidilite, we don't sort of, you know, we don't push in March. That's not the philosophy we follow in the company. So while the Iran war started in the month of March, I think the demand, domestic demand, I must say, up until now sustained. Based on the raw material supplies and the raw material inflation, we are basically taking calibrated price rises as we go forward, Mangalam. I think so that's the piece which is happening. But from a demand perspective, domestic demand, as I speak to you, is sustaining.
Even in the first quarter?
So whatever we've seen of April, I can see that domestic demand is sustaining.
All right, let's address the raw material price then. You know, when we exited the last quarter, it was close to around $850 for VAM. Now that's gone all the way up to $1,500+. So that's near doubling of raw material prices.
Yes.
How much have you passed on as a price hike so far, and what happens to your margins from here on?
That's a great question, Mangalam. I think, first of all, by the way, VAM is now touching $1,800.
$1,800, wow.
So I think VAM has really gone up. But if you look at our entire basket of raw materials, I think there has been an inflation of anywhere between 40% upwards. So I think a weighted average inflation in our raw material basket of about 50% is something which we are seeing. So we've taken first price increase in early April, early to mid-April. About 4-5%. We've taken another one in early May, as I speak to you, another 5 to 7%. And I think we will continue to take calibrated price increases as we go forward, making sure that we do what is right from a demand perspective as well, because we want growth and demand to sustain. For us, growth is paramount. We stay steadfast on the corridor of 20 to 24. There will be some depression, to be honest with you, because we are not covering for margin. We are first covering for costs. And the situation is also very volatile, Mangalam. I'll be honest with you. One day you feel the war is now ending, and last evening you thought that it's now done. There is some memo being signed. Today morning you get up, you see there's again some firing happening. So it's so volatile that you got to keep, you got to ensure that you are doing things day by day and month by month.
I take your point on that, because we had a defense specialist join us on our channel, and they said that we're moving away from a just-in-time inventory to a just-in-case inventory, because the world is moving just in case in any way. But, you know, just doing some calculations here, 50% of an inflation in your raw material, which is about 50% of your cost of sales, close to 60% of your cost of sales, and you typically pass on 75% in terms of a price hike on that, right? And you've taken 10% already, which implies that around 7 to 10% is still pending in terms of price hike?
So it will depend from category to category again, Mangalam. I think so there are certain categories which have not got affected. There are certain categories which have got affected quite a lot. So for instance, if you were to take the case of VAM and to take the case of Fevicol, there we've taken price increases to the extent of 12 to 15%.
Got it.
So I think a bulk of the price increase has been taken, but we will keep on calibrating and taking the price increases as we go forward.
So the next year, your double-digit target stays, but the mix between volume and value shifts, right? Or do you have similar volume growth and add to that some pricing growth, which implies that you could be growing in teens?
So a lot of it is up in the air, I'll be very honest with you. I think the inflation which is coming in our sector, but in general, so if you were to go to the market today, Mangalam, pipes have gone up by 30%. Paints have gone up by about 15%. Our own price increase is somewhere in between the two. So if you look at the entire home improvement sector, there is considerable price increase which has happened.
And labor availability is a problem.
So
then how do you
so therefore,
still
what
stay
is
optimistic
the
on
impact,
demand?
What is the impact of this on demand? And
Exactly.
is there going to be a demand compression? Is something which needs to be seen. But what I'm telling you is what I know today. As of now, I'm seeing demand sustaining. I think there are two ifs here, Mangalam, if you ask me. I think the first starting if is, how long does the conflict continue further? So if the conflict ends in, let's say, a month or so, or at least pauses, which is, I think there is a very good chance of it, Mangalam, if you ask me personally. I think there is, both the sides, it is in their interest to now sort of at least pause it, get into a longer term negotiation. If that happens, then I think demand could sustain. If demand sustains, then our double-digit UVG continues. I think so. We continue to remain very focused on execution, and we are confident of our disciplined execution.
All right, double-digit UVG with some price increases, so closer to late teens sort of growth. If double-digit UVG continues, even if that does not continue, mid-teens to late teens revenue growth, with margins anywhere between 20 to 24%. This time closer to 20 than 24, as we had spoken earlier, right?
Yes.
All right, so Anshu, just a final question. Haisha, it's been so long for you to have been doing this pilot. I'm just trying to understand what the pilot is all about, and by when do you actually, give a bigger announcement on that?
No, that's a great question. So I think on Haisha, and this has been asked all the time, Mangalam, I think on Haisha, what I would say is that, see, basically we were there in the 5 southern states. We've gone into eastern states as well. So therefore in West Bengal and in Bihar. I think what we are doing is, so we are seeing very good traction now, if I could break up, in our rural areas, which is the smaller, very small towns or urban areas. We are still not seeing traction in the slightly bigger towns, what we call small town India. Right. So I think the challenge which we are basically trying to grapple internally is what is that unique element of business model, or what is that unique signature of Pidilite that we'll bring that will give us the right to win. And unfortunately, we are still working on that, and that's the news I have.
That's Pidilite on their stellar fourth quarter numbers. But we'll do a short break here. What we'll do is when we return, we'll get you a bit more on the markets and what more to expect after this short break. Welcome back. Now, all eyes are going to be on State Bank of India, which is set to report its fourth quarter numbers today. Let's go across to Ananya, who's got us a poll on what the street is penciling in. Ananya.
Street expectations from SBI's Q4 results remain broadly stable. The market is expecting a stable quarter for them. Now, NII is expected to grow at 7 to 9% year-on-year, while PAT growth is likely to come in at around 4 to 8%, although profits may moderate sequentially because treasury gains are expected to be lower than the previous quarter. Now, loan growth is expected to remain strongly at nearly 15%. Margins are likely to remain broadly stable at around 2.9%, despite pressure from repo rate transmission and elevated funding costs. Now, asset quality is expected to remain a key positive. Asset quality in Q4 stood at GNPA at 1.57% and an NPA at 0.39%, while credit costs were down at 0.4%. Now, in Q4, slippages and credit costs are likely to remain benign, and recoveries continue to remain healthy. Now, the main highlight will be the management commentary for FY27 on growth outlook, margin trajectory, and the impact of geopolitical tensions on MSME and asset quality.
Ananya, thank you for summarizing that for us. All eyes on India's largest lender. Numbers to be out in just a few minutes from now. Well, fluctuating between gains and losses is SBI. Not a significant price move that you've seen. Two other PSU banks reporting results along with SBI. Bank of Baroda is the other one, and Bank of India is the third one. So the entire three large PSU banks reporting results today. Bank of Baroda 0.75% lower as we speak, and Bank of India has now moved to the lows of the day, 1% lower on that stock as well. And a couple of other names just before we sum up. Thermax is the one that's still holding on to gains of around 10%, as we speak. So good going for that stock. A positive earnings reactions, now 12.5% higher on Thermax, the biggest single day gain that the stock has seen in the last 4 years. Take a leave on this edition of Trading Hour from Mangalam, Ritu and me. Thank you for watching. Halftime report on the other side.
Stocks slip after US-Iran face-off in the Strait of Hormuz. Large caps see the brunt of the selling, even as mid-caps stay resilient. Energy, metals and financials are the big drags, even as IT and healthcare eke out gains.
Pidilite perks up on stronger than expected volume growth, even as it tempers margin expectations going forward, but Britannia slides after its sales growing slower than street estimates.
A bunch of prominent investors exit Lenskart via trades worth over 5,800 crores as the IPO lock-in ends. Nearly 60% of the company's equity worth around 50,000 crores gets freed up for trade today.
BSE posts heady Q2 turnover growth in Q4 FY26, driving up transaction charges and its profit. MD and CEO of the company tells CNBC TV 18 that the focus is on monthly option volumes and more products as the next path of growth.
The crucial meeting of the board of Tata Trust has been deferred to May 16th. Sources tell CNBC TV 18 the board was to deliberate on listing Tata Sons and recasting the board of the holding company of the Tata Group.
Hello and welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra, with me Sonal Bhutra and Vinny Motiwala. Well, it is turning out to be a day where we are seeing profit bookings. So we're down around 0.5% currently for the Nifty and the Bank Nifty, which is under pressure today. So down around 0.8%. The Bank Nifty in particular is going to be in focus because we have two big numbers coming out from the banking space. SBI, State Bank of India, which is the largest bank in the country, along with Bank of Baroda. So both the stocks are lower going into its numbers. But if you just look at it on a year-to-date basis, the Bank Nifty is down around 6.7%. And as compared to that, we have SBI, which is outperformed on a year-to-date basis, holding with a gain of around 11%. But Bank of Baroda is the opposite, which has lost around 9% of its market cap this year. So let's see what they deliver. But as of now, the street is just about a bit subdued going into these numbers.
It is. And, Bank Nifty has generally been weaker than the Nifty, the benchmark that is. And that is something that we've been seeing in the moves as well. Today as well, it is underperforming the benchmark, 0.9% higher, lower, my bad. But we do have the Nifty IT, which continues to do well. So that one is the top gainer, 0.6%. We do have the small cap index, which is also in focus. That is in the green, despite the mid cap part of the market not doing so well. So watching out for a lot of stock-specific moves, earnings coming in thick and fast, and this is something that will be on our radar, and a lot of conversations lined up on the show today as well, Vinny.
Absolutely, a whole host of conversations lined up on the show, a whole host of individual stock names that we'll take you all through as well. And let me take you all through the lineup for the show for you all that we have set up for you all. We'll connect with the top management of Lupin to discuss their Q4 numbers. Later on, also, we'll have the top management of Biocon to discuss their Q4 numbers and the outlook going forward as well. But first up, let's go across to Vivek, who's here to take us through which are the stocks that are moving around in the trading session this afternoon. Good afternoon, Vivek.
Good afternoon. So much news flow, so many results, so much that we are digesting going into the weekend. Well, first on the list of top gainers, of course, has to be Pidilite. Very strong set of numbers. Volumes well above the street estimate. Stocks higher by almost 2.5%. Cooled off a little bit. Biocon, very limited set of estimates that the street was working with, but it appears to be a good quarter. The company's managed to end off FY26 on a strong note, 2% higher for Biocon. Nuvama, this particular name stands out as far as the F&O pack is concerned. On the NSE 500 top gainer today, very good volumes. So that particular stock, Nuvama, one of almost 11% higher now. Dabur, again, this particular name has been volatile, but going into the results was quite strong. And again, today higher by 4%. The company has gone ahead and raised the top line growth guidance for FY27. That is something that the street clearly likes. On the other hand, quite a few laggards. While Dabur was good, Britannia had it very rough as far as Q4 was concerned. A lot of input cost inflation, something that went ahead and impacted the performance, and all-round miss 5% lower. Lupin, despite what was essentially a very strong set of numbers, Lupin has actually seen quite a bit of selling pressure emerge, down almost 2.5%. Cement names, especially look at a name like Dalmia Bharat, down almost 5%. Ultratech as well as Shree, all of these names seeing quite a bit of selling today. And some of the capital goods names, while Thermax is doing very well, some of the other names like ABB that will report results later today, Siemens as well as L&T, all of these names under quite a bit of pressure on this Friday afternoon.
Okay, yes, absolutely. Well, thanks, Vivek, for that. So that's what's taking place in a whole host of stocks. But let's narrow it down and tell you about which are the big specific stocks which are moving. This is our movers and shakers segment, where we do track a whole host of stocks which are buzzing in trade. Vinny's going to tell us about Thermax and why that stock is in focus post its conference call. Vinny.
Hi. So in Thermax specifically, if you look at it, the stock is trading at the day's highest point. This is the single biggest intraday gain that we've seen for the stock in the last couple of years, at least for the company. Now, good numbers that came in from the company. Strong performance there, beat and ahead of what the street was expecting, what we were expecting at CNBC as well. Revenue growth of 12-13%. Margins 10.9% versus a 9.8%. So improvement in margins. Order inflows, sharp uptick there as well, right? Doubling in terms of orders. 4,490 crores is what the order inflow stood at for Q4. Order book very strong of 13,600 crores. So visibility in terms of revenue is also improving for the company. Overall, they've seen a good performance in the industrial production segment, industrial infra segment, which was facing a bit of a muted performance on the margin front. That started seeing an improvement as well. So that's a positive sign as well. Now, there was a con call that took place for the company as well. And in the con call also, we have some interesting highlights. They said that for the industrial product side, the order pipeline, where they interestingly seeing good demand or traction come from, is pharma, chemicals, FMCG over here. Now, on a data center front, yes, data center is an opportunity for them on 2 points. One is the cooling, as well as another one is on the boiler side. So that is a big opportunity for them. They have some orders coming in on that front as well. And maybe we could see an order win coming in soon enough, maybe in Q1, Q2, from the global front on the data center opportunity. Apart from that, when asked on the Middle East and West Asia conflict, they said that yes, that is a concern. They are keeping an eye out on that. Q1, they could manage it because the inventory was already there with the companies. A Q4. They managed because they had inventory. But now Q1 onwards, maybe that's a key monitorable that they'll have to keep an eye out on. Q2, Q3, that will be a concern that they'll watch out for in terms of challenges of raw material prices as well. And other opportunity that they did highlight on was coal gasification. If the government policy supports them, then that is something they would be looking at. And they already have bio-CNG that they are focusing on. So that is a positive over there as well. So Middle East is a key monitorable and a concern and a challenge that would come in. But apart from that, a lot of opportunities that come in for them as well. But Ekta, you're going to talk to us about Thyrocare. That one is also buzzing in trade.
Well, yes, definitely on the back of its numbers. So the revenue was up around 19% on a year-on-year basis. Margins came in at around 33.5% versus 30.8% on a year-on-year basis. And we had profit, which came in at around 48.7 crores, which in fact was versus 28 crores same time 21.6 crores same time last quarter and 28 crores last quarter. So it's an expansion year-on-year as well as sequentially. Key highlights from Q4, the complaints per million tests were down 34% year-on-year. The pathology, which is basically their bread and butter, franchise revenue within that was up 21%. Partnerships was up around 23%. On an FY26 basis also, revenue was up 20%. Margins came in at 31.6% and the profit was 162 odd crores. Now, in terms of the franchise revenue, it was up 18% for FY26 and partnerships was up around 32 odd percent. Going forward, the company is looking to go deeper into India. They're focused on a test menu and expanding their test menu rather, strengthening their existing franchises and expanding partnerships towards insurance and ECG and strengthening their presence in Tanzania as well. So that's Thyrocare. But interestingly, a lot of the other diagnostic stocks are seeing good gains. Vijaya Diagnostics, which also reported numbers, is up 4%. And we have Metropolis, which is still to report its numbers, which is doing well. So the street is anticipating maybe that rub-off of good numbers coming through for Metropolis as well. That stock up around 6 to 7%. But Sonal, what are we looking at?
We have too many stocks to talk about today, so let's get going. Vesuvius is the other one on our radar. Nigel is joining us now. Nigel, not such a good set.
Well, that's right. You know, Vesuvius has had a big run in the last few years, and the last 1 year has gone through a period of consolidation. Remember, if you compare it with its peer set, this trades at a relatively higher valuation in comparison to the other ones like an IFGL Refractories, or even if you look at RHI Magnesita. Now, the reason the street is disappointed is because the revenue growth is only 3 to around 4%. Remember, they've added capacity, so the street is a little bit baffled about why have they not grown as much. Is there some excess capacity? Is there some market share loss? Well, we'll have to find out, because otherwise they were growing at a pace that was higher than the industry. So reasons for that is something that you're waiting by for. Now, when you don't have operating leverage playing out, the EBITDA number has grown by only around 1% approximately. And that's why margins on a sequential basis are more or less flattish, but on a year-on-year basis, they have come in down. Other expenditure is up more than 10%, and you have employee costs that it's up more than 10%. So the lack of operating leverage, higher input costs have caused margins to come up. But I think the bigger disappointment is in terms of the top line growth of only around 4%. We'll wait by for clarity. But when you have a stock that runs so fast, in the last few years, and valuation-wise, it's relatively more expensive, the street has, no margin for error out there. Explains why the stock has come in for some profit taking, though it had recovered a little bit from the lows of the day. Back to you.
Okay, all right. Thank you so much for joining us with all those details, Nigel. So those are some stocks in our movers and shakers segment. And of course, we are awaiting SBI results as well. We'll slip into a short break for now. Up next, we'll get chatting with the top management of Lupin to discuss their Q4 numbers. Stay tuned for that conversation. Welcome back. You're still tuned into Halftime Report at the 24,180 mark on the Nifty as we speak, and a lot of moving parts in the markets. Of course, it's the banking pack which continues to put pressure on the Nifty as we speak. That's a big loser in trade today. In fact, the entire financial space is not doing so well, and SBI's numbers will be the key to watch as far as the moves on the Bank Nifty is concerned. While we are talking about some of the sectoral movers, watch out for, look at that, SBI actually is at the day's low. There's a sudden fall from the highs of the day. Even Bank of Baroda reports numbers today. So let's do a stock check there as well. What kind of moves we are seeing there. So SBI at the day's low as we speak. Bank of Baroda should be the other one that should come up for, absolutely flat with some negative bias. So big moves on SBI ahead of earnings. As far as the small cap index is concerned, that's the one which is in the green when mid caps are sulking in trade. So watch out for these moves that we are seeing in the Nifty as we speak. But it's time for an earnings conversation now. Lupin reported a good fourth quarter. The company's revenue saw a 32% uptick, while profit also expanded on a YOY basis. Ekta spoke to the management on the quarter gone by and started off by asking about their margins. Listen into a slice of that conversation.
It really is a function of the kind of products that you would continue to have. And, when you come into the American market, you'd, of course, talk about the fact that, tolvaptan still doesn't have any competition. So to that extent, he still has a good run. Mirabegron, of course, we've had a settlement. There are talks about somebody else entering at some point of time. So to the extent there could be some, negative headwinds, insofar as America is concerned. But overall, because of the overall buoyancy that we still continue to do well in other markets, and of course the tailwinds in terms, the headwinds in terms of cost. Air freights have gone up by about 60%. Ocean freighting has gone up by about 15%. All that would also kind of have to be figured in. So we are conscious of the fact that, these things would happen. So we are saying that the overall margins could be maintained around the 25% mark for the full year.
Oh, okay. So you are going to be lower than what you recorded in FY26. 25% is what you're working with.
Yeah, around that because of the various, issues that I just spoke about.
Yeah. All right. Well, I'm just going to speak to Vinita now about the US business because that recorded its highest sales ever. And the momentum continued from the previous quarter. We do understand that key drugs such as Spiriva generic as well as tolvaptan have done extremely well for you this quarter. Can you just detail the US performance for us, Vinita?
Yeah, like you noted, tolvaptan did extremely well for us, continued to be an exclusive product on the market. Mirabegron also did well for us, and products like Spiriva, albuterol, also we had upside quarter over quarter. So all of those products contributed, and I'd say also the baseline, the inline products from a volume perspective also grew in the quarter, offsetting the small price erosion that you typically experience with the older products. Okay. So overall, it was a really encouraging quarter.
Okay, all right. Just on the US business, Vinita, now what are we expecting in terms of, say, a run rate going into FY27? We do have maybe pricing pressure, and if you could detail what the pricing pressure was this quarter, what are you expecting going into next year? As well as your guidance and say in terms of complex launches as well as competition in key products. So net, what are we working with when it comes to the US business?
So net, we expect the US business to continue to be at $1 billion plus, which is what we have mentioned in the past. And, with a contribution from the existing portfolio, products like tolvaptan in particular, Mirabegron continuing to be a material contributor, as well as, the rest of our portfolio, the injectable launches that we have had, whether it's Risperdal, Consta, glucagon, liraglutide, and the like. And additional, exclusive products like Ravicti, GPB that we have launched this year, but we got our own product approval in the last couple of weeks. So that will switch into our product in the next few months. The additional impact of biosimilars that we are planning to launch, pegfilgrastim. We've just started a launch process, and that will be a material contributor in fiscal year 27. Plus, hopefully, we get ranibizumab approval as well within the fiscal year. And so that will mark a really good start for biosimilars for us in the US.
Okay. Well, Nilesh, just wanted to, get a sense in terms of how the GLP-1 portfolio is doing for the company. You've tied up with Zydus for a co-marketing in India. What has been the traction for semaglutide in India, and what is your launch pipeline, say, in other emerging markets as well as key markets such as Canada?
Yeah. So it's been a pretty healthy start. I mean, in the quarter, we only had 9 days of sales, but you would have seen in IQVIA data that itself has been enough to actually stem the growth of Mounjaro. Obviously, oral semaglutide is the fastest growing part of the GLP-1 category in India. I think about 10 companies launched. We are amongst the top 3 in that, as we expected. And certainly that's something that we would expect to entrench further. April's been very healthy as well. I think we're off to a pretty solid start. We do want to be the player which is known for a differentiated play in that. So our pen from Zydus is the reusable pen. I think that's an advantage in itself. And I think the other things like our patient support program, just our go-to market, will differentiate us as well. And then again, obviously, as a large cardiometabolic player, we would expect to get a fair share of the market. So great start. I think the next quarter will show very well on how this is shaping up. In terms of other markets, I think India is the one big market where it starts. In India, as you know, we earlier announced both glutide, our NCE that we will develop in India. Obviously, there's other GLP-1s. There's quite a bit of GLP-1s that we will bring to India over time. Other markets, Vinita, does anything China? South Africa
we will be launching later this year. So in the fall, we should be launching in South Africa. And to your question on Canada, that's a partner product. We expect that it likely will launch in fiscal year 28.
Okay, all right. Well, Nilesh, I'm going to move away from the entire P&L and ask you about your strategy when it comes to acquisitions, because you all have completed the Visu Farm acquisition, which is, going to contribute in terms of your Opthal portfolio. But what is the larger strategy by the company, considering that we are now talking about Sun Pharma making one of the largest acquisitions that we've seen in the Indian pharmaceutical space? What is Lupin contemplating in terms of growth as well as a larger inorganic strategy for the company?
Yeah, I'm going to start and I'm going to hand it over to Vinita as well. So the 2 big acquisition areas for Lupin where we will do meaningful acquisitions are in India and in specialty. In specialty, both in US and in the developed market. In India, as you know, there isn't really continuous deal flow, but we're out there looking hard, and I think that's clearly one of the organization priorities to be able to acquire in India. It can be in overlapping therapies, it can be in complementary therapies. As long as it's a good, solid execution of the option, I think we can add a lot more value.
Okay, that's the management of Lupin for you all. As of now, the stock is still down 3.5% in the trading session. But time for a break. After the break, we'll have Ajit Mishra of Religare Broking, and he'll be talking to some trading strategies. Stay tuned in for that. Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is at 24,185 levels. Come off a bit also from when we started the show. We'll watch out for that. As of now, 140 points down. But let's bring on board Ajit Mishra, SVP Research at Religare Broking, joining us right now to talk about his trading strategies and individual bets as well. Ajit, good afternoon. Thank you so much for joining us on the show. And it's been a month since we see one day up, one day down. That's what the trend is. But as of now, 24,100, we are managing to hold on to that. What are the key levels you're keeping an eye out on for the Nifty as well as the Bank Nifty?
Yeah, good afternoon, Vinny. So, Vinny, you are right. It's been almost like 2 weeks that we are not seeing index going anywhere. It means, especially for the traders, those who are carrying the overnight position, they usually feel stuck. As of now, there's no indication of near-term respite, at least for the index traders, because if you see, that's been almost like a tight range band of 20 EMA and 100 EMA, 200 EMA is something that the index has been stuck in. Downside close to around 24,000 is where we have the 20 EMA mark. Upside around 24,550, 750, 100 and 200 days. So until we decisively break this area, I doubt that we can see any significant directional move in the index. So it's going to be largely this sideways tone continuing in the Nifty index. Similarly, banking also 56,500, 56,800 zone where we have the long-term averages placed. Currently, we are at 20 EMA mark. Here also we are seeing a similar kind of a texture, means on every uptick there is some bit of a selling pressure. So instead of focusing on index, mid-cap index made a new record high yesterday. So the idea should be on the sectors like energy, metal, pharma, and selectively from the auto space also is something that one should be focusing on, alongside with the counters, quality counters from the mid-cap and small-cap space.
The mid-caps off the highs. We do have a lot of these banking names which are at the day's low as well, be it HDFC Bank or ICICI Bank. What are your individual technical picks, Ajit, in this case?
Yeah, so see, banking definitely might remain under pressure, and so is IT. So the approach should be long and short approach. Pharma healthcare, wherein we see strong potential to do well, irrespective of the market tone, index tone. So Apollo Hospital, a strong breakout in today's session with the uptick in volume. So we are anticipating 8,400 mark in the near future. So with stop at 7,850, one can go long in Apollo Hospital. And then we have TCS from the IT space, where we still feel there could be a next leg of decline in the coming days. So close to around 2240 is what we are eyeing as an immediate target, with stop at 2450.
Okay, all right. Take that point, Ajit. Thank you so much for joining us with your technical bets and the important levels to watch out for the markets as well. Let's understand all the action that's taking place in the F&O space. Mangalam is joining us now with all the trends. Mangalam.
Well, the indices are lower, and the sharpest fall in the last few minutes that we've seen is in the mid-cap index, which was outperforming, hit a record high earlier in trade today as well, but now currently under a wee bit of pressure. The Nifty is actually led lower by the Nifty Bank. However, a couple of things that really stand out and should not worry the bulls despite the fall that we're seeing on the screen right now. First part is the Brent crude prices. They are still benign, even though there is, uncertainty around whether there is truce or not. Oil prices tell you that, maybe there is some positivity ahead as far as the geopolitical developments are concerned. Secondly, despite the decline that we're seeing in the market, there's not been a significant rise in India VIX. So it tells you that maybe at lower levels we will find support. And even though the mid-cap index has fallen from the highs, we still have almost an equivalent number of stocks which are advancing versus declining. So this decline should not worry the bulls, is what one is expecting. Also because from a technical standpoint, for the Nifty, we have strong support around 24,145, which is the 20-day moving average. And below that, we do have the 50-day moving average as well. So this 24,000 to 24,150 is an important support zone for the frontline index. However, the only thing we need to watch out for on the way up is the congestion that the Nifty Bank is facing between both its 20 and 50-day moving averages, which are placed just under the 56,000 mark. So the Nifty Bank has to cross the 56,000 mark and stay above it for the markets to resume a further uptrend, which is we have seen both call writing as well as put writing. The 24,200 call and 24,200 puts are both extremely active for a premium of almost 150 rupees on either side. So that tells you that around 24,050 to 24,450 is the near-term narrow range that the street is eyeing. Amidst all of this, The capital market plays are doing very well in today's trading session, and we're seeing a lot of long positions being added on Nuvama, MOSL, and Angel One. Angel One is off highs, but still seeing some long positions being added.
Okay, thank you so much for that, Mangalam. But on that note, we're going to slip into a very short break. After the break, we'll come back with our special Crypto Corner segment. Manisha will be speaking with Richard Green of Rootstock Labs on the Bitcoin price rally. Stay tuned in.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back. Joining us on the show now is Richard Green of Rootstock Labs. Richard, hi, thank you so much for joining in. If you look at the month of April, it has been very, very strong, and May seems to be starting that way. 80,000 plus kind of levels for Bitcoin and various other cryptocurrencies as well. The May has started on a positive note. How are you looking at this strength? What are you reading into this?
Yeah, absolutely. Very positive. I think that what we're seeing is not just Bitcoin doing well, but also the other altcoins. I think that when you are often looking at this, when Bitcoin moves, it moves liquidity out of the other altcoins themselves, but you're seeing the likes of Solana and ETH also being strong. I think it's also being backed up by other things out there, such as the regulatory side. You've obviously got Genius Act, you've got Clarity Act over the past week or so, which is pushing these tailwinds towards the crypto space as a whole, as traders are looking more at the permission side rather than just the price action. Are we able to actually do these things? And they're getting a lot of clarity from that as well. And like you say, the ETFs are really pulling in more capital. Morgan Stanley just launching their new one. And so that is buying up all of the Bitcoin that's being mined, and it's making sure that Bitcoin and the other cryptocurrencies out there are being supported.
Oh, absolutely. Richard, the other buzzword really has been stable coins. And what a humongous move that we've seen onto this one as well when it comes to borderless payments and cross-border moves, etc. How are you looking at stablecoin growth from here on?
Absolutely. I think stablecoins, again, looking at the Genius Act and the Clarity Act and what's coming out of that in the things that they can do now with reward-based yield, and then also the application of stablecoins, whether that be in a payment method, whether that be in the world of tokenized assets and real-world assets, all of those have a use case for stablecoins. So the infrastructure that was being built out 1 or 2 years ago, and you saw a lot of mergers and acquisitions occurring in that, have been completed, whether that be with Stripe or BVNK and so on and so forth. And now it's actually the application into the utility in the process there. So you're only going to see, in my view, stablecoin usage pick up because of the things like in the Genius Act, there was a conversation around, well, moving just deposit style yield. Well, actually that's been banned. And to me, that's quite a positive thing, because what it forces people to do is to be basing it off of utility. It's based off of the actual consumption and usage of stablecoins. And I think that's what we'll see driving that uptick even more.
Richard, how are you also looking at the overall markets therein? Because when you look at the real world asset tokenization, that has picked up in a very strong way. So whether it has been about finance markets, treasuries, or for that matter, commodities as well, seem to be doing quite well on blockchain.
Yeah, I think tokenization, these businesses are not moving into tokenization because they want access to the crypto space and the crypto user base. That's obviously there, but what they're looking for is the improvements in the infrastructure, not T+2 settlements, not all of the reporting that needs to be done and that can now be done on chain. And so what we're seeing obviously is that first move into the likes of stocks, but I think that what is coming and the areas that probably need it the biggest are things like private credit and real estate. Private credit is a booming sector at the moment, and there's a lot of inefficiencies there. So where tokenization and where real world assets really support are those where there are inefficiencies, whether that be in the settlement layer or whether that be in the ownership layer. And so that's where it will start to be addressed next.
Richard, after US, what other countries are we looking at as who are taking regulations on a very stronger note, where we see more growth, more participation come in?
Yeah, absolutely. I think you're first looking at regions like Japan. Japan has got an incredibly strong I would say technological and innovative space. And usually the government in that space and the regulations in that space are second movers because they're a little bit more cautious. What we're seeing is a significant uptick in the number of businesses who are exploring working within the crypto space. We're seeing people coming to us and saying, hey, whether that be to make Bitcoin productive or whether that be to be able to access on-chain capital markets, we're wanting to do something. We feel that the confidence is now there from the regulator, and so we want to start exploring it. And it's the same with India. I think that within the Indian regulatory space, there is more clarity. It is not as advanced as the US, and US usually leads the way in that space. But they're going back to that point of they are getting some ideas around permission. So being able to be permissioned and being able to actually do things is starting to drive the market there. In Europe as a whole, there's been some great movements, obviously with a number of months ago with MiCA, and within the UK, there's setting out of stablecoin legislation. So all of these regions, whether they are first movers or not, they're getting to that stage of actually providing the answers to, can we do this or can we not do this? And that's a great first thing, because then people can build on it and people can actually then start to use it as an institutional level or at a retail level.
The other thing that has been noticed in the month of April, Richard, has been the exchange Kraken now actually starting to work in sense of cross-border payment system in 100 countries or so. Wrapped Bitcoin seems to be doing very well too. But the major headline really comes in from Strategy as a company, which has said that they are not going to be passive, just investors in Bitcoin, but trade it around, move it more actively as well. What is really catching your eye?
Yeah, lots. I mean, the strategy is a big one, right? With a Saylor coming out yesterday and talking about in the earnings call that they will look to sell Bitcoin. And I think, what's the view on that? Well, this is the view that we hold internally, that it is turning Bitcoin into a productive asset when it makes sense. And that's exactly Michael Saylor's comments. His view was, we're not going to say we're never going to sell Bitcoin. We're going to sell it when it's advantageous to ourselves and to our shareholders. So it's previously the view was, well, I have to sell equity to fund dividends, but now onto STRC. But now what I can do is I have a very strong treasury of Bitcoin. I can use that as the asset. I can turn that productive. And that's what we're seeing from a lot of businesses, whether they be Bitcoin miners, whether they be digital asset treasury companies, whether it be pay-fi institutions who hold Bitcoin. They're looking and thinking about, how can I turn this from something that I used to hold as a store of value and still want to hold as a store of value, but use as collateral to take loans against, look to use as a yield-bearing instrument of some kind in a very safe and secure manner. So yeah, lots of headlines. I think the Saylor one is the biggest in our space at the moment.
Okay, an interesting chat there. Richard as well as Manisha, thank you so much for joining in. Richard and Manisha, thank you so much for taking us through that conversation as well. But on that note, we're going to slip to a very short break. Up next, we'll connect with the management of Biocon, discuss their Q4 numbers. Stay tuned in.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty has seen a bit more of a fall coming in as well in the last few minutes. We're at 24,170 now, and that's down almost 150 points in the trading session. So we'll watch out for where the market is going to be headed in the second half of the day. But SBI, they're going to be reporting their Q4 FY26 earnings. Let's go across to Ananya to just take us through what the street is penciling in. Ananya?
Street expectations from SBI's Q4 results remain broadly stable. The market is expecting a stable quarter for them. Now, NII is expected to grow at 7 to 9% year-on-year, while PAT growth is likely to come in at around 4 to 8%, although profits may moderate sequentially because treasury gains are expected to be lower than the previous quarter. Now, loan growth is expected to remain strongly at nearly 15%. Margins are likely to remain broadly stable at around 2.9%, despite pressure from repo rate transmission and elevated funding costs. Now, asset quality is expected to remain a key positive. Asset quality in Q4 stood at GNPA at 1.57% and NNPA at 0.39%, while credit costs were down at 0.4%. Now, in Q4, slippages and credit costs are likely to remain benign, and recoveries continue to remain healthy. Now, the main highlight will be the management commentary for FY27 on growth outlook, margin trajectory, and the impact of geopolitical tensions on MSME and asset quality.
Okay, Ananya, thank you so much for that. As of now, SBI not doing anything great in the trading session. But we have the broader end of the market also, which gave up the gains, right? So we have Nifty Midcap also now that is down almost in the red side, 0.04%, 0.2% of decline. Now, Nifty Midcap is trading at the day's lowest point. Which are the stocks that saw a fall coming in specifically in the last 40 odd minutes? Angel One, that's come off also. We have ICICI Lombard, that's come down as well. So, seeing pressure coming in on the broader end of the market. You have Dalmia Bharat, Vardhaman Textile, all of these in the last 40 odd minutes have seen a fall. ICICI Lombard, you see that is coming at the day's lowest point as well, trading down almost 3%. Vardhaman Textile is also at the day's lowest point, down 4% in the trading session now. So further decline that has come in for all these stocks in the last 40 odd minutes. While for today, the top losers continue to be CCL Products. They reported their numbers. Dalmia Bharat also under pressure, as well as Acme Solar, which also reported their numbers. But let's move on. And Biocon, that reported its Q4 numbers as well. In 9 set of earnings that came in from the company, revenue saw a marginal rise while the profits fell nearly 57%. On the other hand, the company also announced Claire Majumdar as the successor. My colleague Ekta started by asking the chairperson Kiran Majumdar-Shaw on the succession plan and more. Listen in.
I've always been asked about what my succession plan was for many, many years, because obviously having been a very strong founder and having built the business over 4 decades, I think people wanted to know, how am I going to deal with succession? And this is a question that's been sort of asked to me several times. And whilst in my mind, I had always planned to groom Claire to take over from me, I think the time has come now to say that I have decided that she is the worthy successor because of how Claire has earned her stripes. I think Claire was given the opportunity to build Bicara Therapeutics for Biocon, and she's done an outstanding job. I think she basically proved to me that she is a very, very strong entrepreneur herself, because she was able to, raise capital for Bicara under very challenging circumstances. In fact, when she took the reins of Bicara as CEO, that was kind of the most difficult time for biotech companies to raise capital in the US. And at that time, she managed to raise a pretty significant amount of capital. She even managed to go on to raise an even bigger round in Series B, and finally took it public on NASDAQ in 2024, where she basically listed on the first day as a $1 billion company. She continues to drive that particular business, which is really based on a clinical asset which is advancing very well in the clinic. And she managed to get a breakthrough designation for that program for the Ficeris molecule, which is a bispecific antibody that we had developed in India, but which she basically took into the clinic in Boston. And I think she's done a great job of creating value, of taking risk, of understanding the market dynamics, and dealing with clinical development in a very strategic way. And I think the way she's, designed the clinical program, the way she has developed the product, I think is very, very impressive. And I've watched her, grow as an entrepreneur, and she's been recognized and called out as a young, outstanding entrepreneur. Even EY recognized her as the Entrepreneur of the Year in the Boston region, and things like that. So I think she's proved to me that she can take over from me in 5 years for sure.
Okay. Well, credentials definitely speak for themselves, Ms. Shaw. But you mentioned 5 years. Just give us a timeline on what we are expected to see in the next 5 years as you undertake this transition. And is it going to be a definitive 5 years, or could it go to maybe 7 years or extend beyond that?
So right now, the way I view it is Claire is actually leading a very important phase of Bicara. So she needs time to basically transition from Bicara over a few years. It cannot happen immediately, even for her. And as far as I'm concerned, I'm right here at an inflection point where I need to be here for the next few years, just to make sure that the transition in whether it's Biocon, the integrated Biocon, or whether it's Syngene, I have to make sure that I work very closely with the CEO and the management to ensure that we drive the kind of growth trajectory that we believe is possible. But during this time, I also expect Claire to start playing a role, at least first at the board level, working with me closely, understanding the business. She's already on some of our subsidiary boards, you know, and she understands the biologics business. But I think she also has to come on board to understand how group Biocon works. So I think she's smart enough to pick it up in a few years, and that's why I gave a time horizon of 5 years. Now, you asked whether it could be 5 years or 6 years or 7 years. Let's see. I'm hoping that it can happen in 5 years, but if it needs to be extended by a year or two, I'm sure we'll take a call then.
That's on the succession plans, but we also spoke to the MD and CEO of the company, Shreyas Tambe, on the traction seen across biosimilar segments and more on their numbers and outlook as well. Listen into a slice of that conversation.
This quarter, just like we had said in the past, again has been a tremendous quarter, good successful growth that we've seen on the back of our biosimilars business, particularly in the US. You've rightly pointed to the oncology business, which continues to be strong for us. We've seen good traction play out in the pegfilgrastim product, which we've called and branded as Fulphila, as well as trastuzumab, which is our Ogivri branded product. That continues to be strong. And now this particular quarter, we're also starting to see our biosimilar ustekinumab, which is branded from ustekinumab, the Stelara biosimilar, which is Yesintek, starting to show in the numbers. So that's really what's underpinning this growth.
How is the company's GLP-1 portfolio shaping up? You do have a tie-up with Ajanta Pharma for semaglutide in 26 countries. Tell us about the launches and the kind of traction that you might be seeing in a couple of these geographies. And what is your plan for key markets such as Canada?
Yeah, I think the first piece, which again I've kind of got to say that I may sound like a stuck record, is we've seen the peptides business and the insulins business very differently than what most people have been talking about. We've not seen this as a sprint. This is a marathon in our view. This is something that we understand because of our insulin's presence. This is not about how you are, whether you are first out the gate. It's important that you can do this for a very, very long time because these are chronic therapies and you need to be with the patient for a long time. So that's just first thing that I want to put out there. Two is we have a very differentiated play because we're synergistic in terms of the products we make on the insulin side, the drug substance, the API, similar technology on fermentation if we want to. The drug product, the devices, again, very similar platforms. And now with the merger that we've done, we have operating leverage. It's the same commercial front-end capability and the relationships. So it allows us a lot of capability, operating leverage in several markets. You talked about partners that we've got. That's another channel available to us, but we're now present in several countries where we can be with the customer directly. And that adds to the revenues and to the profitability, just to give you a sense of that.
Sure.
Then you asked us about the specific markets like Canada and other markets that we are. We're working with regulators globally. It's not just Canada, but we say Brazil or Saudi Arabia, Turkey, wherever markets open up before the end of the decade. And then we'll continue to do several filings as we get over them.
All right. Section 232, most favored nation pricing, there's a lot of noise in the US around that. Given all of these risks, might I call them, what are you guiding for the generics business along with, say, pricing pressure?
I think the intent of that is to see that the American patients, citizens are not at a disadvantage. I think that's really what's guiding that approach. And if you really look at it, generics or the biosimilars industry as such is not the challenge here. They are actually a part of the solution there. So I don't see 232 affecting any of our business adversely at all. In fact, there's a lot of favorability in terms of how the outcomes of this will play out. And you see right from the beginning of the conversation, whether it was the tariffs or the reviews, generics and biosimilars have been excluded and have been viewed favorably by the administration, given its strategic importance to the economy.
Okay. What is the status between Biocon Biologics and Biocon, the big merger? And what are the operational synergies? When can we see them? What are you guiding for consolidated margins in FY27?
Yeah, I know you'll always push me for specific numbers of the margins, but I've always stayed away from specific numerical guidance. Let me just first say that you're already seeing 2-3 things happen in the current quarter once we've started to merge. You've seen the strengthening of the balance sheet right away. Okay, that's happened. You're going to see a 300 crore improvement from an interest line that you see in the P&L after the EBITDA because you've already retired all the structured debt. So that's 75 plus crores a quarter that you will start seeing an improvement. That's going to play out. On the EBITDA margin where you asked, the operating leverage is kicking in because you will see that we just talked about how will you commercialize peptides. You're not going to need a new sales force. You're not going to need a new front end to commercialize all the products that are coming in. So the merger will provide this. As we get through fiscal 27, we will be able to give you a little more guidance on what are the synergies that we are seeing, which will play into the P&L. We already have visibility to it. We've got a 3-phase approach: preserve, which is what we've done, preserving value in the merger. 2 is consolidate, which will play out in fiscal 27, the 4 quarters. And that will set us up for acceleration post fiscal 27. So through 27, we'll be able to give you more color on the actual P&L benefit that will accrue as we start seeing it into the numbers.
Okay, that's the word coming in from the management of Biocon, even on their earnings and outlook going forward as well. Nifty, let's look at that, right? Where is that headed? We've seen a bit of a fall from when we started the show as well. Nifty now at 24,160 level, so almost in that day's low is what we're looking at for the Nifty 50. Broader end of the market also gave up those gains, so that is also under pressure. We've seen a bit more of a decline coming in the market, specifically in the last 1 hour. Sensex, Nifty, all of them have seen a bit more of a decline. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next to Business Lunch.
Stocks slip after the US and Iran face off in the Strait of Hormuz. The large caps see the brunt of the selling even as the mid caps stay resilient. The energy, metals and financials are the big drags even as IT and healthcare eke out gains. Pidilite perks up on stronger than expected volume growth even as it tempers margin expectations going forward. But Britannia slides after its sales growing slower than its estimates. A bunch of prominent investors exit Lenskart via trades worth close to 6,000 crore rupees as the IPO lock-in ends. Nearly 60% of the company's equity worth over 50,000 crore rupees has been freed up for trade today. BSE reported a healthy sequential turnover growth in the fourth quarter, driving up transaction charges and its profit. MD and CEO Sundaraman Ramamurthy tells CNBC TV 18 that the focus is on monthly option volumes and more products as the next path of growth. And the crucial meeting of the board of the Tata Trusts has been deferred to the 16th of May. Sources tell CNBC TV 18 the board was to deliberate on listing of Tata Sons and recasting the board of the holding company of the Tata Group. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormas Fatakia. It's a very big earnings day as we count down to the end of what has been a very busy week on the earnings front. But for now, before the numbers are announced, the index is near the lows of the day. 160 points lower on the Nifty. 24,164 is where it currently stands at. They'll be looking for some support at that 24,100, 24,050 mark, where support has generally emerged over the last few trading sessions. So the bulls would be looking to defend the 24,000 level on the downside as we round off this week. It needs to close above 24,000 to ensure that there is a second straight weekly gain as well. The underperformance is being led by the Nifty Bank, unsurprisingly so, has been an underperformer compared to the Nifty all through this week. And the Nifty Bank is now down 650 points. It is at the lowest point of the day, below the mark of 56,000 and heading towards the mark of 55,000 now, where it continued to find resistance until Wednesday before that sharp up move that took place in the second half of Wednesday's trading session. The big result of the day is going to be SBI. Numbers will be out any minute now, and you'll be hearing from the management as well shortly on the numbers on the road ahead for FY27, their credit growth guidance, their deposit growth guidance, the asset quality picture, all of it. And well, currently almost 1% lower is where SBI currently stands before its results. Bank of Baroda as well reporting results later today. And that is also a stock that has been trading lower, and Bank of India too. So 3 PSU banks reporting results, be it SBI, Bank of Baroda and Bank of India, all of them trading with losses ahead of their numbers. Numbers from Sera Sanitary were also flashing at the bottom of your screens. Profits are down from last year. Of course, we'll get more granular details as the show goes by. Revenues are up 11%. The stock currently trading flat. But FMCG companies have been on the radar. Pidilite, Britannia, Dabur, all of them came out with numbers after market hours yesterday. How were these numbers? How are the stocks doing? Manglam is here with the complete roundup. Manglam.
Well, a complete roundup indeed. I'll first start with the numbers of all the companies, how the stocks are doing, and thereafter get you excerpts from what the management had to say either to us or on the conference call. It will be a comprehensive picture of how the FMCG sector is viewing the crisis and more importantly how they're looking at demand as well going forward. So let's start with Britannia, the weakest of them all, currently lower in today's trading session as well. And that's because the street was expecting about a 10% revenue growth. The company went ahead and reported just about 6.5% in terms of a top line growth, and volumes were about 5.5% as well, as against expectations of higher single digits, if not near double digits as well. The reason for the miss in Britannia is because January and February did well for them, 9% growth, but March is where they started facing concerns around the West Asia crisis, and that has impacted their overall performance. On the bottom line, however, they got the impact or the benefit of a lower effective tax, which is why the EPS has been pretty much very close to what the street was anticipating. But that's Britannia. The first quarter, obviously, everyone's worried about how raw material inflation has played out and how demand is likely to be impacted on account of that as well. Dabur, those numbers were slightly ahead of street expectations, and the internals were fairly strong as well. Mid-single-digit revenue growth was expected. That's exactly what the company reported. Margins also largely in line with street expectations. 462 crore was the EBITDA. The poll was about 461 crores, and the net profit as well, largely in line. They too reported 6% volume growth, slightly ahead of street expectations of 4 to 5%. But importantly, their home and personal care business showed a growth of nearly 17%, and the management was fairly sanguine on this growing forward as well. So Dabur has been doing relatively better, and they've said that rural is obviously outperforming urban, but urban is also catching up. They are sanguine on demand. And finally, the star of the show was Pidilite, especially when it comes to overall performance. The revenue growth expectations were about 10%. The company reported 14% revenue growth, led by near 15.5% volume growth in the consumer business, near 15% volume growth in their B2B business as well. Here too, the EBITDA margins expanded as against expectations of contraction. 37% jump in EBITDA and profit is what we saw. Now onto the management commentary. Three things stand out. One, demand was fairly strong until the crisis started. Secondly, the crisis, impacted the company's supplying abilities and not people's buying abilities. And thirdly, everyone has taken price hikes. So going forward, if things normalize, then they are hoping for margins being maintained, or if not increased, and at the same time demand returning as well. So Pidilite, for one, took a 4 to 5% price hike in April and 5 to 7% in May. Bulk of price hikes has been taken already. Demand momentum continues. Dabur as well. They'll maintain their margin targets at around 18.5% if they don't increase it. Target mid-single-digit volume growth and a similar amount of pricing growth coming as well. So that's about double-digit revenue growth. And they saw 10% inflation in raw materials. They've already passed 4%, and they are considering other price hikes too. And Britannia will start taking calibrated price hikes starting Q1, and they see rural demand normalizing as well.
Mangalam, thank you for that update there. Among the top losers in the broader markets today is Britannia, 5% lower now on the stock as we speak. Pidilite too has come slightly off the highs of the day, started off very well, but has given up some of those gains in line with the volatility that you see in the market. So 2.25% higher on Pidilite as well. The other big earnings from yesterday was BSC, and it was a strong fourth quarter performance from them. And earlier we spoke to the MD and CEO Sundaraman Ramamurthy to understand the path ahead for the company. Listen to what he had to say.
The concentration is on monthly options volumes and more products. That is what we are looking for. We are making BankX sort of another product which we wanted to succeed. We are talking to a lot of people. It is showing some signs of success, initial success. We would like to work on it. Futures, we will work on it. And more indices on which monthly options and futures will be introduced is what we are looking for as a next path of growth. Some of the people who are currently in the marketplace, who are already doing this type of trading in other places, who are not yet there in BSE, has to come into BSE. Further, there should be some minimum liquidity in other than current week's expiry, which is happening. But if you look at it, the liquidity is still restricted only to the current month and next month maximum. We should not be just having only this month and next month. We should have the third month, fourth month, up to at least 1 year the product should trade. So this is one thing, therefore, where we go and represent to the market participants should look into it and have some people who are ready to be on both sides of the market and provide liquidity for liquidity takers. That is what we are working on. And bringing in such of those institutions who generally look into the longer term part of the hedging.
The big result from the day is going to be SBI, and numbers will be out shortly, of course. Let's go across to Ananya, who will be telling us what the street is working with.
Street expectations from SBI's Q4 results remain broadly stable. The market is expecting a stable quarter for them. Now, NII is expected to grow at 7 to 9% year-on-year, while PAT growth is likely to come in at around 4 to 8%, although profits may moderate sequentially because treasury gains are expected to be lower than the previous quarter. Now, loan growth is expected to remain strongly at nearly 15%. Margins are likely to remain broadly stable at around 2.9%, despite pressure from repo rate transmission and elevated funding costs. Now, asset quality is expected to remain a key positive. Asset quality in Q4 stood at GNPA at 1.57% and an NPA at 0.39%, while credit costs were down at 0.4%. Now, in Q4, slippages and credit costs are likely to remain benign, and recoveries continue to remain healthy. Now, the main highlight will be the management commentary for FY27 on growth outlook, margin trajectory, and the impact of geopolitical tensions on MSME and asset quality.
Ananya, thank you for that update there. Take a short break. On the other side, US and Iranian forces trade fire in the Strait of Hormuz. Trump calls it the exchange a love tap, maintaining that the ceasefire continues to hold. We'll be back with more on the other side. Stay tuned. Welcome back. Now, U.S. and Iranian forces traded fire in the Strait of Hormuz. U.S. President Donald Trump called the exchange a love tap, insisting that the ceasefire is still in effect and that Iran needs to sign a deal fast or face harder strikes. Listen in.
They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast. Somebody said, what's your plan? I said, the plan is very simple. Iran cannot have a nuclear weapon. It cannot have a nuclear bomb. And it's not going to have. And they're really at the end of the line. Really are at the end of the line. Now, unless you guys feel differently. Now, these guys, I think, will say that Iran cannot have a nuclear weapon. Would you say? We wouldn't feel very good if they did, because this what you're doing and all the work that you do and that we do, it wouldn't look too very good after a while with these characters. We're not going to give them the right to have a nuclear weapon. There's zero chance. And they know that, and they've agreed to that. Let's see if they are willing to sign it.
CNBC's Dan Murphy has the latest from Abu Dhabi.
US and Iranian forces have exchanged fire near the Strait of Hormuz in the most direct military confrontation between the two sides since the ceasefire. Now, markets are attempting to determine if this is escalation or just leverage for a deal. 3 US Navy guided missile destroyers came under attack as they transited the strait to the Gulf of Oman. CENTCOM says Iran launched multiple missiles, drones and small boats at those vessels, but no US assets were struck. In response, US forces carried out what it called self-defense strikes, targeting Iranian missile and drone launch sites and command and control locations. President Trump downplaying the exchange, calling it just a love tap, and insisting the ceasefire stays intact. But in the same breath, the president also warned Iran that without a deal, will knock them out a lot harder and a lot more violently in the future. Meanwhile, the Wall Street Journal reports that momentum is now building on the ground. Saudi Arabia and Kuwait lifting restrictions on US military access to bases and airspace. That could potentially clear the way for Project Freedom to restart as soon as this weekend. And at the UN, the pressure campaign also ramping up, the US and Bahrain introducing a Security Council resolution backed by key Gulf states demanding Iran stop targeting ships, stop mining the strait and disclose mine locations. If not, the resolution opens the door to sanctions and potentially force. Russia and China remain the swing votes. For now, traders are watching for signals on how Iran could respond to the latest 14-point MOU now on the table and whether diplomacy and military pressure can move in parallel. It's back to you.
Dan, thank you for those updates there. And in yet another setback for Donald Trump, the U.S. Trade Court has ruled against the president's latest 10% global tariffs. The court cited that the tariffs were not justified under a 1970s trade law. The U.S. Court of International Trade's 2-1 decision leaves the temporary tariffs in place for all other importers, while any appeal by the Trump administration plays out. Meanwhile, Trump also said that he would give the European Union until the 4th of July to implement the trade deal commitments before he raises tariffs on the European Union goods, including cars, to much higher levels. The European Commissioner also acknowledged the call with the US President and said that both sides remain committed and good progress is being made towards the tariff reduction by the end of July. Getting you the latest updates from the world of tech in our segment, the AI Pulse. Rachna is here with more on this. Rachna.
Well, from AI earnings to AI infrastructure, today is all about how AI is reshaping companies from the inside out. First, CoreWeave. The AI cloud provider reported first quarter revenue of $2.08 billion, more than double year on year and ahead of estimates. But shares fell 10% in after hours after the company guided second quarter revenue below Wall Street expectations. Cloudflare tells a similar tale. The networking giant beat first quarter estimates, posting revenue of $639.8 million, up 34%, but shares dropped more than 16% after hours as the company announced it would cut 20% of its workforce, roughly 1,100 jobs. Cloudflare called it a shift to an, quote, agentic AI first operating model, citing a 600% surge in AI usage. The market clearly wasn't convinced. Now to the build-out behind all of that compute. NVIDIA and Corning have announced a major multi-year partnership to expand US-based optical connectivity manufacturing. Corning will increase domestic capacity tenfold, build 3 new plants in North Carolina and Texas, and create more than 3,000 jobs. NVIDIA CEO Jensen Huang called this, quote, a once-in-a-generation opportunity to revitalize American manufacturing. On the AI safety front, OpenAI has launched a limited preview of GPT 5.5 Cyber, its rival to Anthropic's Mythos, rolling it out to vetted cybersecurity defenders responsible for critical infrastructure. Security testing at this stage suggests that it's nearly on par with Anthropic's Mythos. And Google is retiring the Fitbit brand, at least in software. Starting May 19, the Fitbit app becomes Google Health, powered by Gemini AI. The new health coach will track fitness data, summarize medical records, and answer personalized health questions. A premium subscription runs about $10 a month, and it looks very similar to Whoop's offering. Back home, NASSCOM wrapped up its 2-day GCC event, with NASSCOM's Zinnov report putting India's GCC ecosystem at $98 billion and closing in on the $100 billion mark very soon. On the sidelines, I caught up with Telangana's IT Minister Sridhar Babu, who spoke of the state's ambition to become India's AI capital.
For the past 2 years, if you see in the first year, 70 GCCs, which has never been there in 1 year. And, our great ambition is to do 100 this year. We don't see any competition between other states because the best things what we'll try to literally see in what other states we'll try to inculcate.
Okay.
But we are far ahead in terms of technology, and we have great confidence. We have hubs where the technology incubation startups will be taken to the next level.
Right.
Now we are creating ACOM, the innovation hub will be going to the next level, where we are putting a center of excellence for the quantum computing, where we will be doing great exercise in terms of creating some niche products. So these are all things what we are trying to shape it up. And tomorrow our goal and aim is to become AI capital of India.
We take a short break. On the other side, we get to the latest from West Bengal amidst the political unrest and the arrival of Home Minister Amit Shah in Kolkata ahead of the planned swearing in of the new Chief Minister tomorrow. Well, SBI has slipped to the lows of the day now ahead of the results announcement. Numbers will be out any minute now and we're counting down to that. But now the stock is at the lows of the day, 1.5% lower as we speak. Now over to West Bengal. Home Minister Amit Shah has landed in Kolkata to pick the BJP's Chief Minister face, with Suvendu Adhikari seen as the front-runner. This even as Mamata Banerjee refuses to resign amidst the post-election violence, which is also intensifying. Pallavi Ghosh joins in with the latest.
Well, Bengal is in the poise of a new chief minister, and one of the observers plus the home minister, Mr. Amit Shah, has already landed in Kolkata. He has been one of those hands-on people. He has overseen the entire election, and he is the one who's being decided that who really will be the next Mukhyamantri of West Bengal. Many names are being thrown up, but the name of Suvendu Adhikari seems to be that of the front-runner. The one who not only once but twice defeated Mamata Banerjee. The one who knows the working and who has the administrative experience. Because the challenges for the BJP in the state are many. First of all, they have to ensure that there is no bhoy, no fear on the ground. We've already seen that there have been several post-poll violent incidents which have taken place, whether it's in Murshidabad, whether it's in Howrah, where I'm standing at this point of time, and also the brutal killing of the assistant of Suvendu Adhikari, which we all have been reporting about. It's very important for the BJP to send out this message that there will be a zero tolerance for any kind of crime or violence on the ground. And this messaging is also important because if they do want investments to take place, if they do want development to take place here, many of the investors who have been shying away on the fear of Tolabazi or a syndicate group of the TMC, plus also violence on the ground, they have to be convinced that the BJP government is going to give a focus back on development. No Tolabazi, no syndicate ki sarkar. The focus will be on maximum investment, maximum progress for the people of West Bengal. That's going to be one big challenge. We'll have to wait to see what is going to be the first cabinet meeting's focus after a new government is formed. It's going to be a big bang celebratory oath-taking, Prime Minister himself being there. All the NDA chief ministers will also be present, as well as celebrities, influencers, people, all of those who have been affected by the so-called violence of the Trinamool Congress. All of them have been given a special invite. A lot of focus now remains on who's going to be the chief minister. By late evening, we should be getting that particular name, which everyone has been watching out for. The first time round, BJP coming to power, and who would have thought a party which at one point of time just had 3 to their name, as today got an overwhelming majority. While the Trinamool Congress is behaving like a sore loser, it refuses to accept that they have lost. Mamata Banerjee did not even resign. In fact, the House had to be dismissed because the term had ended by the governor. But the focus of the new government certainly is going to be on ensuring that no post-poll violence or any kind of a violence takes place on the ground.
Pallavi, thank you for that update there. Now, 5 cases of the hantavirus have now been confirmed in relation to an outbreak on a cruise ship. The World Health Organization says that there may be more cases due to the virus's 6-week incubation period. The WHO chief has said that there is no need to panic and it is definitely not comparable to COVID. The vessel carrying 150 people is headed to Tenerife after Spain agreed to dock it despite local opposition. Passengers showing no symptoms are scheduled to disembark on Saturday or Sunday and travel back home. And David Attenborough, the iconic voice behind nature and wildlife documentaries for decades, turns 100 today. Over the years, his voice has become an iconic backing to some of the BBC's most loved documentaries, from the Planet Earth series to Frozen Planet. Both on and off screen, he has also shared his wisdom on how we can help the planet. The broadcaster, whose work has been watched by millions over the years, said that he had been planning a quiet birthday but was overwhelmed by the greetings he had received for his 100th.
I had rather thought that I would celebrate my 100th birthday quietly, but it seems that many of you have had other ideas. I've been completely overwhelmed by birthday greetings, from preschool groups to care home residents and countless individuals and families of all ages. I simply can't reply to each of you all separately, but I would like to thank you all most sincerely for your kind messages and wish those of you who have planned your own local events tomorrow have a very happy day.
Such a wonderful part of our childhood. We take a leave on this edition of Business Lunch. From me and the team, thank you for watching. We count down to results from SBI with the market still nearing the lows of the day. Mid-cap radar on the other side.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. It's been quite volatile, actually, but the Bank Nifty, which is underperforming, is leading to the pressure on the markets, but there has been a recovery for now. We've been above the 24,100 mark for the larger part of the day. Actually, we are still there. So, yeah, very close to the 24,200 mark. IT Pack is doing well, but some pressure coming in from financials.
Good afternoon, and as we stand by waiting for the results of SBI, and that could be a big mover as far as the Bank Nifty is concerned. So all eyes will be on SBI expected anytime soon. But a lot lined up on the show, an important corporate conversation. So let's start off with the top headlines. Market hovers near the day's lowest point. Broader markets outperforms, mid caps in the red, but it's a field day for the small caps. Financials down and out. IT stocks defy weakness.
Thermax quarter four earnings beat estimates. Order book spikes 27%. Steady inflows driven by industrial products and infra. Management sounds optimistic over the data center opportunity. Says order wins likely in the near term.
Dabur's domestic volume growth comes in at 6%, beating expectations of coming in the range of 4 to 5%. Home and personal care segment leads with over 15% growth. Company commentary sanguine. Management tells CNBC TV 18 that they expect volumes to be in mid-single digits in FY27. Stock climbs to the day's high.
Lupin reels under pressure even as company reports a better than expected set for quarter four. Management sounds cautious over impact of geopolitics. Executive Director Ramesh Swaminathan tells CNBC TV 18 that margin headwinds are likely on the anvil as far as US is concerned.
Acme Solar sees heavy selling pressure, consolidated top-line growth in early teens, profit growth at 13%. Margins, however, contract.
Okay, all right. Those are the top headlines that we are tracking and standing by for SBI results. Just take a look at the Bank Nifty as well. It has been an underperformer through and through. The Nifty is attempting a recovery from the lows, but all depends on how the street reacts to SBI's numbers as well. So that is a recovery in Bank Nifty. Let's see what SBI is doing as we speak. That stock is at the day's low. So that's what's happening as far as the major indices are concerned. Let's talk about some of the mid-cap movers as well. This is our special segment. We have Ria Bhatia to take us through the mid-caps that are moving around in trade. Ria.
Well, yes, a lot of movers in today's trading session. Starting off with the gainers first, we have First Source Solutions up around 17% today, seeing a continued up move after reporting a very strong set of quarter four results a couple of days ago. The stock is also up around 30% in the last 5 trading sessions, but remember it has declined around 21% in the last 6 months. Moving on to Nuvama Wealth, that is also seeing strong gains today. The stock is also up around 21% in the last 5 trading sessions itself. Sonata Software also seeing a strong up move after reporting a strong set of numbers in quarter four. It's also trading on very strong volumes, 24 times the average 30-day volumes traded today, but the stock has declined around 25% in the last 1 year. MRPL also seeing a very strong gain of 9% today, as well as Jain Resource Recycling, which has hit its all-time high today, and the stock is also up 70% just in the last 1 year. Moving on to some of the volume buzzers for today, very strong volume seen in all of these stocks compared to their 30-day average volumes. Lenskart seeing 21 times the average volumes traded today. Thermax 14 times. Similarly for Action Construction Equipment, 12 times the average 30-day volumes traded today. 10 times for Craftsman Auto and over 7 times for Berger Paints as well. On the flip side, if you look at some of the losers in today's trading session, we have CCL Products as well as Acme Solar declining in trade after reporting muted quarter four results. Dalmia Bharat, Vardhman Textiles also taking a big hit in today's session, as well as Hitachi Energy. But Hitachi Energy, remember, is up more than 2 times just in the last 1 year.
Well, thank you so much, Ria, for joining us and giving us a good sense of all of the stocks moving around the broader end of the markets. Well, now on to an important corporate conversation. Vikram Solar, that particular stock is under a bit of pressure after reporting a mixed set of Q4 numbers. Raw material cost inflation has impacted margins. To discuss this and more, we have Ranjan Kumar Jindal, the CFO and KMP of Vikram Solar. Well, good afternoon, Mr. Jindal. Thank you so much for joining us. This particular quarter, like you and a couple of peers, what we've actually witnessed is a bit of pressure, number one, on realizations and also cost price inflation. While cost price inflation was something that the street was factoring in, especially given the kind of spikes that we've seen in the key raw materials, the realization moderation is something that the street is a little worried by. Give us a sense of how Q4 panned by in those regards and how is Q1 starting out?
Thank you for having me. You see, this business mainly is a pass-through business.
So normally the increase in cost is compensated with the corresponding increase in revenue. Few items of the element of cost which are not able to pass through continues to remain as a hit to the PL. But overall, the year was good, and we saw a 74% jump on the EBITDA in comparison to FY25.
Mr. Jindal, what is the outlook in terms of margins for FY27? You saw 19% in FY26, but Q4 was at 16%. So what is the expectation for FY27?
So FY27 is no different than what we saw in the Q2 in the last quarter for FY26. We have signed one long-term agreement for DCR sales as well, which will help us recoup the margins a bit better. So overall, we see FY27 to deliver good numbers.
So are you saying it will be at 19%, or will it be similar to Q4 of FY26, which was at 16%?
So we expect the overall EBITDA in absolute terms to go up by almost 1.7 times.
EBITDA will be higher by 1.7 times in FY27 versus FY26.
That's a 270% jump. Is that right?
Yeah.
Okay. Now, this jump that you're anticipating, this is on account, number one, of much higher capacity. And how are trends panning out, especially when you're looking at demand? So we are assuming that demand is extremely strong, which is why you're giving us the kind of jump that you're anticipating. And once again, we missed your comment as far as realization trends are concerned. How is that panning out?
So, you see, being in this business for 20 years now differentiates you with the peers who have just evolved. So even though there is a bit of noise on the overcapacity, the offtake plus the combination of DCR and non-DCR will help us retain the EBITDA margins. And so as I told, FY27 is going to see a jump of about 70% more in the EBITDA in absolute terms as in comparison to FY26.
Mr. Jindal, we are asking you about realizations and the industry macros in general because there is a huge capacity which is coming in, right? What happens then if there is a lot of capacity, if there is a lot of competition, big players are entering the market as well? Do you think there could be pricing pressures which would come by?
So as I told you, this business is actually monitored at EBITDA per watt peak level. Right. Even though there is a bit of oversupply, the realizations may go down if at all. But in that case, this will have a corresponding impact in the cost as well. So the overall margin on per unit basis is expected to remain what we expect got in Q4 for the last financial year.
Okay, we get that. See, we want to get one particular thing out of the way. Indian suppliers, along with Chinese as well as suppliers across the globe, are facing ADD probes, ADD charges in the USA. Along with that, there's also a CVD charge that's being levied on them as far as the US market is concerned. We understand that you have negligible, if not nil, exposure to that particular market. Can you confirm that? That's the first question. Number two, given the fact that quite a few of our players that do import cells from other countries and export it to the US market, will they now be forced to come into the domestic market to sell their final products? In that case, do you expect further stress as far as realizations are concerned?
Yeah, so that is something which keeps bothering the ones who rely on the export market. ADD and CVD was a point of concern, and we have an order book of 1 gigawatt on the export market to the US. So we are waiting for the supply chain to get established. We are in touch with the customers. At an appropriate time, we can click those exports. And the ones who did rely on the export markets are also equally working on corresponding supply chains. We know US as a market does have demand to absorb the modules, and Indian modules on pricing front are competitive to those manufactured in the US. So we see as a country that India as a country can consume a lot of solar modules, but the focus on the exports will also continue.
Okay. Mr. Jindal, you do have a cell plant commissioning in December 2026. What does that mean for your P&L? Is the entire capex done? What happens when it comes on stream? Does reliance on outside cells would go down? Explain to us what happens there.
So as you're aware that the country is moving towards ALMM2, which is domestic cells getting effective from June 26. With our captive cells coming in, we'll be able to cater to the DCR market fully. So FY28 we'll see the full year of the captive cells coming in. This will help us increase the EBITDA margin with a good jump.
Okay. We get that point completely. We want to understand a little bit about what kind of backward integration that you're working on, because we also understand that you have an ingot wafer project. We understand that from the 6 gigawatt, you plan to scale it up to 12 gigawatt. What is the kind of capex you have lined up over there? Secondly, what is the current trending price of aluminium frames? We understand that it has spiked up and did impact margins. Going forward, do you expect a bit of moderation there?
Well, answer question 2 first. Yes, aluminum prices have gone up to $3,600 per ton, which had an impact on the corresponding BOM cost at the plant level, which partly got compensated with the falling sell prices, so without affecting the overall cost of production too much. On the first part, yes, the backward integration with a 6 gigawatt wafer ingot was approved by the board at 3,700 crores. We will have the corresponding second phase at a later stage to be in line with ALMM 3. The wafer ingot mandatory stipulation with effect from June 28.
Talking about wafer ingot, you do have a facility which is coming in Tamil Nadu, 3,026 crore rupees. What is the status on that one? How will you fund it? What kind of addition will it do to your P&L once it does come on stream?
Well, we'll kickstart the project in the next quarter, and this is expected to be funded at a debt equity of 3:1. The equity will be funded from the internal accruals. And as I told, with the FY 28 coming in, the overall EBITDA margin stack is going to improve with captive wafer ingot, with captive sales, and then the modules to be sold in the market.
Mr. Jindal, can you confirm for us? We understand you have an order book currently of 8.2 gigawatt, out of which we understand almost a little over 7 gigawatt is from the DCR-linked procurement, DCR modules, and the remainder is from the other parts of the business. Now, going forward, what is the kind of ideal mix that you're targeting, and where are the margins higher?
At any point of time, the target remains to remain tied up for at least 12 to 18 months of the production expected. And the order book as on date takes care of my supplies up till June 27 to be secured at least from the offtake point of view.
Okay, and the sense as far as BESS project is concerned now, what is the targets over there? What kind of revenue accretion you're seeing from there?
So on the BESS front, we shall start a 5 gigawatt assembly plant in the current year. This is expected to deliver a top line of 300 crores initially. The main revenue stream will come in from the cell manufacturing, which we intend to start in the Q3 of the current financial year. With a 24 months construction period, the commission would be somewhere in September 28.
Take that point, Mr. Jindal. Thank you so much for joining in. We'll touch base again when there are updates on the big capex that you've announced across different categories. That's the word coming in from Vikram Solar. The stock, though, down around 4.5% because of the margin contraction that we've seen in the quarter gone by. But they do expect strong FY27, almost 1.7 times EBITDA versus FY26. Let's slip into a short break now. We'll focus on Acme Solar. We'll talk about some other stocks which are reacting to quarter 4 numbers as well. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular stock that we are looking at is Acme Solar. Now, that particular stock has seen quite a bit of selling pressure emerge, and this is on account of the Q4 results that the company has given. Now, in terms of the numbers themselves, on a year-on-year growth, on a year-on-year basis, across all parameters, there has been some growth seen. Now, when you're looking at the revenues have almost 12.5%. Now, the street is used to seeing much stronger growth rates come in, especially from renewable energy players. So a little bit of moderation as far as the pace of growth is concerned. EBITDA higher by almost 10%. EBITDA margins have contracted by around 180 basis points. Now, profitability up by 13%. But if you look at the kind of order book that the company is talking about, the kind of capacity, it remains to be quite strong. The BSE's capacity is at 2.3 gigawatt hour till date, and the company says that it's able to deliver close to 2.2 crore rupees a day of net realization. Now, the new project wins that the company got in FY26 is at 301 megawatt. Now, these are FDRE projects, indicating that the FY26 project addition stands at almost 1.4 gigawatt. Total under construction capacity of a little over 5 gigawatt, and total committed capex in FY26 was 12,475, of which 6,400 the company has already spent. Purchase orders for another 6,000 crore has been given. So the fact that some of these players are seeing the pace of growth moderate is something that is leading to quite a bit of profit booking, especially when the results do come out.
Oh yes, 6% lower on this one. A lot of moving parts in the markets in general. Let's do one thing. Let's talk about some more stocks which are on our radar. Thyrocare is one of them. It's higher in a market like this. A good set of numbers coming in, Ekta.
Well, yes, Thyrocare reported 19.7 or 20% revenue growth on a year-on-year basis. Margins expanded to 33.5%, and profit came in at around 48.7 crores, which was a year-on-year as well as sequential growth. Now, in terms of what they reported this time, 59 million tests conducted, which was up 29%. Complaints per million tests was down 34% on a year-on-year basis. And pathology, which is basically the bulk of the business, franchise revenue within that was up 21%. Partnership revenue was up around 23% on a year-on-year basis. Now, FY26 as well, it recorded double-digit growth, so 20% revenue growth, margins 31.6% improved versus 28% year-on-year, and profit came in at around 162.8 crores. FY26 franchise revenue again was up in double digits along with partnership revenue. So franchise was up 18% and partnership revenue was up around 32%. Going forward, the company is looking to expand deeper into India. They want a more focused test menu, expand partnerships towards insurance plus ECG, and strengthen their presence outside India, for example, in Tanzania.
Well, thank you so much, Ekta, for joining us and taking us through all of the key highlights as far as the Q4 results of Thyrocare was concerned. But remember, BSE reported a very strong fourth quarter. Earlier today, we spoke to the MD and CEO, Sundar Ramanmurthy, to understand the path for the company going ahead. Let's listen to what he had to say.
The concentration is on monthly options volumes and more products. That is what we are looking for. We are making BankX sort of another product which we want to succeed. We are talking to a lot of people. It is showing some signs of success, initial success. We would like to work on it. Futures, we will work on it. And more indices on which monthly options and futures will be introduced is what we are looking for as a next path of growth. Some of the people who are currently in the marketplace, who are already doing this type of trading in other places, who are not yet there in BSE, has to come into BSE. Further, there should be some minimum liquidity in other than current week's expiry, which is happening. But if you look at it, the liquidity is still restricted only to the current month and next month maximum. We should not be just having only this month and next month. We should have the third month, fourth month, up to at least 1 year the product should trade. So this is one thing, therefore, where we go and represent to the market participants should look into it and have some people who are ready to be on both sides of the market and provide liquidity for liquidity takers. That is what we are working on. And bringing in such of those institutions who generally look into the longer term part of the hedging.
All right, that's the word coming in from BSE. It's time to talk about some more stocks. Thermax is in focus on the back of numbers. There are some conference call takeaways as well. Vinny is here to take us through that. Vinny?
Hi, afternoon. So in terms of numbers, good set of numbers that came in from the company, right? A good revenue growth of around 12-13% in Q4 FY26. Order inflow also has seen a very sharp jump up. 4,490 crores is what the order stood at. Q4 included an order of around 1,600 crores that came in from the boiler side, which they won a big order of this amount of 1,600 crores. Now, apart from that, industrial product segment of the company, that's done well. That was leading the growth for them. Chemicals business, some bit muted. That continues to be under pressure. There were some raw material prices and issues because of that. Even the margins of that business were a bit muted. Other than that, EBIT margins of industrial product have done very well. Industrial infra, that started seeing an improvement as well. So that is a positive sign here. While in terms for the con call highlights, what the management highlighted is that some of the sectors and Middle East side, what was the issue on that front? Middle East is a key monitorable for them. Right now, they see that, the Middle East has been a very good opportunity for them over the last few years. They see that currently the situation is something that they're watching out for. Pricing challenges are there, but they're not too worried. They'll watch out for in the next couple of quarters how that shapes up as well. They're seeing good order pipeline that comes in the industrial product side as well. So they're seeing good inflows in terms of orders coming from pharma, chemicals and FMCG. Apart from that, data center, that's a good opportunity for them in two fronts, cooling as well as boiler. And they said that there is one of the orders that are they're in talks with some of the global players on the data center front. So we could see that order win coming in or an order coming in soon. Q1, Q2 may be something that we'll watch out for. The company said that on the raw material front, in Q4, they didn't have any issue. Q1 is what they'll watch out for. Till Q4, they had enough inventory. Now, that is something that they'll watch out for. And maybe an impact could come in Q2 and Q3. If the West Asia war continues, that will be a concern for them. But apart from them, a lot of opportunities that come in for them on the coal gasification front, and apart from that also bio-CNG, which they've been working on, is a key data point for them. So there are some of these positive highlights that have come in from the company. Order book continues to be very strong, so revenue visibility is there and new opportunities for them.
Well, thank you so much, Vinny, for joining us, giving us all of the reasons why Thermax is doing so well. Order book strength is something that the street clearly likes. And as you can see on the bottom of your screen, the results of Titan are out. Net profit coming in at a little over 1,100 crore versus the CNBC TV 18 poll of over 1,300 crore. We'll need to wait and watch in case there is any one-off items in this particular profitability that the company has gone ahead and reported. Now, in terms of Titan, it'll be very important to see, well, the revenue numbers are out as well. Revenue is much above what the street was anticipating. Revenues at 23,934 crore versus our poll of much lower than that particular number. On the back of these results, you're actually seeing the stock react negatively. The stock is now down to the day's lowest point, down over 1%.
We already knew the Q4 update where the consumer business revenue was up 46%, the domestic revenue was up 42%. While we are talking about the revenue number being much higher, the expectation was of a 49.5% growth. This time around, the growth has been much higher. So it did look like a revenue beat for sure, but the net profit is absolutely in line. So we need to check out for internals what happens with EBITDA, what happens with margins, because the EBITDA is expected at 2,128 crore rupees, which on a standalone basis is also expected to go higher by 48%, and margins are expected to be flat at 10.6%. So just trying to get more internals and the financial performance as well. The company says that the jewelry portfolio grew 50% at 18,195 crore rupees, which excludes bullion and DigiGold sales. The watches business, the analog watches business, grew 15% during the quarter on the back of continuing premiumization trends. During the quarter, Titan successfully completed 67% acquisition of Damas Jewelry, and this is something that they will be growing further. So these are some of the highlights that the company has given as well. The consolidated income is up, of course, much higher than the poll, has come at 23,934 crore rupees as well. So these are the basic numbers for now. The
key number we need to watch out for, yes, of course, like you rightly mentioned, some of the key highlights from the management, what the management indicated. Now, remember, a 7% kind of growth is what, we believe has come in. The management guidance, I believe, was slightly higher. And the other important thing is, higher studded jewelry, higher margin jewelry, But you said that, the results that have come in are X of
yes,
the coins that have been sold and the bullion that has been sold. So we'll need to keep an eye out on the internals. So in that case, the results may not be as bad as what the bottom line performance is indicating. Mangalam, of course, tracks the space very closely, and he'll be joining us as well. But as you can see, a little bit of a brief recovery as far as the stock price is concerned.
But I think we do have Mangalam with us. We'll go across. Okay, we'll do one thing. We'll take a break. We'll come back and go across to Mangalam after just looking at the internals to understand what did he make of the numbers. Stay tuned for that. Welcome back. Well, it is an earnings heavy day. We are just getting State Bank of India's numbers for you at the bottom of your screen. So net profit is 19,683 crore rupees, which compares with a poll of 19,455 crore rupees. So it's a 200 crore rupee beat that has come in SBI's number as we speak. Now, do remember the stock has been quite volatile. It did fall sharply from the highs of the day at around 12:30 p.m. and did recover from that. And again, there was a fall. So the stock continues to be at the day's low. The net profit, a slight beat as far as the expectations are concerned. But of course, we have to watch out for the asset quality, the NIMs, the net interest margin that is, and what has been the NII growth. So NII has come in lower than CNBC T18 poll by around 2,000 crore rupees. And that is something that the street is taking note of as well. So the NII around 44,000 crore rupees, which compares with a poll of 46,000 crore rupees. That's the number for SBI for now. Let's take a look at the internals as well and understand what is the net interest margin this time around and what are the other parameters. In fact, let's do one thing. Let's go across to our colleague Ritu of what is she making of these initial numbers and what will be important to watch out for in the numbers. Ritu.
Well, thanks for that, Sonal. We've just got the headline numbers, the profit coming in at 19,683 crore rupees. That is just a tad above what our poll was estimating. In terms of the other numbers that are awaited, I can see the asset quality. On the net NPA number, it is pretty stable, but the gross number has actually improved. So the gross NPA has come down to 1.49%. And if you look at the asset quality, that has actually been the big success story as far as SBI is concerned in the last several quarters. And these are decadal low numbers, certainly going to be taken well by the street, at least as far as the asset quality is concerned. Profits, there you have it. It is, grown by about 5.6%. Keep in mind the big swing factor for this particular quarter for most of the banks, and especially for SBI with the large treasury book, has been the treasury income loss on account of what we've been seeing in the bond market. So that probably has impacted the profitability. Net NPA numbers on your screen as well. They're flat at 0.39%, as I was pointing out. Gross NPA has actually come down further. The net interest income is at about 44,380 crore rupees. It has come in below what our poll had suggested. So we'll have to see, what the miss there has been. But overall, it looks healthy. If I, quickly just pull up the operating profit as well for the quarter, looks at about 27,000 crores compared to about 32,000 crores that we saw in the previous quarter. So there's a decline in operating profit that we've seen as well, sequentially coming in for State Bank of India. Let's do one thing. We'll bring in our experts while we pour through some of the details of the numbers. Samir Sawant, research analyst at Mirae Asset Share Khan, is with us. Gurmeet Chadha, managing partner and CIO of Complete Circle, will also be with us shortly. Samir, thanks very much for joining in. First thoughts on the SBI numbers?
So, very stable set of numbers on the asset quality front that we were expecting. Gross NPA at 1.49%, I think, has been an outstanding performance. They were already at 1.57%, so further down at below 1.5%. I think on the asset quality front, they have done well. I think on NII, there is a slight.
Okay, we're unable to hear. Okay, we'll try and connect with Samir again. We had him on a bad line, but some more numbers coming in. Just take a look at the numbers on your screen in terms of absolute numbers as well. Asset quality, it's not coming as a surprise. Let me just make it clear. It's not a surprise the asset quality has improved. It was expected from SBI this quarter. What we'll also watch out for is the provisions, because remember, ECL provisions is going to be a big question factor as well. What kind of provisions are SBI chooses to start setting aside, if any, from this quarter, any impact of the West Asia crisis. All of that will be very closely watched for. But the stack of NPAs, the gross NPA, overall 73,452 crore is what we're seeing. And the net NPA is at about 18,800 odd crores. We'll wait for more details on the slippages that typically come in with a bit of a lag in the presentation. That's an important one to watch out for. But overall, it's looking like a stable quarter for State Bank of India with the expected improvement in asset quality that was likely. Now, another battle this quarter for most banks has been whether or not they're able to hold on to their margins, with the RBI rate cut being factored in. For SBI, the commentary so far has been that they'll stick to that around 3% kind of a number for the full year. In the last quarter, they were at about 2.9% margin. So we'll have to see what this quarter's number looks like. But, so far, from the numbers that we have, it looks like a decent set. Samir is back with us. Samir, we lost you there. You said net interest income was a bit of a miss compared to what you had penciled in.
Yeah. So I believe this will be mostly on account of slightly fall in NIMs on a frequency basis. From both PSU banks, that NIMs have declined. So, the impact of repo rate cut has been fully, I think, being factored in the net interest income. So, that is why NIMs have fallen. But on the profitability front, I think it is mostly in line with our estimates. Also, 19,683, we are expecting around 19,000 around number.
Okay, and in the operating profit as well, any concern there? It's a bit of a decline from the previous quarter, but I suppose not a big surprise there, Samir.
Yeah, I think on the operating profit front, we believe that previous quarter had to issue dividends and all. So if you exclude that, I think the numbers are decent enough. Previous quarter, I think they had around 2,000 odd crore of special dividends. Yeah. So this time around, the numbers, I think, if you exclude that factor, our operating profit is pretty decent.
Okay, just to recap the numbers for our viewers, this is, by the way, the highest ever annual net profit that we've got from State Bank of India, at 80,032 crores for the full year. This is the highest ever annual net profit that we've got from SBI. It's a year-on-year growth of almost 13%. The operating profit for the full year, again, at 1,23,000 crores. These are full year numbers. The retail term deposits have registered a year-on-year growth for about 14.77% again for the full FY26. The agriculture advanced portfolio has also crossed 4 trillion during the year. The ROA at 1.12% for FY26, which looks to be healthy. And again, if you recall, the management had guided that they would be able to retain this 1% kind of a level. As far as the ROE is concerned, ROE also at 18.57% for FY26. The gross and net NPA ratios, by the way, it's not just lowest in a decade, it's lowest in 2 decades is what the bank is telling us. And for the full year, we have the slippage ratio that has come in at 0.54%. Credit costs at 0.37%. These are looking like very good numbers, at least as far as asset quality is concerned. Let me just repeat for our viewers, for the full year, FY26, the slippage ratio is coming at 0.54% and the credit cost at 0.37%. So looking good there, from the numbers. We'll do one thing. I'll toss it back to you guys in the studio as we look at more numbers and try and connect with more analysts to make sense of these, numbers that have come in. But overall, it's looking like, a solid set from SBI. No surprises so far, but of course, we have to wait for the finer details.
Well, thank you so much, Ritu, for taking us through all of the key highlights as far as SBI is concerned. That particular stock post results has seen quite a sharp knock, almost 5% lower. On the other hand, Titan, that saw a sharp dip, has recovered and is now trading near the day's highest points. An action-packed show as far as mid-cap radar is concerned. We'll take your leave on that note. And MF Corner, and we'll return.
Hello, welcome to Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, obviously, Nifty, as of now, is at 24,170 levels. We've seen a further dip coming in the last few minutes as well. We have a couple of numbers that came in as well. SBI, Titan, all of that came in. Now look at it. When you're looking at Nifty, we're seeing a further decline and then a recovery coming in from that absolute low. SBI numbers and contributors. Let's look at the contributors for the Nifty 50, right? The top drag coming in now for the Nifty 50 is banks. So SBI leading that in terms of the drags. Then we have ICICI Bank, HDFC Bank, Axis Bank. All these are the drags coming in for the Nifty 50. Reliance also on the drag side. While in terms of what is supporting the market, what's pulling the market up, Titan, Infosys, Asian Paints, Apollo Hospitals. Titan also seeing a sharp up move. You saw the chart just a short while ago as well. A sharp up move that came in for Titan also after its numbers saw a dip and then a recovery there. So SBI on the drag side, Titan on the upside. That's the move coming in right now for the Nifty 50 in terms of the earnings that have come in. But overall, mid-cap also again has come back a bit on the green side. So let's watch out for that as well. It fell very sharply at around 12:30 and then a recovery that came in almost near the green side right now for the Nifty mid-cap. So watch out for that. A recovery coming in on the broader end of the side. Small cap still holding on to gains of 0.4%. So quite resilient at least on the small cap side of the index. But yes, let's move on and get started with the show then. And this is a show where we solve all your stock related queries. To do just that, we have Vaishali Parekh, Vice President Research at Prabhudas Leeladhar, as well as Shaina Mukaddam, Independent Market Expert. Shaina as well as Vaishali, good afternoon. Thank you so much for joining us on the show as always. Let's get started with the queries. The first query for today is coming in from Priyanka S, who's writing to us from Kerala, holding 180 shares of TCS. Price is 3,150 rupees per share. Wants to know whether she should continue to hold this one or get out of the stock. Shaina, good afternoon. IT, obviously, you know, we've seen this move coming in here for IT. Nothing has been that exciting. And specifically the large cap IT names, right? So what should she do with TCS now? Hold or sell?
Good afternoon, ladies. Yeah, it's a difficult call actually because large banks, large IT companies, nothing seems to be really doing well in this last couple of months. Having said that, I think after the corrections that we've seen, the valuations have become quite attractive. We've seen these corrections, one, of course, on back of slowdown in terms of revenues. Like, for example, TCS, like FY26, the revenues were almost flat. And a lot of FI selling also, that has happened. But if you look at valuations currently, the TCS, if you look at EV by EBITDA, it's about 11 times 1 year forward, which in my view is not expensive. And yes, it's been a transitioning year. They are ramping up their AI-linked revenues. Like last year, if it contributed about 7.5% of turnover, I believe over the next 1.5 years, it could go up to 10%. So that could be a good performing segment. So I would say, if you know, these stocks, in my view, large banks, large IT companies should be in your long-term portfolio, which should not account for more than 1/3 of your total portfolio. So I think to that extent, you need to review how it figures into your portfolio and accordingly hold it. And if it is a small percentage of your overall portfolio, it gives you that cash, you know, it gives you that liquidity benefit. So I would say continue to hold for the long term.
Okay, continue to hold for the long term. That's a word there. Vaishali, what's your thought coming in for TCS as well? They bought it at 3,150 right now. Obviously, they're making a loss on this one. But does this give them a chance maybe to look at averaging? Fundamentally, you know, long-term story seems fine. Technically?
So, very good afternoon, ladies. I think TCS of all the IT stocks has been quite a laggard. Now, talking about it technically, I think 2200 is the final support and it's in deep oversold. So, one can expect a bounce from here on. But if you ask me and if you think of averaging out, I would say add Persistent or Coforge because that is what is already showing signs of reversal. And those are the stocks which really give good rally once the IT sector picks up. So continue holding TCS, but I would say add Persistent or Coforge to get the better in IT sector.
Okay, that's a word there on the technical front as well. Let's move on then to the next query. We have Rakesh Kumar, who is writing to us from Bangalore. He had bought 600 shares of CEAT. Price is 4,017 rupees. They're making a loss on this one. The stock is currently at 3,325. Wants to know whether he should wait out for the stock to see a run up again, come back to his levels or exit the stock. And if he exits the stock, what should he buy? What should he maybe look at on a short-term basis? Shaina, your view?
I believe he should continue holding CAT. One is actually because they're reporting excellent numbers. Two is the valuations are quite attractive. If you compare the EV by EBITDA is just about 7 times. They are doing pretty well. If you saw the fourth quarter numbers, the growth was quite strong. They have shown a good growth both because of replacement market picking up, also in terms of OEMs. Actually, as you know that the volumes are going up. And if you look at the balance sheet, it's quite strong. So it is a strong management, strong balance sheet. Overall operational ratios, parameters are improving. The ROC, ROA. So I would suggest continue to hold.
Okay, you would suggest continue to hold. On the technical levels also, Vaishali, how is CEAT looking like? And if you suggest them to exit, then is there anything else they could look at for the short term to buy?
No, I won't ask them to exit because, first of all, technically it's given a very good corrective move. And we may see a further more correction, maybe towards the level of 3,000. But overall, when I'm looking at the whole tire sector, like JK Tires, etc., CAT 2 is at a very good level. So I would suggest average out at 3,000 levels. And once we see a rally setting in, one will get good returns from here on.
Okay, that's a word coming in there on CR on the technicals. On that note, we're going to slip into a very short break. Don't go anywhere. We'll be coming back with more of a stock-related queries after the break. Stay tuned in. Welcome back to Your Stocks on CNBC TV 18. Let's keep it going with all your stock-related queries. We still have with us Vaishali Parekh as well as Shaina Muqaddam. Let's move on to the next query, ladies. Then we have this one also coming in from the IT pack, right? Ramakrishna is writing to us from Telangana, holding 600 shares of Coforge. This is at a price of 1,271 rupees. Should they hold or sell this one? Fundamentally, how is this looking like, Shaina?
I would suggest that the investor takes some money off the table. The fourth quarter numbers were very healthy. And because of that, we've seen the stock again start to move up. After 3 months, we had a lot of FI selling that happened in Coforge, because of which the stock had corrected substantially. And now we are seeing a bit of bump up. I think the investor should take this opportunity to part book profits, because in terms of valuation, now at current levels, it is almost, in fact, it is slightly more expensive than the large cap if I compare it with, let's say, a TCS. On a EV by EBITDA basis, it's about 12 times. So I would prefer that he partly switches from Coforge because the business, in my view, is similar to some of the larger companies. So take some profits off the table.
Take some profits off the table. That's a view coming in on the fundamental front. For this week itself, the stock is up almost 14%. Vaishali, what's your view then?
Well, technically, it is a bit of a contrarian view because it has given a breakout. After seeing a good consolidation, it has, in fact, since 2-3 days, we are seeing very good volume. So to make things safe, I would say keep a stop loss of 1280 because the way today's candle is and what we are seeing, it has come out of its consolidation. I would say that it maybe the worst is factored in and we are looking at a target of 1600 from here on. So safe, keep a stop loss of 1280 and ride through the rally.
Okay. Keep a stop loss and then ride through the rally. That's a word on the technical front. But let's move on and talk about the next query then. We have Sriram who's writing to us from Chennai, holding 60 shares of Sona BLW. Price is 320 rupees per share, right now at 578. The stock is trading at. Fundamentally and long-term view on this one. Shaina, suggestions for this one?
Here again, I would suggest he books half the profits. Takes off half the quantity that he holds. While the numbers were very strong, I believe in terms of valuation, it is slightly more expensive, despite that the stock having consolidated over a long period of time. And here I believe that the family settlement that is likely to take place is going to keep adding to the news going forward in the shorter term. So there are better stocks in the segment. So I would book half the quantity.
Okay, you would book half the quantity. That's the word on the fundamentals. Technically, Sona BLW?
So depending on the time horizon that the person is ready to hold, for a shorter term perspective, 560 is the support level. If that breaks, then of course it can see a further bit of correction. But if you're looking at a longer term perspective, even on a weekly chart, I'm seeing that the stock is getting in a trend. So 540 acts as a very good support, and in all likelihood, this can gradually progress towards 650, 680 levels. So this is the way to hold this stock. Short-term perspective, please keep a stop loss of 560. But for a longer-term perspective, the range is 540 to 650, 680.
Okay. Sure, that's a view coming in there on Sona BLW. Just a quick check in terms of SBI because we're seeing a further fall coming in. We did have the slippages that have come in as well right now at around 5,521 for the quarter. So we are seeing a bit of a fall there. CASA ratio, furthermore, internals and details have come in for this as well. And NIMS also coming in at 2.81. Look at the slippages, 5,521 versus last quarter of 4,458. So seems like the stock is just seeing a nosedive now and down more than 7%. Day's lowest point is what SBI is trading at. Let's move on then to the next query for today. We have Hitin who's writing to us from Gujarat, holding 50 shares of HCL Technologies. Price is 1,305 rupees per share. Making a bit of a loss on this one, but one more IT company. So your suggestions on this one, Shaina? Everyone's interest has started coming back in IT and they want to know a lot more of what they should be doing now, continue to hold. Some of them have started doing well, right? So long-term story for HCL Tech.
I believe the long-term story is quite intact for HCL Tech, despite having a not so good year, FY26. Here also valuations, now these are all becoming similar, 11, 12 times EV by EBITDA. But I would prefer HCL Tech because of their foray into AI, the way they have structured their AI business. I think that is going to drive their growth in FY27. And their order book position also, their TCV is also quite healthy to support growth going forward. So I would suggest you can continue to hold HCL Tech.
Continue to hold HCL Tech on the fundamentals. On the technical front, what is it looking like? Anytime soon that they'll see the buy price of 1,300, Vaishali?
So right now there is no sign of reversal. In fact, trend of all periodicity is showing a downward trend. But only consolation is that it's in deep oversold. So I would say continue holding with a stop loss of 1120. And once this stock moves about 1250, can we expect it to bounce further and show some strength? So till then, it's a wait and watch scenario. Hold with a stop loss.
Okay, hold with the stop loss. That's over there. Let's move on to the next query. We have Shaleen, who's writing to us from Ahmedabad. He's holding Dr. Reddy shares. I've not mentioned the price, but wants to sell part of it and invest in Reliance Industries. Is it okay to do it now? What is the suggestion on this one? Shaina?
Yes, he can actually, in my view, switch part into Reliance. while Dr. Reddy itself, the numbers should be reported in the near term, will report decent numbers. We are expecting something like a Q4 growth of about 17-18% revenues as well as EBITDA. And valuation is also not that expensive. If you look at the EV by EBITDA, it is just about 12 times 1 year forward. But at the same time, I think Reliance also makes sense because valuations are similar to that of Dr. Reddy. And in the near term, I believe the listing of the IPO and listing of Geo will be a value unlock, near-term positive. In fact, Geo should do pretty well by itself as a standalone once it's listed. I think that's a positive. And retail is also doing well. Now you have an issue in the O2C segment, which hopefully will be resolved in the near term. But I think it's a good, you can partly switch, hold a 50-50 or both.
Okay, hold 50-50 of both. That's a word there for Dr. Reddy's and Reliance. But on that note, actually, we're absolutely out of time on this edition of Your Stocks. Vaishali as well as Shaina, thank you so much for joining in, as always, helping our viewers get answers to all their stock-related queries. Hope you'll have a great weekend. And viewers, thank you so much for tuning in to Your Stocks. Last hour of trade is still left. And for that, you have closing bell up next. But please do send us your queries on the email address and the phone number at the top of your screens.
Market headlines, to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
We're seeing a bit of a red start coming in here, right? Taiwan index quite muted, 0.02% decline.
Somebody said, what's your plan? I said, the plan is very simple. Iran cannot have a nuclear weapon. It cannot have a nuclear bomb.
The latest news is that US and Iran exchanged fire in the Persian Gulf.
Main reason to do the acquisition
is access to the US market.
24,200 on the Nifty, 0.5% lower, 0.6% down on the Nifty Bank.
We are looking, alumina prices will be stressed because of the excess alumina in the market.
Not in terms of market share in respect of equity derivatives, which I have always told.
On Q2, Q3, that will be a concern that they'll watch out for in terms of challenges of raw material prices as well.
Key highlights from Q4, the complaints per million tests were down 34% year on year.
So to the extent there could be some, negative headwinds, insofar as America is concerned.
I think the time has come now to say that I have decided that she is the worthy successor.
It's been quite volatile actually, but the Bank Nifty, which is underperforming, is leading to the pressure on the markets.
Okay, last 60 minutes coming up. The day so far, of course, flashed on your screens. We're down about 160 odd points, and this is the last hour today and for the week as well. This is closing bell. It's going to be earnings, and more earnings, which we're going to get by. Intellect is flashing at the bottom of the screen, but there is more which has come through in the last 60 minutes and more ahead as well. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi, afternoon.
Hi, afternoon.
Hi, afternoon. So Intellect has reported a sharp margin contraction, though the revenues have gone up by nearly 16-17% on a year-on-year basis. But for the markets, we've been struggling below the 24,200 mark. Benchmark indices are down close to about 0.7%. Banks have been selling off very sharply. The Nifty Banking Index is down nearly 800 points. The mid-cap index was managing to hold up in the green for a greater part of the trading session. But again, it's flipped into the red, but there is no deep cut. The advanced decline ratio currently has about 1,350 stocks in the green for 1,700 in the red.
I think the problem is in the last 30 minutes, we've got two results. Outsized result reactions is what we have seen from the Nifty pack itself. Titan, the street likes it. So we'll analyze those numbers. Mangalam will join us in just a bit. That stock is flying away now, up closer around 6%. And on the flip side, SBI, at least prima facie, it appears it's a little bit of a weakish set. And that explains why the stock is down closer on 6.5%. Some more clarity is required on this one, I think so. But for the time being, the initial reaction is very, very negative. So we'll have to keep an eye out on that one. But guys, let's tell our viewers what we have on the show.
Well, indeed. Let's straight away get to that. It's earnings galore in the final hour of trade. We will talk about State Bank of India. The stock has fallen 6.5% to the day's low after their Q4 numbers. So we'll discuss that in greater detail. There's a press conference. Also, on the flip side, shares of Titan are up 6%. It's a stellar rally post-quarterly numbers, a detailed earnings fine print coming up on the show, a roundup of all the earnings action that we've seen in the FMCG space. So we'll put the spotlight on Dabur, Pidilite, Britannia, all that on closing bell. Before now, let's get in a few technical trading ideas. Mitesh Thakkar is joining in as always. Mitesh, slip some more, particularly it's the PSU banks which have taken a knock, led by State Bank of India. What's the trade?
I think, I said this in the morning as well that we might just go back to the range and contract again. And I think that's what is happening. And as you rightly highlighted, the Bank Nifty is also a part to it. See, the important levels for the Bank Nifty is close to about 54,700 zones, which is still about 500-600 points away. But if we start seeing the Bank Nifty break below that, I think that could then, pull the Nifty also into a negative territory. But for the time being, it's still a market which is contracting and more of directionless volatility. And on the stock side, I have a buy on Apollo Hospitals with a stop below 8,000 for targets of 82.70. And Dalmia Bharat Cements is a sell with a stop at 18.60 for targets of 17.70.
Okay. Got that, Mitesh. We'll just come back to you. A bunch of more questions. So much happening, right? So much movement as far as stocks go. But State Bank of India, management is ready, and the press conference on the back of the numbers. Listen in.
And senior officials of SBI who are present with us this afternoon. दो लाइनें अगर राइमिंग में बोलूं स्वागत में आपके, तो आपको बुरा नहीं लगना चाहिए शायद. आप आए फिजा महक गई. आप आए फिजा महक गई. आप आए बज़म चहक गई. आप आए रंगत आ गई. आप आए रंगत आ गई. आप आए महफिल जगमगा गई. We sincerely appreciate for your graceful presence. आपकी गरिमामयी और आभामयी उपस्थिति के लिए आपका हृदय से अभिनंदन, आभार, धन्यवाद, शुक्रिया, मेहरबानी. Now I request our chairman sir to please address the media and present a comprehensive overview of SBI's financial performance for the quarter 4 financial year 26. Over to you, Chairman, sir.
Good afternoon, ladies and gentlemen. Thank you for joining us today following the announcement of our Q4 and full year FY26 results. At the outset, I extend a warm welcome to our colleagues from the media and my fellow members of the SBI family. I also wish to acknowledge with deep appreciation the continued trust placed in us by our customers, shareholders, partners, and the broader financial ecosystem. This trust is not just an enabler of performance, but also the foundation on which we build enduring value. Let me start with a brief description of the present global and domestic economic scenario. We are meeting at a time when the global economic narrative is being rewritten in real time. Global growth is projected at 3.1% in 2026 and 3.2% in 2027 by the IMF, reflecting a phase of moderation amid persistent geopolitical uncertainties and evolving trade dynamics. In contrast, India continues to stand out as the fastest growing major economy, with growth projected at around 6.9% for FY27 by the RBI. This resilience is being driven by strong domestic demand, improving investment activity, and policy stability. However, we remain mindful of emerging risks. Recent geopolitical developments and weather-related disruption, such as El Nino, may introduce some downside risks to growth. On inflation, CPI is expected at around 3.8% in April, with a full year projection of 4.6% for FY27. That said, global energy prices and climate-related factors may create some upward bias. From a banking system perspective, credit growth remained strong at 16.1% in FY26, while deposits grew at 13.6%. Encouragingly, this momentum continues into FY27, with credit growth at 15% as of mid-April, compared to 10.3% last year, and deposit growth standing at 12.2%, up from 10.2%. Looking ahead, we expect credit growth in the range of 13 to 14% and deposit growth at 11 to 12% for the whole system. Asset quality across the banking system remains robust and capital levels are comfortable, providing sufficient headroom to support future growth. Alongside these traditional indicators, two structural shifts are redefining the operating environment for banks. Recent developments in advanced AI models have highlighted the increasing sophistication and speed at which vulnerabilities can be identified and exploited. This has placed the Indian banking system on a heightened state of alert. The industry is working closely with the Government of India and the RBI towards a coordinated cyber resilience framework. Secondly, the RBI's guidelines and transition to expected credit loss-based provisioning from April 2027 mark a significant step towards strengthening balance sheet resilience. At SBI, we are well prepared for this transition. Against this backdrop, our strategic focus is to drive high-quality growth with simplicity and resilience at the core. We are consciously moving from a paradigm of scale-led expansion to one that emphasizes productivity, capital efficiency, and risk-adjusted returns. Every strategic initiative we have undertaken over the past year is anchored in this shift. We are deeply aligned with the vision of Viksit Bharat as we continue to see ourselves as a systemic enabler of India's growth story. Our long-term strategy is therefore designed to be both commercially sound and nationally relevant. A cornerstone of this transformation is Project Saral, which I mentioned earlier also, our operations process reengineering initiative, which is a structural reset. Having launched the first wave of identified themes, it challenges legacy constructs and reimagines the bank through the lens of simplicity and customer centricity. Key initiatives from the first wave include universal branch access, dismantling the traditional home branch mindset, single KYC across products, and automation of back office processes such as inward clearing using GenAI. Parallelly, we are investing deeply in becoming an AI-first organization. through our Analytics 2.0 initiative, we are embedding AI across the value chain, moving towards a truly data-driven operating model. In response to increasing financialization of savings, we are deepening customer engagement through YONO, ecosystem banking, and targeted offerings for diverse customer segments. We are also actively building relationships across startups, AIFs, VCs, and global trade ecosystems to diversify and future-proof our portfolio. As the largest bank in the country, our responsibility extends beyond performance to stability. Our centralized cyber cell operates 24/7 as a unified command center, reinforcing our commitment to secure and resilient banking, combining technology and human expertise to respond swiftly to cyber risk. Each of these initiatives is designed to deliver measurable gains in efficiency, stronger risk controls, and sustainable profitability. In the above backdrop, let me now give highlights of bank's performance in FY26. I'm glad to announce that we have posted highest ever net profit of 80,032 crores, an increase of 12.88% year-on-year in FY26. Operating profit for FY26 increased by 11.25% year-on-year to 1.23 trillion. ROA for FY26 is at 1.12%, an improvement of 2 basis points on year-on-year basis. Return on equity for FY26 remained robust at 18.57%, despite raising of 25,000 crores equity capital in July 25. Domestic NIM was at 3.03%, supporting our guidance to maintain NIM above 3%. I'm happy to share that our total business has crossed 109 trillion rupees, reflecting customers' continued trust in us. In fact, our domestic business has grown by more than 11 trillion on year-on-year basis. Our balance sheet size has crossed 76 trillion rupees. Bank's total deposits have grown by 6 trillion rupees at 11.03% year-on-year to 59.76 trillion rupees. Retail term deposits have grown by a robust 14.77%. Savings account deposits have witnessed a growth of 10.6% year-on-year, and CASA deposits have grown by 9.53% year-on-year, with the CASA ratio at 39.46%. We've been able to improve our CASA ratio by 33 basis points on quarter-on-quarter basis. The deposits growth remained healthy, with growth in double digits despite competitive market environment. Deposit our foreign offices have grown at 12.7% on year-on-year basis, but in USD terms it is 2%. Credit growth has been robust and all segments have registered double-digit growth. In FY26 and on year-on-year basis, domestic advances grew by 16.33%, driven by all segments, SME by 21%, agriculture by 20%, retail personal advances by 15.22%, and corporate advances by almost 15%. Retail, agriculture, MSME, popularly known as RAM portfolio, has crossed 27 trillion rupees with year-on-year growth of 17.11%. Our foreign offices have continued to perform well with growth in advances at 20% year-on-year. In USD terms, it is 8%. The domestic credit deposit ratio was 73.08% at the end of FY26, an improvement of 337 basis points year-on-year. The bank has enough headroom to address future credit growth requirements. Our asset quality continues to be healthy. Our gross NPA ratio has improved by 33 basis points year-on-year and stands at 1.49% as at March 26 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, proactive management, structural integrity, robust underwriting capability, and sustained recoveries. Our net NPA ratio has also improved by 8 basis points and stands at 0.39%. The consistently improving asset quality is also reflected in our credit cost, which is at 0.37%. The NPA book is well provided with PCR at 74.36%. The bank remains well capitalized and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio has improved by 115 basis points year-on-year and stands at 15.4%. CET1 ratio has also improved by 148 basis points to 12.29%, and both the ratios are well above regulatory requirements. Digital adoption is central to our vision, enabling a multi-pronged transformation focused on enhancing customer experience while optimizing costs. By shifting 98.7% of transactions to alternate channels, we are scaling both efficiency and growth. The successful rollout of the new YONO platform has become a massive acquisition engine with over 4 crore users in just 3 months' time. Now, YONO has more than 10 crore registered users. 66% of new saving accounts originating on YONO platform in FY26 demonstrate our successful transition to a digital-first institution. We are effectively meeting the evolving needs of new generation and a diverse nationwide customer base through our formidable physical and digital channels. Our subsidiaries continue to perform strongly and remain leaders in their respective segments. They are important drivers of value creation, and we will continue to nurture them. If I were to summarize our approach, we are building a bank that is simpler in processes, smarter in decisions, stronger in balance sheet, and sharper in customer focus. We are proactively strengthening our CASA base and empowering our workforce to lead in a transforming financial landscape. We are actively reshaping our balance sheet by enhancing digital capabilities, broadening funding resources, and leveraging YONO for customer acquisition. SBI, by virtue of its scale, has always been a reflection of the Indian economy, and we aspire to not just remain a participant, but have become a key enabler of that journey. To conclude, I would like to thank all of you once again for your continued engagement and support. We remain committed to delivering sustainable, responsible, and long-term value.
Okay, well, that is the SBI Chairman, Mr. Sethi, with the numbers, and there will be Q&A. We will cut back to it when we have that starting up. Gurmeet Chadha is with us. Gurmeet, thanks for waiting while we were on State Bank of India. Just your first sense on the numbers themselves, State Bank?
Prashant, I think there is the disappointment probably is on NIMs. We'll have to see if it's a one-time because of any provisions which have happened due to RBI interventions. We'll have to see that. I think he did point out that the domestic NIMs are above 3%, which is what the guidance was. Slightly the net NII growth is slightly softer than what we have seen for the full year. Although on a full year basis, the advances have grown 16%. And I think the guidance would be more important. Also, the stock trades at 10-11 times earnings, below 2 book. So it could be more due to the... so if more clarification can come on NIMs, it can come. Also, there is a slight increase in slippages, from, let's say, 4,500 crores to 5,500 crores. And that's probably the reason we are seeing a 5-6% kind of reaction from the market.
Be a buyer, Gurmeet, there's one theory which says that actually it's not a theory. PSUs have been doing a lot better. The cost of funding is lower. I mean, it's a structural advantage. They've got their game up and competing in a much better fashion as compared to the private lenders. So would you be a buyer on dips, SBI?
Yeah, so it's part of a portfolio, Prashant. So if there is a meaningful correction, yes, I think for 4-5%, you don't need to really change your view on something. I think what's important is that it's grown more than the industry. I mean, if bank of 109 trillion business can do 16% advance growth with 3% NIM, 18.5% ROE, and 10-11 times earning, it's pretty good. But it's not something which will give you, let's say, alpha. Alpha would probably come from some of the smaller banks, like, for example, Federal Bank has had a great turnaround since the leadership change. We saw Emirates checking into RBL, so that's turnaround. There are a lot of PE funds we have been discussing are chasing HFCs. You will probably see more deals coming. I'm in regular touch with a lot of PE funds who are approaching NBFCs and HFCs. So there's genuine interest, FDI interest in terms of giving growth capital. So I think that's the area where you'll get alpha. I think the top banks like SBI, even HDFC, ICICI at these valuations were probably just to steady the ship.
Okay, but it's a part of your portfolio, so it's a core holding in that sense, but big alpha will be generated in some of the smaller names. But let's talk about some sparkling numbers. Titan right on top. Mangalam joins in with his review.
That's correct. So the stock is doing extremely well in today's trading session. Now, the way the numbers are to be read, there are a lot of adjustments to be made. So if you look at just the reported numbers, revenue is a big beat on our estimates. EBITDA is a big miss. Net profit also is a big miss. But here's how you make the adjustments. The revenue at 23,934 crores. You take away 6,144 crores, which was sale of gold ingots and digi gold that the company had sold. This compares with a number of 864 crores year on year. Adjust for that and the EBITDA margins as well. They've come in at 20.3% versus 23.2%. These are gross margins, and the management themselves had told us that, because of so many moving parts, it's best to look at, EBITDA as a percentage of gross margins as against just the sales price as well. Adjusted jewelry margins, they haven't fallen much, and this despite higher sales coming in from gold coins, which are low margin business. So that's a positive as well. And net profit as a result of which is at 1,124 crores. The India business, jewelry business, grew at around 50%. 46% is the growth that we saw in their key brands, Tanishq, Maya and Zoya. And Carrot Lane grew 22%. International business, because of the Damas acquisition, came 174% higher. Minutes from now, we will have the management conference call, but they've uploaded the presentation, and here are some important key takeaways from the presentation. The first part is that their market share, now they're saying, is 8.5%. The same number last quarter was 8%, so that's a positive. Studded growth has come in at 35%, so that's doing well as well. Secondary sales up 54%. Because of higher gold prices, one would have thought that maybe buyer growth will come down. But for them, buyer growth is up 8%, and that's a bigger positive because it's higher than what we saw in the previous quarter as well. Coins grew 3x in value, so as a result of which there had to be some moderation in margins. But the other parts of the business growing well in absolute terms are doing extremely well. And Damas as well. It's Middle East-based operations, but despite all the problems out there, it's still done about 500 crores in revenue. So Titan last year did 50,000 crores in revenue, and within 1 year itself, it's gone to 76,000 crores in revenue. That's what the street is appreciating, and which is why the stock is higher, irrespective of what the analyst estimates were, because there are a lot of adjustments that needed to be made to that.
Thank you very much for that, Gurmeet. Titan a part of your core holding portfolio?
No, not really, but very good set of numbers. I think what impresses me, Rima, is just look at the unit economics. They are like 3,600 stores. They do 20,000 crores. You compare this with any other, let's say you compare this with a slightly lower like Tribhuvan, that's like 100 crores per store. Some of the other ones like Malabar, etc., and Kalyan would be 200, 250, that range. And the mix, which Manglam was talking about in terms of studded versus others. So I think one of the best unit economics. They also have this monthly recurring scheme, which I call it in our parlance, the gold SIP they do through Golden Harvest and others. Right now they're coming up with a tonnage scheme. You can actually accumulate grams of gold, right? And then you encash it on number of grams you've accumulated. So they also get a lot of this recurring flows, which help them manage inventory better, hedge their positions on inventory. Right now, obviously, there'll be inventory gains. And great franchise, but, honestly, 80 times earnings, very difficult to add.
So do you own any of the other jewelry companies? Because even they're reporting very strong numbers.
So we are evaluating a few of them. One is, as I said, we've been looking at Tribhuvan Das. It's one of the most cheapest name. But as I said, the unit economics needs a lot of change. We are tracking, which is a more contemporary one, which is Bluestone. But we haven't added anything yet. We are more happy playing with, the Muthoot Finance and some of the gold-based NBFCs.
All right. A couple of other smaller names, I think, spiked up, with those numbers of Titan. Gurmeet, if I look at Kalyan Jewellers, pull up the intraday chart out there. The street seems to be thinking, well, the largest players having a good run, maybe the others as well. So Titan moves to the high point of the day. I think Kalyan Jewellers took off to the races as well. Gadgil as well, I think, moved to the day's high. And all of this, as Titan came out with its set of numbers. Even Sky Gold is another stock, a smaller one, that I saw spike up. Business models may vary, but it seems suddenly the entire jewelry pack has taken off. But the big boy Titan is in its league of its own, as it's proved over the last few years. For the time being, sentiment positive though for all these other names. But Vinny joins us on the show. She's tracking Thermax. She's paid attention to the con call as well as the results. Tell us, Vinny, what are all the takeaways?
So firstly, afternoon, Nigel. Results obviously were good. We've spoken about it, right? Industrial products, industrial infra, those segments specifically have done well for the company. Chemicals a bit muted because of the current scenario that's going on. And green solutions, they're doing well in terms of revenue growth. That's a relatively new segment for the company. Now, obviously, our order book has seen a very sharp jump up, 4,490 crores, which includes a 1,600 crore order that came in on the boiler package front as well. What are the key highlights from the con call now. Let's move on to that. In the con call, the company said that they're seeing a good order pipeline, especially in the industrial product segment. And in that, what's interesting and which sectors are doing well over there? It's pharma, chemicals and FMCG. They've seen a good order pipeline on that front. Then they spoke about the West Asia war. They said that right now, in the current quarter, obviously they didn't see much of an impact coming in on the raw materials because they did have inventory for that. So it was enough for Q4. There was not a worry there. But if this continues, then Q2, Q3 possibly would see an impact, and they would talk to us about that in Q1 and highlight what would be the impact if they see any on that front. Middle East, they also said, they've spoken about in the past that it has been a very good opportunity for the company. Now, given the current scenario, as of now, they're not seeing any delay in terms of the West Asia or Middle East, whatever we call it, not seeing any worry on that front or delay on that front. But there is an opportunity that will lie for them going forward as well. Apart from that, what is the opportunity for the company? Data center, that continues to do well for the company. Two opportunities over there on the cooling front as well as the boiler front. It's a big opportunity for them. And there's a possibility of an order that could come in soon. They are in talks with some global player as well. So we'll watch out for the data center segment for them and how they're confident that they're going to be winning that order. Coal gasification, that's an important one for them. As of now, they're not in that segment particularly. But if there are any government push or support that comes in, then they would look at it. Bio-CNG, they're already there in that front, and that is an opportunity for them. So that will be a growth driver for them going forward as well. So these are the key positive takeaways that we have for them.
Okay, all right. Thanks a lot for that, Vinny. And, as we were talking about Titan, Kalyan Jewellers as well came out with a set of numbers. And that stock as well has moved to the high point of the day as we speak. Not just in sympathy with Titan, I think I saw a bit of a margin expansion even on Kalyan Jewellers. Mangalam will join us with a quick analysis on that name. I think we should get that stock up for you. In fact, it's given up from the top. Maybe the street wanted more. So that one has come in for some selling pressure. Gurmeet, what do you make of Thermax's numbers?
Again, very strong set of numbers. I think this entire space, Nigel, continues to do well and probably is the shining part of the broader market. I think the pressure basically has been on the frontline 10, 15 Nifty stocks, largely due to FS sell-off, which is large banks, Bharti, Reliance, others. We've been more, as I said, not related, it's more in the energy equipment space. We've been adding transformer companies. We've already have Polycab since IPO days almost. We've added Wari recently. They did a analyst call yesterday. So, they're given a target of, a very ambitious target of FY30 in terms of getting to a top line that implies like a 25-30% growth, going backward, going upstream as well as backward integration. And then, opportunities coming even in BESS as well. So that's something we like. And I think that's the latest addition to the portfolio.
All right, Gurmeet, thank you very much for joining in. Enjoy your Friday and the weekend. We will slip into a break. On the other side, Aman Chauhan of Abacus Asset Managers joins in. Stay tuned.
Okay, Aman Chauhan is with us, fund manager at Abacus Asset Managers. Aman, good afternoon. Great to have you with us here on the program. Thanks for joining in this Friday. You know, we've had a few round trips, 200 down, 100 down, 200 down, 100 down. We're down 100 now. Yeah, it's been that kind of a day overall. What are you doing, Aman, in terms of... it's actually been from the lows of March or the end of March, just a blistering one-way move so far, right? The 40 days or so that we've had. And we were looking at some of the data, 25 names out of the 750 names, NSE Total Market Index, up over 50%. 3 stocks in that index are up over 100%. You know, you wonder whether the same investors who held through the drawdown are the ones benefiting, or these are new investors. It was an impossible question to answer. What have you been doing since the end of March at Abacus?
Oh, so frankly, the last 1 week move has been a surprise to us also. We were all expecting a good bounce back once ceasefire or de-escalation happens, which did happen. But when that happened, crude was 90. Today it is about that, and market is even higher than what the ceasefire day announcement was. So the last week, 10 days move has been a surprise to us also. We have been net buyers both in the month of March as well as April, but frankly not aggressive in the sense that if we had say 10-12% cash in the portfolio, that cash has come down to 7-8%. So it's not fully deployed. At the same time, benefited out of this because used some of the cash in the fall, but frankly, the market has surprised us all, especially the last week.
So where did you deploy the additional money?
Bought more of renewables. We feel this could be the next big theme in the market globally, because in a high oil price scenario, government policies need to be favoring renewables. It could be everything: solar, ethanol, wind, or any other direct, indirect plays. We bought more of cap goods, some of the engineering names that has got added to. On the fringe, we would have marginally, you can say, decrease the banking exposure because we need some cash to move into some of the other sectors. So that's broadly what the action would have been.
The renewable ethanol kind of push on the equipment side, on what, or do you think sugar companies? What's the play there?
Yeah, so not sugar per se. So we have got more of solar renewable companies that we already have in the portfolio. We have added bit to that. We have a decent exposure into cables, wires, and the power ancillary space. So we added some of the names there. Then some of the capital goods engineering companies. So I will not call it a data center beneficiary, because that is something which is quite an abused word these days. Everybody and anybody is into the AI, trying to get something linked to AI to them. But these are capital good companies which anyway benefit from the T&D spend that is happening and from the surge in the power demand India is seeing. So it's a combination of all.
You know, yeah, I was looking, since I just looked at the numbers yesterday, and this, I don't want to ask you to comment on these particular stocks, but I'm just using them as an example because you said it's the rub-off AI data center, whatever, right? Look at this Sterlite Tech, 100 to 350 this year. There is HFCL, again, I mean, I guess in that space, which is up, I think, what, 150, 170% this year. Is that what the market is trying to do here with some of these names, in your opinion? I don't know if you've looked at these businesses in particular, Aman, the market trying to figure out where they could be, would these companies tie into this bigger boom?
So globally, what is happening is these companies were cyclicals, and like a commodity, you have a wild swing in profitability. The global theme right now that people are debating whether the cyclical nature of this industry, whether it is fiber optic or whether it is semiconductors, whether it is your storage or XYZ, can this be structural? Because the kind of spending that we are seeing on the AI infrastructure or the storage infrastructure is going to be huge. So if you feel that this is a structural opportunity, not just cyclical, then instead of earlier paying 5p for a cyclical stock, you are now okay to pay 20p. If you say that globally, stocks which have already been 10, 20, 30x, especially in Korea, some of the stocks in US and other markets, they still trade at 10, 12p. So there's enough scope for them to get further re-rated. And mind you, you guys have done this in the past with different speakers. these companies are adding $1 billion, $2 billion of revenue every month, right? So that's the kind of scale up these hyperscalers are seeing right now, right? So, and on top of that, if you start giving them a 20 multiple, which seems to be fair for a highly profitable, decent business, then there's still some scope. So the optic fiber names are happening because the prices have gone up. Suddenly demand has shot up for various years now. For multiple years, there was no new capacity that was coming up. And now with the orders coming in, new capacity is coming up, which will take another year to go. So for another year and a half, you have fabulous margins. That's the way commodities work, and that's the favor of the nation right now. Or globally, that's what the, you can say, interest is.
Yeah, no, there's no doubt. And it's just Sandus reported numbers, right? We were talking about and their memory. The average selling price went up 140% quarter on quarter, just sheer scarcity. I just looked at Samsung in another relation. We were just looking at the numbers because it's so unbelievable. The profits of Samsung were $30 billion in 2025. They're expected to be $200 billion in 2026, 7x in 1 year. So
And
some
this,
of
I'm told, is planning to add $1 billion of turnover every month. That's the kind of scale up they're seeing right now. Obviously, much of that is also because of pricing, but yeah, that's what the demand is.
It's just insane, right? I think it's like a the whatever capex super cycle of our generation by far. Do you?
I've seen similar move in Y2K era. There was a rush because you had a deadline.
Yeah.
What is happening now is a similar kind of deadline that I need to secure my chip or my cable or my asset before others do, because you don't know tomorrow if the technology changes, then suddenly this huge capex might not be remunerative, right? And right now the payback is less than a year. So the earlier I start, even if I enjoy one good year of super high margins, my capex gets justified, my IRR comes in. After that, even if technology changes or something happens, at least my cost of capital is secure. That's where the rush today is, that let's cash in as soon as possible, because right now the IRR is less than 1 year for any new capex that you do. So that's the rush. That was the Y2K rush, that there is a deadline, come what may, you have to do whatever you need to do before the date. I think it's something similar.
But do you think people are factoring that this is not going? They're walking in with their eyes open that something may change. I mean, this level of supercharged environment may not. Something changes, right? I mean, you don't remain at extremes for very long. You think everyone realizes that, or you think people are going to be caught off guard?
It's still early days. It's not going to be something. What can change? Tomorrow you have a processor which says that I can compute 100 times faster than what the processor today. Then suddenly you realize that if you wanted 10 gigawatt of power, now you need only 5 gigawatt, because now you have a super high processor which is already there, which will consume less energy. And hence you might not require 100 kilometers of cable, now only 50 kilometers of cable, something like that. But that's not going to happen overnight, right? So it's going to take time. So till that time, there is a rush to build those data centers, build the AI infra, and that will take time. So it's not that we are glaring at that risk right away. Someday eventually it will happen, because what will happen is we start to pay extraordinary multiple, and then multiples are bound to happen. Infosys traded at 1800 P, which is now down to 20 P, right? So that will happen, but it's going to take time. It's not going to happen immediately in a month or 2 months, or maybe a year or 2 years.
Just full disclosure, since I brought up two names, do you own any of them, Aman?
No.
You don't? Okay, got it.
Aman, I wanted to ask you about the other space that's been quite active. The ERW pipes, steel pipes as well. You all had bought a stake, I think, in a company or there, JTL Industries. Now, the entire sector has been actually suppressed for the last few years. But suddenly some interest is coming back, particularly in these smaller names, which trade at a big discount in comparison to the leader, APL Apollo Tubes. What's your view on the space? I mean, what are you all factoring in? A revival out here? If I look at these pipes, as a percentage of the total steel as well, it's rather small. So there's a big potential out there. What are you all factoring in?
For us, the whole space is a rubber of the positivity we held on metals. So for the last year or so, we have been overweight on metals, and we have been quite open about that. So we continue to stay positive on metals. So we are seeing an upsurge in the steel prices, and these sector benefit out of that, because one, you have an inventory gain, and when the cycle is on the upswing, there is inventory filling which happens. So instead of destocking, people want to stock more because they feel next month it will be even higher. So I want to buy as much as I can today, right? Something like that happening for the month of March for many of these companies. When the war broke out, people was looking out of wherever, whatever I can get, let me buy it because I'm sure April will be higher than March. So this is the upcycle that this sector is into, and that is what is going to help them. So they had 3-4 years of not so good times. Now demand is there. With a higher pricing power coming to them, margins will improve and earnings will improve. So that's the broad thesis behind it.
Got it. Okay, all right. Positive on the space on the whole. One of those companies, JTL, I think from 60 rupees when you all did the deal, has gone very quickly to around 80 rupees. But you all are positive on the entire space. So take that note, taking a note of that. Thanks, Aman, for joining in. Have a good rest of the day, and we'll catch up soon. In case there are any changes in your portfolio as well, we'll be pleased to discuss that. Appreciate you joining in. Well, time to slip into a short break. As always, technical experts on the other side. Stay tuned. Welcome back. Well, as promised, let's get in Mitesh Thakkar, who's joining in. Mitesh, we saw a bit of a pullback, but that's got sold into yet again. But I think, from a market perspective, still the breadth of the market isn't that bad on a day when the Nifty is down 150 points. What's the trends on the Nifty? And fill us in with, your take on a couple of stocks.
Nigel, I've been maintaining a wide Nifty because we're still in a contracting range, which is slightly dropping volatile. So, I maintain those levels. 24,400 is not yet crossed in closing basis. Yesterday, we kind of were there, but failed to get past. So, till 24,400 gets broken on the upside, I think around those levels, explore shorting or putting profits and try to buy those at about 23,850, 23,850. On the stock side, Kalyan Jewellers, the BTST with a stop at 420 for targets of 434, 435. And the other stock which I would like to recommend, that's BTST on M&M. It's kind of after today giving a pullback, so getting a fresh or better entry point. So keep a stop below 33.18 for targets of 33.17.
Thank you very much for that. Let's talk about BSC. Came out with a good set of numbers. Stock, though, is seeing some profit booking. Earlier today, we had a chat with the MD and CEO of the company, Sundar Ramamurthy. Listen in to what he had to say about the way forward.
The concentration is on monthly options volumes and more products. That is what we are looking for. We are making BankX sort of another product which we want to succeed. We are talking to a lot of people. It is showing some signs of success, initial success. We would like to work on it. Futures, we will work on it, and more indices on which monthly options and futures will be introduced. is what we are looking for as a next path of growth. Some of the people who are currently in the marketplace, who are already doing this type of trading in other places, who are not yet there in BSE, has to come into BSE. Further, there should be some minimum liquidity in other than current week's expiry, which is happening. But if you look at it, the liquidity is still restricted only to the current month and next month maximum. We should not be just having only this month and next month. We should have the third month, fourth month, up to at least 1 year the product should trade. So this is one thing, therefore, where we go and represent to the market participants should look into it and have some people who are ready to be on both sides of the market and provide liquidity for liquidity takers. That is what we are working on. And bringing in such of those institutions who generally look into the longer term part of the hedging.
That's Bombay Stock Exchange for you. The general insurance data for the month of April is also out. Here, showing it with the numbers and analysis.
Well, it's a weak start to the new financial year as far as the general insurance industry is concerned. And I would particularly say that it's been a weak start for the listed general insurance players. That's because, you know, the largest listed general insurance company, ICICI Lombard on the private side, that has underperformed industry average growth in the month of April by about 400 basis points. The company has managed to grow its premium just at about 1.7% versus industry average of 6% growth. Another company, New India Assurance, has grown its premium just by 1% in the month of April on a year-on-year basis. Industry average, as I pointed out, is about 6% growth. Niva Bupa, on the health insurance side, the same story continues. Listed players continue to underperform. Niva Bupa growing at 35% its health insurance premium in the month of April. Star Health growing its premium by 19%. Remember, on the standalone health insurance side, the industry average growth is about 35%. So two listed players there also underperforming the industry average. It's the unlisted large players which have performed very strongly in the month of April. So on the general insurance side, players like Bajaj General Insurance, Tata AIG General Insurance, HDFC Ergo, SBI General, IndusInd General Insurance, all these mid to large players performing ahead of the industry average and the listed players underperforming.
Thank you very much for that. Let's go across to Mangalam now for a roundup of all the FMCG numbers. Pidilite, Britannia, Dabur, all in focus.
All in focus indeed. Let's start with Britannia, the top loser in the space right now. The results were slightly weaker than street expectations. The street was working with a 10% revenue growth. The company reported 6.5%. And that was largely because of the disruptions that we saw in March. Jan and Feb, the company saw 9% growth. Importantly, that has flowed down to the EBITDA as well, where it's about 100 crore miss out there. And the net profit was supported by lower effective tax rates. So, you know, 1.5%, 5.5% is the volume that the company reported, which is 1.5% lower than what the street was anticipating, which is exactly why the stock is lower by 5%. The management has said they have started taking calibrated price hikes since the first quarter, and they will look at increasing their market share at the same time maintaining their margin profile going forward as well. On Dabur's front, the results were slightly ahead of street expectations, 6% volume growth, revenues in mid-single digits, and we had the EBITDA and net profit above expectations as well. But the important part out there, the home and personal care business, that grew nearly 17%, and the management was quite sanguine on near double-digit revenue growth in FY27, equal parts split between volume as well as value, and they too have taken a 4% price hike. They are intending to take some more to protect margins and maintain margins at 18.5%, which they reported for the full year FY26. And finally, Pidilite, a strong show coming in, nearly 15.5% volume growth for the consumer business, and the stock holding up fairly in the green right now. The management out there too said that their raw material basket has seen a 50% price hike, but they've managed to take bulk of those price hikes and pass them on, and they are steadfast on that 20 to 24% margin band, even though it'll be at the lower end of the guidance. The street likes the focus on demand and cost control.
Thank you very much for that. Anand Tandon is now joining us on the last leg of the show. Anand, just before this, we were chatting with Aman Chauhan of Abacus, and he said his big idea is the entire renewable theme, and it's spread across solar, wind, some of the wires and cables companies, or the capital goods companies which cater to this. Do you have a view on them? Because the stocks have done well. They've already started moving up on expectation that this is going to be a big theme and there will be some policy imperative.
Well, yes, the policy has to be that you have to protect this area, because on their own, the reality is that, take, for example, solar. The Chinese have a capacity of 140 or 130% of global demand. So if you were to try and compete with them without tariff protection, there is no chance that India will be able to do anything. Now, given the fact that they will have protection, you will find that this is a sector which grows. I don't find much excitement in actually the generation part of anything, because finally that is a matter of how you're going to price your debt. If you are going to be supplying, for example, to the grid and not necessarily to households, you are looking at a situation where you will have to be the lowest bidder, and that will essentially mean that your output price is fixed. The only question you have is the leverage that you are doing and at what price. So a lot more interesting plays are possible in terms of the people who supply the components. We don't have too many players who are supplying components into actually making solar components themselves, but the ones that we have will obviously benefit because there is a large demand. The part that I find not playable in the market, which is perhaps the most exciting, is actually the battery part of it, because currently we still have a shortage of battery manufacturers, and given the fact that renewable essentially creates problems and in the distribution chain, the government is moving towards trying to enforce that every generator has enough battery backup. And that battery backup is what is going to create a large demand, which will require things which are also software related, like battery management systems and so on, which is a very interesting place to be.
All right. Hi, Anand. Good to see you, Ben. We had a chat this morning with Nalco, and the management said that pricing has improved, but they're not so optimistic. They're still working in their estimates with lower prices on aluminium as well as alumina. They also highlighted that CPC prices have moved up, which in turn has set stocks like Rain Industries up. Any view on Nalco or Rain Industries? I think the Hyderabad-based company that has a 3 million ton cement plant as well, and they haven't been very good at deleveraging their books. Your take?
So I don't track Rain. It has been on and off making news for several years, but I usually stay away from commodity sector. However, it is the time for commodities right now. So by and large, this has been one of the driving themes for the last 6 months or so for the stock market. And my submission is that you will likely see it continue to run for at least another couple of years, maybe. So from that perspective, what do I think of aluminum? I think like the management said, it's probably run a little far ahead, and you may find some amount of compression. But if you look at it globally, for example, you are having problems of getting Coke cans. So, you can't get cold drinks because of the fact that there is not that much availability of cans in the market. So there are issues in terms of supply. Once the supply chain gets sorted out, I would imagine that you will find that there is fairly strong demand, especially given the kind of new age materials that are required for many of the newer areas that one is growing into in terms of EVs and so on, where lightness is a requirement. Aluminum, I think, is still a material for the future.
Stay on. We just want to quickly touch upon Biocon. Claire Mazumdar has been named as Kiran Mazumdar's successor at Biocon. Kiran says she is a worthy successor and will play a key role at the board level. Listen into a conversation that we had with Kiran earlier today on this.
In my mind, I had always planned to groom Claire to take over from me. I think the time has come now to say that I have decided that she is the worthy successor because of how Claire has earned her stripes. I think Claire was given the opportunity to build Bicara Therapeutics for Biocon, and she's done an outstanding job. So right now, the way I view it is Claire is actually leading a very important phase of Bicara. So she needs time to basically transition from Bicara over a few years. It cannot happen immediately even for her. And as far as I'm concerned, I'm right here at an inflection point where I need to be here for the next few years just to make sure that the transition in whether it's Biocon, the integrated Biocon, or whether it's Syngene, I have to make sure that I work very closely with the CEO and the management to ensure that we drive the kind of growth trajectory that we believe is possible.
Welcome back. Well, we have Hyundai's numbers that are down on the bottom of your screen as we speak. It's a wee bit of a miss. Not too much, but a wee bit of a miss. I think actually it's around a 3% miss on the EBITDA front. And I think the top line as well, there was a small miss on Hyundai. Remember, the stock had a good rally all the way around 2,500 rupees. And then it pulled back, to around this 1,800 rupee odd mark. But for the time being, it's popped up a little bit on in trade. Now, in fact, holding with a gain of around 0.5%. Anand, what do you make? Passenger vehicle space? Anything you like?
I mean, it's a very interesting space. The industry says the industry association says it'll grow at 5%, and each individual manufacturer thinks that they can grow at twice that rate. So, the question is who's going to stop growing or who's going to die. We haven't figured that out yet. So therefore, the best is to continue with the trend, which is that in passenger vehicles, stay with the SUVs. And there is only one king of the SUVs, that is Mahindra's.
So you'd rather go with Mahindra?
Absolutely. I mean, you can listen to all the management. Like I said, all of them claim that they will grow at 8, 9, 10%. And SIAM says we will grow the industry by 5%. There has to be some disconnect there, right?
It's actually, it's not expensive either. I mean, actually, that is one of the factors in favor of Mahindra & Mahindra. It's about 20 times earnings for a company that large. Anand.
Yes, and also, I don't know if you're looking at the valuation stripped of all its subsidiaries. It has various other listed and unlisted subsidiaries which also contribute to the business. So it is a little more stable overall. Though
standalone numbers.
The standalone numbers, obviously, for example, tractors has been a surprise. It has come back in a big way. Their SUVs portfolio is still doing exceedingly well. So nothing much to complain about, really.
Yeah. We had Aman of Abacus with us. We were talking about this AI super cycle, and is it rubbing off in some spaces here, somewhere? I know your views. I think you went off on deep tech, so don't want to get there again. But I don't know if you've looked at it. We'll have to do some work, but markets are smart. I mean, they sniff out opportunity, and sometimes it's real, sometimes it's kind of exaggerated, but it's collective wisdom, as they say. Optic fiber, for example, stocks around the world have been doing very well. I was just thinking, right? Look at Sterlite and Sterlite Tech. Look at a couple of other names. Big run from down under. Absolutely, did not do anything for years and just completely re-rated. Any thoughts at all, Anand?
These are infrastructure plays. So, for example, you assume that you're putting up so many data centers, you also need high-speed connectivity. So there will have to be demand, especially if you assume that there will be some more undersea cabling required. And even within the country, for example, there will be demand for this. But the unfortunate part is that these are, they are hardware. I mean, at the end of the day, you can't make that much money unless you're doing something unique. I mean, take, for example, NVIDIA. The reason is not because they make hardware.
Anand, all the money is being made in hardware.
Yes, I was just coming to that. NVIDIA is not because of its uniqueness only of its GPU, but also because it has a programming language, which means that there are millions of software fellows who are able to use mostly their language. And that has been their biggest moat, not the fact that they do hardware. In fact, the story of NVIDIA is very illuminating in terms of how they had to make it non-commoditized so that it's not just everything else. Now, currently, yes, hardware is the theme, and but we've already seen the valuations now. I mean, a single company like NVIDIA is more than the entire market cap of the country, of India. But I think the next stage will be some of the product companies which will start using the AI. And that is perhaps where the services business will actually come back, not so much in terms of the services as we see it, but, things like Oracle, Adobe, things like that is the ones which are likely to do well.
Okay, all right. Thanks a lot for that, Anand. Well, by the way, just keep an eye on Dalmia Bharat. Just try to put up an intraday chart, actually, of Dalmia Bharat. There was a media article that was doing the rounds, and they've put down a clarification out there. So the stock cut off some of its losses, but at the outset, they've denied various contents of that article. So that's why we have a bit of a perk up on that stock. We'll go into that in further detail. Well, for the markets, it was a bit of a down day, and we staged comebacks at various parts of the day. However, by the end of it, I think the results coming in from SBI, that was a bit of a dampener. And that's the reason why, in fact, the markets did actually plunge towards the last 60 minutes. The numbers were disappointing in comparison to what the street was working with. and that stock got knocked back. But otherwise, the advanced decline ratio not so bad. You had 1,300 stocks, 1,400 stocks actually that were advancing, which is pretty good on a day that the Nifty was down. Sonata Software is a stock that was up 10%, massive volumes out there. First Source as well was up close to around 10% in today's trading session, so good move out there. SCI and NBCC, both of them did well. Large volumes on both those names, so that's why just highlighting both those two. MRPL, another stock that had corrected from around 200 all the way to 160 rupees, that popped up in trade. HFCL cooled down finally after the big run that we have seen. That was down close to around 4%. Dalmia Bharat, some media article coming out, they're talking about various allegations. For now, at least prima facie, the management has denied that. So we had a bit of a perk up in the last 4 minutes of trade after the clarification came out. We'll have to look at that into greater detail. But it was a day when the Nifty Bank really didn't fight for the bulls, and that's the reason we ended in the red. All in all, a bit of a down day, but maybe in fact not so bad, given the fact that the broader markets actually have been on steroids, and the mid-cap and the small-cap indices didn't fall as much as the headline index, the Nifty and the Nifty Bank. In fact, as the trend has been, the small-cap index outperformed, ending in the green. We'll wrap up on this edition of Closing Bell. Editors Roundtable coming up next. You don't want to miss this.
It was a week of wild swings in the last trade as news from the Gulf kept investors on the edge. Despite this, the Nifty managed to gain close to 1%. Broader markets outperformed with the mid-cap and the small-cap index gaining nearly 4%. This is Editor's Roundtable. I'm Reema Tendulkar. With me are Prashant, Nimesh and Nigel. And joining us here in the studio is Mihir Vora, Chief Investment Officer at Trust Mutual Fund. Thank you very much, Mihir, for joining in. Not bad, right? A little bit of a correction, profit booking on Friday, but at the end of it, we still managed to clock in gains.
Actually,
and we're not wiser, right, whether the war is ending or not.
No, we were just closing bell, wrapping up the week, right? Actually, you look at all indices, I mean, except energy and banks, everywhere else there is sectoral indices, there is gains, 3%, 4%. Then you wonder, why is the Nifty only up 0.75%? Mid-cap index is up 3%, small-cap index is up 4%. And sectoral indices are all doing well, but the heavyweights, which is banks and energy, there is a bit of a slump. Which
and this was the week we hit the mid-cap index, hit all-time high levels.
So Nifty 150 has hit an all-time high. Nifty MNC index has hit an all-time high as well. So, a lot of the indices are breaking out, and which is why it's reflecting in the stocks as well. A lot of the stocks this week, I was just listening to you, 40-50% up from the March low. So clearly, it's a good pullback in a lot of the broader market names.
Even on Friday, talking about the markets being down, the mid-cap index was flattish and the small-cap index was up close to 0.3%. And we talk about the markets bouncing 10% from the lows. That's not the story. The story is that stocks are up 40, 50, 60, 70%, even 100% stocks like
and
HFCL.
The most happy in this group would be Mihir because he's running a small-cap fund. We are only talking about stock price going up.
And he has outperformed the small-cap index also.
Exactly. So Mihir, what's the call now in the broader market?
And congratulations.
Thank you so much. I think if you see the markets, the way they are behaving, you mentioned the mid-cap index, small-cap index movement, large-cap index movement. It's actually, and the sectors that we talked about, energy down, financials a bit down, they're exactly mimicking earnings, right? So if you look at the results season so far, you got about half the results in, at least the big ones. The maximum downgrades that are happening is in the energy sector, followed by the financial sector. And if you see the underperforming sectors are these two. So if you break down the market into sectors and caps, typically what we see the large cap banks, the large cap NBFCs are the ones which are seeing the downgrades. Within financials, the capital markets segments, etc., are doing very well, right? Similarly, energy is represented more in the large cap space. Financials, especially the banks, are represented in terms of weight more in the large cap space. That's why you see the large cap indices dragging and the broader market, the mid and small cap indices, which have actually shown good results. So if you see the composition of the small cap index and the mid cap index, it's heavy in terms of cap goods, consumer discretionary, pharmaceuticals, and these are the segments which are actually given good results. So far it's been textbook, I think, mimicking
basically the markets mirroring the earnings.
Earnings, absolutely.
Is there any particular sector that those stands out? That you're focused on. I'm not sure whether you can name a couple of stocks with due disclosures. But is there a particular theme that you're seeing that has played out and still has more legs from here on?
So we've typically been overweight on the industrials theme, especially the renewables theme, the cap goods, the I would say the PLI theme, and the private sector capex, not the mega capex, but the PLI linked capex, where you see dozens or hundreds of small projects coming up, and this is adding up to the order books of a lot of the cap goods companies. So investment cycle by the private sector is one thing we are positive on. The capital market linked segments, because of volatility and the secular theme of financialized saving, is also something that we typically tend to be overweight on. And in pharma we are more healthcare and pharma we are more typically stock specific. But these are the themes, and I think also the EV theme, especially in two-wheelers, that's something that we are positive on.
Which one? That the one that has a technological advantage or the one that's got slammed?
We got one stock which has done well, thanks.
Which has done well.
Which has done well, right? And because of the premiumization of two-wheelers, we are quite bullish on the auto ancillaries theme. So auto ancillaries and EV is something that also we are playing on.
I was just, when you look at what we've gone through, which is the deep correction in March, and then as you come out from the lows of March, stocks have all done well.
Absolutely.
Typically, Mir, I'm assuming people who held on through the drawdown and the correction are the ones who end up making money. It's not as if somebody's going to suddenly wake up. I mean, people will have, people who want to buy stocks at a certain price, etc. But a general rule of thumb, is it? I mean, it's just 1 month old, what we've seen, right?
Yes.
is that the experience as well? I mean, you would have seen that in your portfolio.
Yes,
I mean, pain, and then.
So staying invested has helped. But if you see the bounce back, it's not been uniform, right? So certain stocks and segments have done far better compared to that. It's not like if you held on to the entire portfolio, everything would have worked. So some amount of churning should have or could have been done.
The two stocks which got everyone's attention this week is Sterlite and HFCL. Investors have burnt their fingers in both of them, but now they're riding high. Optic fiber prices in China have gone up phenomenally, and plus there is a data center play as well. Are these stocks on your radar?
The data center theme, not the specific
Not these
stocks,
two are
not these
there.
two, but data center theme definitely, along with the renewable energy that needs to support the data centers and the transmission and distribution that needs to support the energy infrastructure that is being used. So I think that's a secular theme for sure.
You know, we were chatting with Aman Chauhan of Abacus, and he was talking about the themes that he likes, renewable, etc. And he said to make space to invest in renewable, additionally, he has reduced his exposure to banks. I mean, you know, I know, as you said, right, these are large cap banks, but what's the thought process on banks right now, particularly these large caps? Because 6 months back, everyone was talking about how banks is the place to be.
Sure. So banks actually have surprised a bit on the negative side in terms of margins. It looks like while credit growth is picking up, so that's a positive, pricing power doesn't seem to have come back in a big way. And more importantly, there seems to be a bigger scramble for the liabilities, for the deposits. And that's what's causing a little bit of pressure on the margin side. That's where the disappointment has come.
Well, just one word, you know, with regard to Sterlite. Tricky group, right, with regard to the promoter entity. But I recall they issued warrants. Yeah. You know, and they increased their stake by close to 4%, Rima, if I'm not mistaken. That was, I think, sub 150 rupees. And from there, you know, you had the promoter giving some confidence. And the other casualty, actually, of this week was Voltam, a stock that's done very, very well. But the promoter holding has come down from 50% to around 30% or thereabouts, you know, and unfortunately, results as well haven't really lived up. Big correction on that one. But Prashant, you've got some more data that you're looking at?
You know, it's just, and I think what I'm going to talk about and what Reema is going to talk about is perhaps just, we're just looking at India versus the world and everything which is happening. So there was this, you know, it's just the AI super cycle and where it is showing up, very simply put. Now, Sridhar Sivaram of Enam was with Lata on a program about 2 days back, right? And that's essentially what he put out, what he posted. And his post basically why FIIs are selling. There is some data, and he just put out Samsung numbers, SK Hynix and TSMC, and you know their profit numbers. And he said, well, Samsung is expected to do $250 billion, Hynix 150, TSMC 100 billion. India Inc.'s net profits are going to be $200 billion. And you know, I looked at those numbers and I said, well, wow. So we've been following what's been happening, and we've been looking at, you know, the what's happened in with companies like Nvidia, etc. And Reema will talk more about that in a bit. And of course, what's flowing through into the what they describe as picks and shovels, right? Which is memory prices going up, and you know, we just discussed optic fiber, and you know, the market is just looking for where there is scarcity. And trying to price that appropriately. And the numbers are actually absolutely astounding. So just revenue growth and profit growth for two, I think the title says why FIs are selling, but I don't think, I mean, I would not have used that title. I just want to say, look at the growth, right? But anyway, look at Samsung revenues in 2025. The number is, I think the number is $235 billion. In 2026, that number is expected to double for Samsung, $455 to $465 billion. You know, that's the size, that's the scale of the growth. SK Hynix, $68 billion revenue will become $220 billion. You know, you think of the growth and all these big numbers, but you don't really register what is happening with earnings for these companies. TSMC will go from 112 to 165. The profit numbers are even bigger. I mean, the jump is even bigger. Samsung, guess what? $30 billion in profits in 2025. They will do $200 billion in 2026. 30 to 200. You look at Hynix, $33 billion will become $180 billion. This is actual versus expectations. And TSMC will grow from a modest 55 billion to, I think, about $85 billion or so. So this is the story. And I just wanted to kind of flesh that out a little bit because, I mean, I think, Sridhar put that up and he was getting some pushback and people were referring to the 2025 numbers and telling Sridhar, the Samsung profits are $30 billion, not $200 billion. And I completely understand why they would think that because it is $30 billion in 2025. But 30 is going to 200 in 1 year, in 2026. And I think that's the scale of the jump that we are seeing with some of this. Just the where is all this, the funnel, the tap or whatever you want to call it, it's the hyperscalers which are spending. And that's how it's all flowing through. The 5 largest hyperscalers will spend $750 billion in capex in 2026. It's 83% higher compared to what they spent in 2025. So it's like a, insane capex, once in a generation kind of numbers, capex cycle, whatever you want to put it. So lots of opinion how long, where we are in this cycle, but those are the numbers. And I guess, Korea, Rima, is still trading at 6.6 times earnings. After all the rally, because the earnings expectations are getting so quickly upgraded that the P keeps falling. I mean, so
no, it's mind-boggling. I was just showing Nimesh the numbers for Samsung.
Yeah.
The EPS estimates for FY27 for Samsung today compared to what it was a year and a half ago has been upgraded by 4 times. 4x. But having said that, look,
showing up in the prices as well, right?
Absolutely. That's why, as Prashant mentioned, the P remains the same.
No, but look at the P, Nimish, after Korea is now what, the 3rd largest market?
No, not yet.
Not yet?
No, but it's very close.
6.6, because the earnings are going up like crazy, right? And there's scarcity.
Yeah.
SanDisk reported numbers recently, the memory company, and we used to have those...
flash drives.
Flash drives. Back in the day, we still have those, right? Flash drives. And the SanDisk reported average selling price of their memory went up 140, 150% quarter on quarter.
Yeah, absolutely. So only one caveat here that it's tech, right? It's tech, and for us it looks like high tech and stuff. But if you talk about memories, if you talk about storage, these are actually commodities. Right? So I would not end up giving a 30 PE to Samsung based on memory prices alone, or flash drive prices alone. So these are going to be cyclical. If you see the Philadelphia Semiconductor Index, it has been quite volatile in these kind of times. So if you expect the 6 PE to go to 30, I don't think that's likely to happen.
Aman Chauhan made an interesting point. Aman of Abacus, just on closing, he said what according to him seems to be happening is that during Y2K, because there was a deadline and everybody had to kind of sort of,
absolutely
ramp up to meet demand before that deadline. And he thinks something similar. Simply put, make as much as you can in the cycle before it kind of starts to...
In our parlance, we say, don't give it a very high terminal value.
Yeah.
The terminal growth rate
that's well put.
Doesn't have to be very high.
Absolutely. NVIDIA, right, Rima?
Well, I think
more comparison.
Well, yeah, I think that's all everyone can talk about because NVIDIA's market capitalization has surged, and now NVIDIA's market capitalization is more than that of India's equity market capitalization. So basically, what we're talking about, one company versus one nation. NVIDIA's market capitalization now stands at $5.1 trillion. India's market capitalization stands at nearly $5 trillion. And India, remember, has more than 5,000 plus companies spread across banks, oil refineries, IT services company, consumer goods. So we're talking about one company, market cap being more than that of India's entire. It's absolutely mind-boggling. And just if you go back in time, you zoom out, 5 years back, NVIDIA's market capitalization was about $370 billion, which means in the last 5 years, NVIDIA has added nearly $4.7 trillion in 60 months, which is a CAGR of that's a jump of about 13, 14 times. And that 4 trillion to 5 trillion happened in less than 6 months. Now, while NVIDIA is soaring, India's market capitalization has come under pressure. We peaked in September of 2024 at $5.66 trillion. Now we stand at $4.9 trillion, which basically we've seen an erosion of $760 billion. That's the erosion from the peak. But, this is not just a NVIDIA story, right? This is largely an AI-related story, a tech-related story. And, if you look at the large 12 companies in terms of market valuation, where the market valuation is more than 1 trillion, 9 of them are the tech AI plays. The big one, of course, is NVIDIA, but is followed by Alphabet. You've got new additions coming through like TSMC, Broadcom. All these companies are all AI plays, which have gotten added now in the last few months. So, India boasts of very strong fundamentals. We've got great demographics. We've got policy reform. But what's lacking is that AI play. And foreigners have also been shunning India on account of this being an anti-AI theme. We've been reeling under the brunt of that. And now I think this is all everyone can talk about. NVIDIA's market capping more than that of India.
Absolutely.
What's your view?
Well, as I said, should you give a terminal value to this stock? For India, I can definitely give a terminal value, terminal growth rate, because we know that this for long term. But NVIDIA also is a commodity, though it trades at reasonable valuations at about 24-25 times going forward, given the strong earnings growth rate. But I have a feeling that at some point in time, this is going to be in a excess zone, so to say. Now, whether it's now or 50% higher, I don't know. But one also needs to realize that ultimately the valuations and all the hyperscaler investment, etc., that is fueling the NVIDIA growth has to be backed by revenues in the AI space. And if you look at the absolute revenues of Claude or which is Anthropic or OpenAI, they're still at about $30 to $50 billion. And let's assume they are doubling every year. So even if you're talking about $50 to $100 billion of revenue in the next couple of years, the hyperscalers to support them are investing $500 billion to $1 trillion. So there is a huge paper mismatch between the revenues, actuals, versus the expected. So I think in a lot of these cases, huge expectations are being built in. And in such cases, even a little bit of disappointment can lead to a lot of de-rating. So, more power to NVIDIA. I'm sure they're doing a good job, and India is also doing what it does. But one needs to be a little careful when giving a high terminal growth rate to these kind of themes.
Okay, all right. Meir, I wanted to ask you about the cement pack. And the markets are actually ignoring it for now because input costs have gone up. But actually, that was rather large news this week, because both Shree Cement and Ambuja Cements, they are saying they're going to go slow on volumes as well as on capex. That's a large part of the market that's going to be going slow. Let me just tell you the details first. Ambuja Cements, they acknowledge that yes, that cost cutting has been a little slower than expected and the ramp up has been a little slower than expected. So now they're recalibrating their strategy, and that 140 million ton capacity target will get pushed by a couple of years. They also go on to state that now the capex spent for this year will be close to around 6,500 crores. Earlier they were talking about around 10,000 crores. Moving to Shree Cement, well, they have cut down their capex guidance for this year to around 1,500 crores. Last 3 year average is roughly around 2,500 to 3,000 crores. Clearly, they're looking to spend less on capex, and now they're turning attention to volumes. Remember, they were focusing on pricing first. Now they're saying they'll push through volumes a little bit, because the last year's growth was only around 2%. And this year they're talking about a 10% growth on a low base. So Shree Cement is pivoting in their own way. They've been lagging the industry in terms of market share, but now they're saying they're done with pricing correction. They want to look at, at volumes. Why is this important? Ambuja Cements, as a consolidated unit, it contributes close to around 15 to around 16% of the total capacity here in India. And Shree Cement is around 9%. So we're talking about 25% of the industry actually pivoting away from a volume and a capacity push, and now they'll focus on profitability, which is rather important in itself. What could it mean for the industry? Well, the cement capacity addition this year will be around 30-35 million tons. Earlier it was supposed to be around 45 million tons, but because of the slowdown, it will be relatively lower. And in the last few years, it's been anything between 35 to around 45 million tons. Even in last year, it was around 45 million tons for the industry on the whole. The EBITDA per ton of the industry a few years ago was 1,150 rupees. That came down to around 850 rupees. And this year, that's the year that's just gone, it ended at around 1,000 rupees per ton. Remember, this is an industry that's been focusing on the cost side. So they've been cutting down on cost, but yet the EBITDA per ton hasn't moved up because pricing has been under pressure and operating leverage as well hasn't played out on that front. So what's the conclusion then? Well, for companies, if the industry starts focusing on profitability, that means pricing will have to go up. their EBITDA per ton could get a bit of a breather. But the other way of looking at it is, if Ambuja Cements is not going to be very, very aggressive, then inorganic growth actually will shut down. And I think you'll have to debate who will be good, who will be bad for. But UltraTech Cement, they've been executing very, very well. They've been taking cement companies into their fold. EBITDA per ton, best in industry at around 1,250. With all this that's taking place, they are justifying that valuation upgrade that they've seen over the last few years, around 15, 17 times EV upon EBITDA. So the king of the ring is UltraTech Cement. They could gain. But how will the other cement companies perform from here on is going to be important, because some of the mid-cap names will actually get a bit of a breather shot. Mir, what do you make of this? 25% of the industry going a little bit slow. That'll be good news actually for a couple of these smaller names. You know, I'm talking about stocks like Nuvoco and all. They are down from 550, 600 rupees to 300 rupees. And the last week they pounced up. A Sagar Cement, value has been there forever. But where is the returns for shareholders? Do you think this sort of slowdown from two large names actually will give a bit of a fillip? Or do you think the street will just ignore it? Let's see the numbers first, then we'll decide.
I think the industry is structurally consolidating, and we've seen that the number of companies has come down, and the three larger formations have actually been consolidating market share. So to that extent, the rationality in the industry has been improving over a period of time, at least in the last 4-5 years. So that's one. Earlier you used to have too many fragmented players, too much competition, lack of coordination, etc. And as you mentioned, the pricing power has not been that great because volume growth has not been that great. Even now, we are running at just about a little below 70% overall utilization for the industry. So to that extent, pricing power is limited. And I think the shock in the last few months has only made companies a bit more cautious. So you have pressure on the raw material side, you have pressure on the packaging material side, and you have pressure on the transportation cost, which is a big cost for cement companies. So, and because of the global situation, this uncertainty is only improving. So I think people, the larger groups are probably taking a bit of a conservative stance that there are too many moving parts in the next few quarters, and might as well have some discipline and try to make a little bit of pricing.
How would you approach it though? Do you all have exposure? Will you increase exposure?
We have no exposure.
No exposure.
Except for one mid-cap cement stock. We have no other exposure to the cement space.
What plans for the weekend, Mir?
Just chill. It's been a volatile market.
All right, that brings us to a close in this edition of Editors Roundtable. Thank you very much for watching. Don't go anywhere. More news and updates will follow.
Good evening. Thanks very much for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. President Trump says the ceasefire still holds. This after the US and Iran exchange fire near the Strait of Hormuz. Tehran accuses Washington of targeting 2 ships and claims the situation is back to normal. US accuses Iran of unprovoked hostilities. Crude oil prices back above $100 a barrel. The Sensex and the Nifty gain 1% in a volatile week. Mid-caps and small-caps outperform, with both indices gaining 4% each. The rupee weakens by over 20 paise as it remains above the 94 mark against the dollar. Shares of SBI decline after reporting Q4 earnings. Net interest margins shrink sequentially. Core income misses estimates. Slippages see a sharp rise to 5,500 crore rupees, even as asset quality remains largely stable. The Tata Trust delays a crucial board meeting to the 16th of May. The trustees were scheduled to consider nominating Bhaskar Bhatt possibly to the board of Tata Sons and discuss comments by Vice Chairman Venu Srinivasan and Vijay Singh on listing Tata Sons.
She is the worthy successor because of how Claire has earned her stripes.
Days after announcing her successor, Biocon chairperson Kiran Mazumdar-Shaw lays out a time horizon of 5 years for her niece Claire Mazumdar to take over. Calls her a worthy successor. Kiran Shaw also says her nephew Eric and Claire's husband Dr. Roberts would be the most important family members at the board level. That's a CNBC TV 18 exclusive. A U.S. court declares President Trump's 10% global tariffs as unlawful. This comes weeks after the U.S. Supreme Court had struck down the so-called reciprocal tariffs. But there is no blanket relief for importers from the 10% levy, as the court ruling is limited to the small businesses which contested the tariff. Deadlock over government formation in Tamil Nadu appears to have been broken. Smaller DMK allies, including the VCK and the left, are likely to formally announce their support to Vijay's TVK, who's all set to become the next chief minister. 11 months after the Air India crash in Ahmedabad, the aviation minister says the investigation is in the final stages and the process may take another month. 260 people died when the London-bound flight crashed within seconds after takeoff. TCS employee Nida Khan arrested by the Nasik police. She's the only woman among the 8 accused in the sexual harassment and religious conversion case. Khan's lawyer had earlier sought an anticipatory bail, citing her pregnancy. 2 Indian crew members are on board a cruise ship hit by a Hanta virus outbreak. 3 people have died. 8 people have been infected so far. The World Health Organization says the risk to public health is low, downplays the threat of a pandemic. Well, straight to the big story this evening. The United States and Iran did exchange fire near the Strait of Hormuz. Now, President Trump maintains that negotiations for a peace deal are still underway. Let's bring you the latest developments. Now, the U.S. claims that Iran launched missiles, drones and small boats against 3 of its warships in what it called an unprovoked attack. The military said it targeted sites responsible for attacking the destroyers in retaliation. Trump said, and I quote, "Iran trifled with us today." The U.S. president did not label the Iranian attacks as a ceasefire violation, but described the U.S. actions, and I quote, as a love tap. He also continued to threaten to resume military action if Iran doesn't sign a deal soon. Iran refuted the U.S.'s insistence that its actions were retaliatory. Iranian military claims that it targeted the ships after the U.S. attacked an oil tanker in Iran's territorial waters. The Iranian military also claimed that the U.S. had violated the ceasefire by carrying out airstrikes in civilian areas. Since then, Iranian state media says the situation in the strait has returned to normal. This fresh escalation in the Strait of Hormuz has pushed Brent crude back above the $100 mark. Reuters reporting that 3 vessels of Japanese shipping company MOL transited through the strait last month without paying any fee. This after Lloyd's List reported that Iran has established a new agency to approve transit and collect tolls from the shipping in the critical waterway. Fresh skirmishes in the UAE continue to weigh on the ceasefire. The UAE Defense Ministry said its air defenses were actively engaging with a missile and drone attack from Iran. However, no damage has been reported so far. The UAE government has advised citizens to remain indoors. In Lebanon, Israel continued to bombard the southern parts of the country as its forces occupied large parts of the region. According to Lebanese state media, a rescue worker of Lebanon's civil defense was killed in an Israeli strike. The Israeli military has neither confirmed nor denied this yet. Al Jazeera reports that a second round of negotiations to extend the ceasefire will take place on the 17th of May in Washington.
They
trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast. Somebody said, what's your plan? I said, the plan is very simple. Iran cannot have a nuclear weapon. It cannot have a nuclear bomb. And it's not going to have. And they're really at the end of the line. Really are at the end of the line. Now, unless you guys feel differently. Now, these guys, I think, will say that Iran cannot have a nuclear weapon. Would you say? We wouldn't feel very good if they did, because this, what you're doing and all the work that you do and that we do, it wouldn't look too very good after a while with these characters. We're not going to give them the right to have a nuclear weapon. There's zero chance. And they know that, and they've agreed to that. Let's see if they are willing to sign it.
So President Trump maintaining that the ceasefire holds, and that, of course, has kept markets generally largely stable today. And let's talk about the market action. All sectoral indices closed in the red today, though. The Nifty closing below the 24,200 mark, dragged lower by financial heavyweights. L&T, M&M were also lower today. The Sensex closing 500 points lower. The Nifty down by about 0.5% or so. Mid-caps closing flat. The Nifty Bank was the one that saw the pain today, down by about 700 points. SBI, Bank of Baroda, Axis Bank all dragged the index lower for the week. Markets have posted gains for the week, and volatility with the Nifty ending nearly 1% higher. Broader markets have outperformed, so green close for the week. The capital market index up almost 6%, so strong up move there coming in. Well, let's now talk about the other big stories that we are tracking this evening. The market capitalization of NVIDIA is back above the $5 trillion mark. Now, this is one company, and it is now worth more than the entire Indian equity market. Rima is here with that staggering number. Rima.
Welcome to the AI era. What else can I say? It's one chip versus one nation. Absolutely astounding. NVIDIA is now worth more than the market capitalization, the equity market capitalization of all of India. NVIDIA today is at $5.1 trillion. India stands at $4.9 trillion, completely eclipsing it. And India, remember, has more than 5,000 companies spread across banks, IT services, consumption, oil and gas refineries. Now, just 5 years back, on 8th of May 2021, NVIDIA's market capitalization was approximately $370 billion, which means from there to now, it's added nearly $4.7 trillion. That is a staggering 13.7x return. That is the extent. And all this has happened just in the last 60 months, as I said, and that $4 trillion to $5 trillion actually happened in less than 6 months. Now, while NVIDIA soared, India has been facing headwinds. India is often labeled as an anti-AI trade. India peaked out in September of 2024 when the market capitalization hit $5.66 trillion. From there, we've climbed down about $7.6 billion. But this milestone by NVIDIA is also a part of the broader AI theme and momentum. Now, I had a look at some of the valuations of the largest companies in the world, and out of the 12 large companies, 9 of them are AI or tech-related plays. NVIDIA, of course, is right on top, leading, but you've got an Alphabet, you've got an Apple, you've got Microsoft, Amazon, you've got some new additions coming through with TSMC, Broadcom as well. So I think that's the story, right? While India has great demographics, it's got great policy reforms, digital infrastructure, I think the fact that Indian company is not a part of that $1 trillion AI club, $1 trillion, just suggests perhaps that India needs to lean in on this entire AI story. But it's absolutely incredible, the headline that we're getting. NVIDIA's market capitalization is now more than that of India's entire market valuation.
All right, Rima, many thanks for joining us. But let's now double down on earnings. State Bank of India, that stock took a beating today after reporting numbers in Q4 that were below the street estimates. Ritu joins us now to take us through SBI's performance. Ritu, what went wrong this quarter?
Well, first, the bottom line, net profits at 19,684 crores were up 5.6% year on year, but it was a slim beat over a poll. But, the quality of earnings was weaker than the headline number. The key drag, as expected, was the treasury book. SBI's investment book reported a loss of about 1471 crores in the quarter, which pulled the operating profit down 11% year on year to about 27,700 odd crores. What helped the bottom line was a sharp drop in provisions, down 55% year on year to about 2872 crore rupees. The net interest income, that is a core income for the bank, that was a miss, 380 crore rupees for the quarter. But the biggest disappointment for the street was really on the margin front. That was down 18 basis points sequentially and 21 basis points year on year at less than 3%. On the balance sheet front, again, you had advances growing at almost 17%, deposit growth of almost 11%, so that was healthy. But the CD ratio has inched up to more than 82%. Standalone, that is not a concerning number, but it is a multi-year high for the bank. Asset quality is holding up for SBI. Gross NPAs at 2-decadal low at 1.49%. But again, there was a rise in fresh slippages to about 5,521 crores on account of the agriculture portfolio. And SBI again is perhaps the only large bank on the street that has reported a rise in slippages in the quarter. Now, going ahead, the management sees margins in a similar range at about 3% for FY27 and sees credit growth at about 13 to 15% for the full year.
All right, Ritu, many thanks for joining us. Shares have tightened, ending nearly 5% in the green after the company reported stable numbers in Q4. Net profit rose over 29%. Revenue surged more than 77% on an annual basis. However, margins contracted during the quarter to 7.2%. Titan's internals were strong during the quarter, with its jewellery business growing 50% year on year. The management has said they are conscious of the macro volatility and fragile geopolitical situation. A crucial board meeting of the Tata Trust, which was supposed to take place today, has been delayed to the 16th of May. The trustees were scheduled to consider the nominees to the board of Tata Sons. Possibility of somebody like Bhaskar Bhatt being a contender was likely to be discussed as well. They were also likely to take up comments by the Vice Chairman Venu Srinivasan and Vijay Singh on listing Tata Sons. A divergence of opinion over taking Tata Sons public has caused a rift among the trustees. Venu Srinivasan and Vijay Singh have supported the idea of a public listing, while other trustees want to keep Tata Sons private. Staying with the Tata Group, Chairman N. Chandrasekaran is set to address the employees of Air India at a town hall today. The airline's board met yesterday to discuss ways to manage mounting losses. Sources say losses for FY26 are estimated at 22,000 crore rupees. The group chairman N. Chandrasekaran chaired the meeting, where selection of a new CEO is also on the agenda. According to a Reuters report, former Vistara CEO Vinod Khannan and Air India Express chairman Nipun Agarwal are likely contenders to take over from Campbell Wilson. 11 months since the Air India crash in Ahmedabad, the Civil Aviation Minister Ram Mohan Naidu says the investigation is in its final stages. The London-bound flight crashed within minutes after taking off, killing 260 people. The minister says the probe report should be released in a month's time.
हमें समझना पड़ेगा जब भी ये इन्वेस्टिगेशन होता है और खास करके इंटरनेशनल वाला फ्लाइट था, इंटरनेशनल सिटीजन्स भी थे, मतलब दूसरे कंट्री के सिटीजन्स भी थे, इसको कोई भी क्वेश्चन कर सकता है. जो रिपोर्ट आता है इट विल बी अप फॉर स्क्रूटनी. कोई भी देश कर सकता है, कोई भी इंस्टीट्यूशन उस देश का कर सकता है. तो हमें बहुत ही सीरियसनेस के साथ, फेयरनेस के साथ, ट्रांसपेरेंट नेचर के साथ हमें इन्वेस्टिगेशन करना है. तो अभी लास्ट में ही है प्रोसेस, जो इन्फॉर्मेशन हमें मिला है, बट वो इंडिपेंडेंटली AIB वो इन्वेस्टिगेशन कर रहा है. तो उनको जो रिसोर्सेज चाहिए वो सब हमने दिया हुआ है और हम मोस्टली 1 महीने तो लगेगा.
That is the aviation minister. TCS employee Nida Khan has been arrested by the Nasik police. She is the only woman among the 8 accused in the sexual harassment and religious conversion case. Khan's lawyers had earlier sought an anticipatory bail, citing her pregnancy. Santhya joins us now with more details. Santhya, Nida Khan being arrested, take us through what we know about the arrest.
So Nashik police have arrested wanted accused Nida Khan in the TCS alleged sexual harassment and religious conversion case. The police had been searching for Khan for the past 40 days when the FIRs were first filed. She's accused of hurting religious sentiments and has also been booked under the SC/ST Atrocities Act. She was arrested yesterday from Chhatrapati Sambhajinagar in Maharashtra. According to Nashik police, she was allegedly being harbored by a local corporator who has now also been booked for allegedly sheltering a wanted accused. Nida Khan had applied for anticipatory bail, but the Nashik court rejected her application. The alleged sexual harassment and religious conversion case involving TCS employees, which surfaced in the last week of March, had sent shockwaves across the country's corporate world. Nashik police registered 9 FIRs in the month of March against 7 male employees of TCS Nashik unit and arrested them on charges of workplace sexual harassment, hurting religious sentiments and attempting to forcibly convert the victim's religion. Police also booked and arrested their TCS Pune unit-based senior official for allegedly failing to act on the victim's complaints. Apart from this, the police investigation also TCS also initiated an internal inquiry headed by CEO Aarti Subramanian. The company also formed an oversight panel to supervise the investigation. The panel will be chaired by Mr. K.K. Mistry, and TCS has additionally brought on board Deloitte and legal firm Tri-Legal to assist the internal investigation team. Sources have told CNBC TV18 that TCS has asked Deloitte and Tri-Legal to expedite their investigation and submit the report at the earliest, and it is expected that the report might be submitted by the end of this month.
All right, many thanks, Satya, for joining us. The deadlock over Tamil Nadu's government formation seems to be over. Actor-turned-politician Vijay is scheduled to meet the governor and stake claim to form the government. We learn that the two left parties have now decided to extend their support to the TVK. The VCK, which is a left-leaning Dravidian party with 2 seats, is likely to join. The Congress had extended support of its 5 MLAs to the TVK on Wednesday itself, but they were still 6 short of majority. My colleague Harish Upadhyay gets us the latest from Chennai.
Well, perhaps it's an indication of how closely some of these leaders are keeping track of what's happening, especially at Raj Bhavan and in other parties as well. With the indication now very clear that both these left parties are going to back TVK, it is now looking like Vijay will reach that magic figure. Because let's not forget, Nabila, just yesterday we had Tirumavallavan who told us that if the left parties decide to go with Vijay, and all of them will unanimously go with Vijay, that's 6 seats. So now with both these parties, CPIM and CPI, likely to go with TVK, does it leave any other option for the VCK? Does the VCK, which remember is not just a Dalit party, it's also a left-leaning Dalit party. Do they want to take a different stance from both these left parties? Unlikely. Just being pragmatic, unlikely that they'll do that. In which case, all these 3 parties going together will get Vijay past that halfway mark by the end of the day. And if that happens much quicker, he can communicate that to the Raj Bhavan as he meets the governor.
Harish, many thanks. And it looks like he has managed to get to that number and looks set now to stake claim. Up next, 2 Indian crew members are on board a cruise ship hit by the Hanta virus outbreak. The World Health Organization says the risk to public health is low. That and more when we return. More earnings this evening. Swiggy's net loss has narrowed to 800 crore rupees in the fourth quarter. Its food delivery business grew at its strongest pace in 4 years. The online food and grocery delivery tech platform posted a 45% growth in revenue from operations. The management maintains that the company remains on track to break even on its contribution margin in line with its guidance. That's Swiggy for you. Hyundai has also reported numbers, a weak set of numbers in the fourth quarter. Net profit and margins in line with estimates, while revenue missed the mark. On an annual basis, net profit declined over 22%, while revenue rose 8%. Margins contracted 380 basis points. That's Hyundai India. Now, a U.S. trade court has declared President Trump's 10% global tariffs as unlawful. This comes after the U.S. Supreme Court struck down the so-called reciprocal tariffs. Remember, once the reciprocal tariffs were struck down, then President Trump announced the 10% tariffs. But there is no blanket relief for importers from the 10% levy, as the court ruling is limited to the small businesses which contested the tariff. Abhimanyu joins us now to explain. Abhi.
Legal uncertainty continues around the US tariff regime, even as a GTRI report has indicated that the order which was passed by a US trade court doing away with 10% tariffs will only apply to the litigants in the case who were parties to the matter before the US trade court, which will imply that all other importers will continue paying 10% tariffs as per the order of the US government, which had come into force after the IPA tariffs were done away by the US Supreme Court. Nevertheless, the orders which have been passed by the US Supreme Court and the US Trade Court later do indicate that the courts have done away with tariffs. So it remains to be seen how the tariff architecture is going to be shaped like in future, though the GTRI report has indicated that essentially the tariffs have reverted to a pre-tariff regime as of now, and this will of course increase legal uncertainty around the tariff architecture and all other trade deals which are being negotiated by the United States. The report indicated that several countries are already rethinking their trade deals, and Malaysia has already walked away from the trade deal. Also, the report has indicated that India should wait till the US develops a stable and legally reliable trade system before concluding the bilateral trade agreement between India and the United States. So clearly, both the sides are yet to finalize the final architecture of tariffs which is going to be in place, and which is going to be the final tariff levy on Indian goods which will be exported to the United States.
All right, Abhi, many thanks for joining us. Just days after announcing her successor, Biocon chairperson Kiran Mazumdar-Shaw has laid out a time horizon of 5 years for her niece Claire Mazumdar to take over. Speaking exclusively to CNBC TV 18, Kiran Shaw called Claire Mazumdar a worthy successor. Take a look.
In my mind, I had always planned to groom Claire to take over from me. I think the time has come now to say that I have decided that she is the worthy successor because of how Claire has earned her stripes. I think Claire was given the opportunity to build Bicara Therapeutics for Biocon, and she's done an outstanding job. So right now, the way I view it is Claire is actually leading a very important phase of Bicara. So she needs time to basically transition from Bicara over a few years. It cannot happen immediately even for her. And as far as I'm concerned, I'm right here at an inflection point where I need to be here for the next few years just to make sure that the transition in whether it's Biocon, the integrated Biocon, or whether it's Syngene, I have to make sure that I work very closely with the CEO and the management to ensure that we drive the kind of growth trajectory that we believe is possible.
Well, that is Kiran Mazumdar-Shaw on her succession plan. 2 Indian crew members are on board a cruise ship hit by a hantavirus outbreak. 3 people have died. 8 people have been infected so far. The World Health Organization has said the risk to public health is low, downplaying the threat of a pandemic. Ekta joins us now with more details. Ekta.
A rare and deadly virus has been detected aboard a cruise ship in the Atlantic, and international health authorities are now on high alert. 3 people are dead, 8 have been infected, and around 150 passengers and crew remain stranded aboard the MV Hondius, a Dutch vessel now making its way towards the Canary Islands. The virus identified is the anti-strain of hantavirus, and here's why that matters. Most hantavirus strains spread only through contact with infected rodent droppings or urine. The anti-strain is different. It's the only known strain that can pass between humans. It carries a fatality rate of up to 40%. There is no vaccine, there is no approved treatment. The outbreak is believed to trace back to a Dutch couple who went bird watching in Argentina. The man died on 11th of April. His wife died in a Johannesburg hospital on the 2nd of May. The area they visited had no prior record of hantavirus. The WHO Director General has weighed in, saying while this is a serious incident, the global public health risk is assessed as low. Experts, however, caution that given the incubation period, more cases could emerge. 2 Indian crew members are amongst those still on board the cruise ship. According to reports quoting the ship operator, there is no symptomatic individual remaining on the vessel and those affected are receiving medical care. Now the question everyone is asking, is this the next COVID? Experts say no. Unlike COVID, hantavirus spreads poorly. It requires prolonged close contact, not casual interaction. That means outbreaks tend to stay localized. Serious, rare, deadly, but not, say the experts, a pandemic in the making.
This is not coronavirus. This is a very different virus. We know this virus. Hantaviruses have been around for quite a while. This is not SARS-CoV-2. This is not the start of a COVID pandemic. This is an outbreak that we see on a ship. There's a confined area. We have 5 confirmed cases so far. We completely understand why these questions are coming, and we are trying to provide all of the information that we can.
Well, that is the WHO on the hantavirus outbreak on a cruise ship. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. There's plenty more that we have lined up for you. Don't go anywhere. We're back in a minute.
and welcome to our special broadcast. I'm Ekta Batra. Biocon is in focus today. The company reported its Q4 numbers, but it has been dominating headlines over the past few days for a very different reason. Chairperson Kiran Mazumdar-Shaw has named her successor, and it will be her niece Claire Mazumdar. I spoke with Ms. Shaw about this landmark decision for one of India's most iconic pharma companies and began by asking her on her choice. Listen in to what she had to say.
Ekta, as you know, I've always been asked about what my succession plan was for many, many years, because obviously, having been a very strong founder and having built the business over 4 decades, I think people wanted to know, how am I going to deal with succession? And this is a question that's been sort of asked to me several times. And whilst in my mind, I had always planned to groom Claire to take over from me, I think the time has come now to say that I have decided that she is the worthy successor because of how Claire has earned her stripes. I think Claire was given the opportunity to build Bicara Therapeutics for Biocon, and she's done an outstanding job. I think she basically proved to me that she is a very, very strong entrepreneur herself, because she was able to, raise capital for Bicara under very challenging circumstances. In fact, when she took the reins of Bicara as CEO, that was kind of the most difficult time for biotech companies to raise capital in the US. And at that time, she managed to raise a pretty significant amount of capital. She even managed to go on to raise an even bigger round in Series B, and finally took it public on NASDAQ in 2024, where she basically listed on the first day as $1 billion company. She continues to drive that particular business, which is really based on a clinical asset which is advancing very well in the clinic. And she managed to get a breakthrough designation for that program for the Ficeris molecule, which is a bispecific antibody that we had developed in India, but which she basically took into the clinic in Boston. And I think she's done a great job of creating value, of taking risk, of understanding the market dynamics, and dealing with clinical development in a very strategic way. And I think the way she's, designed the clinical program, the way she has developed the product, I think is very, very impressive. And I've watched her, grow as an entrepreneur, and she's been recognized and called out as a young, outstanding entrepreneur. Even EY recognized her as the Entrepreneur of the Year in the Boston region, and things like that. So I think she's proved to me that she can take over from me in 5 years for sure.
Okay. Well, credentials definitely speak for themselves, Ms. Shaw. But you mentioned 5 years. Just give us a timeline on what we are expected to see in the next 5 years as you undertake this transition. And is it going to be a definitive 5 years, or could it go to maybe 7 years or extend beyond that?
So right now, the way I view it is Claire is actually leading a very important phase of Bicara. So she needs time to basically transition from Bicara over a few years. It cannot happen immediately, even for her. And as far as I'm concerned, I'm right here at an inflection point where I need to be here for the next few years, just to make sure that the transition in whether it's Biocon, the integrated Biocon, or whether it's Syngene, I have to make sure that I work very closely with the CEO and the management to ensure that we drive the kind of growth trajectory that we believe is possible. But during this time, I also expect Claire to start playing a role, at least first at the board level, working with me closely, understanding the business. She's already on some of our subsidiary boards, and she understands the biologics business. But I think she also has to come on board to understand how Group Biocon works. So I think she's smart enough to pick it up in a few years, and that's why I gave a time horizon of 5 years. Now, you asked whether it could be 5 years or 6 years or 7 years. Let's see. I'm hoping that it can happen in 5 years, but if it needs to be extended by a year or two, I'm sure we'll take a call then.
Okay, absolutely. Dr. Thomas Roberts, I understand that her husband has been appointed as a non-executive director in this board meeting that took place. What is the thought process behind it? Is that in any way connected to the succession?
No, Tom Roberts was already on the board of Biocon Biologics. He is a very accomplished and well-recognized oncologist at Mass General Hospital. He is also, an MBA from Stanford, and of course a doctor who's graduated from Stanford Medical. And that's how they met. And therefore, he understands the business of healthcare very well. He is a very, very strong contributor to a lot of the strategic thinking that goes on at Biocon Biologics. So I think he has already been playing a role, and he's being brought on to the Biocon board because of the kind of valuable insights and inputs he provides into the strategic intent of Biocon.
All right. Well, I'm also going to quiz you about Eric Mazumdar, who is your nephew, and he's also a non-executive director on the company. And he's, a professor in the US, plus he's expected to have expertise in AI. What kind of role would he play in, say, the next 5 years and beyond?
So Eric is a very smart young man. As I mentioned, he's a rising star in AI. And given the kind of digital AI that's overtaking every industry, and where we need to understand how we're using AI, how we are deploying AI, and how do we make ourselves more competitive using AI, Eric has been helping us think through our strategies. He's working very closely with my colleagues at Biocon. In fact, he's heading now the science and technology task force in the company, in the group, as a matter of fact. And my sister-in-law, who was also on the board of Syngene, is also a computer science expert, because she's a professor of computer science, focused largely on all these new emerging technologies. And I think the kind of task force they've set up across the group is going to be very, very important in the way Biocon Group differentiates itself in terms of being AI-led. So I find Eric is going to play an increasingly important role in getting the Biocon Group to being ahead of the curve when it comes to deploying AI.
Okay, so how should we think about this, ma'am, going forward? Say 5 years hence, is Claire, Eric, as well as Dr. Thomas going to be the top team at Biocon taking over the company?
See, I made it very clear. There is a board role to play and there is a management role to play. I have made it very clear that family will remain at the board level.
Okay.
Because I'm relying on professional management to drive the operations of the company on a day-to-day basis and manage the company on a day-to-day basis. Board is there really to make sure that we have a strategic review of the business, we provide strategic inputs to management, and it's for management to execute and deliver. So that's the way I've actually set up the Biocon structure, where family will basically play a board role.
Correct. But these three family members, we should understand, should probably be the most important people to consider at the board level going forward.
Absolutely.
All right. What role then do you envisage for Claire, who will probably take the lead on this one? Would it be a more overarching visionary role, or do you expect her to get more granular?
So if she takes over my role, obviously it's a visionary strategic role where she needs to work with management to make sure she understands the business effectiveness, and makes sure that she basically works with them to drive growth. But she's not going to basically have an operating role.
Okay, correct. What does this mean for Biocon's longer-term plans as well as Syngene's longer-term plans? Say in the next 5 years, you have a great suitor who comes along and gives you an offer you might not be able to resist. Is that something that you would consider, Ms. Shaw?
Look, many offers have been made to me for both companies, and many would have considered them as offers too good to refuse, but I have refused them. Because to me, these are businesses that need to be built as long-term global businesses which are hugely profitable and sustainable. That's the legacy I want to leave. Now, in the hands of my successors, that's a different matter for them to address. But I think they will continue to build these businesses.
Okay, all right, Ms. Shaw. We're going to leave it on that note, but it's been a pleasure. Thank you very much for talking to CNBC TV 18, especially about something such as your succession plans, which I think the street has been looking forward to hearing on for a long time. Thanks very much.
Thank you.
Time for a short break, but don't go anywhere. Special interview with Biocon MD and CEO Shreyas Tambe once we're back. Welcome back. You're watching Newsmaker. Now let's turn to Biocon's quarterly scorecard. The company reported its Q4 FY26 numbers. Revenue came in broadly in line with estimates, while margins improved sequentially. Biosimilars grew 12% on a year-on-year basis, driven by the advanced markets. We did speak to Shreyas Tambe for his read on the numbers. Listen in.
This quarter, just like we had said in the past, again has been a tremendous quarter, good successful growth that we've seen on the back of our biosimilars business, particularly in the US. You've rightly pointed to the oncology business, which continues to be strong for us. We've seen good traction play out in the pegfilgrastim product, which we called and branded as Fulphila, as well as trastuzumab, which is our Ogivri branded product. That continues to be strong. And now this particular quarter, we're also starting to see our biosimilar ustekinumab, which is branded from ustekinumab, the Stelara biosimilar, which is Yesintek, starting to show in the numbers. So that's really what's underpinning this growth.
Okay. Tell us about the price erosion in the biosimilars segment. There are some analysts who say that it's quite steep at as much as 70 to 80%.
Yeah, I mean, you can. So there are two things. The way to understand this market is that there is a list price, and then there is a price on which you actually do business. Now, from whatever is a list price, which the US market calls as WAC, you will have a certain discount that you would list the product to. And then all costs will be associated and linked to that number. And you see that, and that's visible to everyone, and you track. But the actual price at which business happens is what reflects in your numbers. And what you're seeing us do specifically is that we've always focused on margins. So which is why you've seen our EBITDA margins at that 24, 25 last quarter. It was at 28. We had guided it'll be at 26, and it's at 26 this quarter. So we've been very margin focused. So erosion is on the list price, which is what you see. It's an artifact of competition. So I would say that that's what it is. But businesses which focus on margins and profitable growth are the ones which endure. And I think that's what we focused on.
Okay. But considering price pressure, would you consider exiting any unprofitable biosimilars?
We've never gotten into a space where I think that just when you're looking at business, it has to be profitable, and you can take a wider window if you want to, but it has to be profitable. It cannot be that you're doing business where you're not generating margins. Then it doesn't make sense.
All right. How is the company's GLP-1 portfolio shaping up? You do have a tie-up with Ajanta Pharma for semaglutide in 26 countries. Tell us about the launches and the kind of traction that you might be seeing in a couple of these geographies. And what is your plan for key markets such as Canada?
Yeah, I think the first piece, which again I've kind of got to say that I may sound like a stuck record, is we've seen the peptides business and the insulins business very differently than what most people have been talking about. We've not seen this as a sprint. This is a marathon in our view. This is something that we understand because of our insulin's presence. This is not about how you are, whether you are first out the gate. It's important that you can do this for a very, very long time because these are chronic therapies and you need to be with the patient for a long time. So that's just first thing that I want to put out there. Two is we have a very differentiated play because we're synergistic in terms of the products we make on the insulin side, the drug substance, the API, similar technology on fermentation if we want to. The drug product, the devices, again, very similar platforms. And now with the merger that we've done, we have operating leverage. It's the same commercial front-end capability and the relationships. So it allows us a lot of capability, operating leverage in several markets. You talked about partners that we've got. That's another channel available to us, but we're now present in several countries where we can be with the customer directly. And that adds to the revenues and to the profitability. So just to give you a sense of that.
Sure.
Then you asked us about the specific markets like Canada and other markets that we are. We're working with regulators globally. It's not just Canada, but we say Brazil or Saudi Arabia, Turkey, wherever markets open up before the end of the decade. And we'll continue to do several filings as we get over them.
All right. Section 232, most favored nation pricing, there's a lot of noise in the US around that. Given all of these risks, might I call them, what are you guiding for the generics business along with, say, pricing pressure?
I think the intent of that is to see that the American patients, citizens are not at a disadvantage. I think that's really what's guiding that approach. And if you really look at it, generics or the biosimilars industry as such is not the challenge here. They are actually a part of the solution there. So I don't see 232 affecting any of our business adversely at all. In fact, there's a lot of favorability in terms of how the outcomes of this will play out. And you see right from the beginning of the conversation, whether it was the tariffs or the reviews, generics and biosimilars have been excluded and have been viewed favorably by the administration, given its strategic importance to the economy.
Okay. What is the status between Biocon Biologics and Biocon, the big merger? And what are the operational synergies? When can we see them? What are you guiding for consolidated margins in FY27?
Yeah, I know you'll always push me for specific numbers on the margins, but I've always stayed away from specific numerical guidance. Let me just first say that you're already seeing 2-3 things happen in the current quarter once we've started to merge. You've seen the strengthening of the balance sheet right away. Okay, that's happened. You're going to see a 300 crore improvement from an interest line that you see in the P&L after the EBITDA because you've already retired all the structured debt. So that's 75 plus crores a quarter that you will start seeing an improvement. That's going to play out. On the EBITDA margin where you asked, the operating leverage is kicking in because you will see that we just talked about how will you commercialize peptides. You're not going to need a new sales force. You're not going to need a new front end to commercialize all the products that are coming in. So the merger will provide this. As we get through fiscal 27, we will be able to give you a little more guidance on what are the synergies that we are seeing, which will play into the P&L. We already have visibility to it. We've got a 3-phase approach, preserve, which is what we've done, preserving value in the merger. 2 is consolidate, which will play out in fiscal 27, the 4 quarters. And that will set us up for acceleration post fiscal 27. So through 27, we'll be able to give you more color on the actual P&L benefit that will accrue as we start seeing it into the numbers.
All right. Quickly, Mr. Tambe, leave us with what the consolidated debt on books as of now is and what is the deleveraging plan. I know interest costs are expected to reduce in FY27, so just lay it out for us. What are we seeing in terms of further deleveraging and how will that come about?
Yeah, I think first up, just for the benefit of your viewers, we were at a debt to EBITDA ratio of 4.3 when we did the acquisition. I think since then, and including the most recent measures that we've taken on the fundraise that we did over the course of last fiscal and the early part of this calendar year, I think we've been in a position where it's sub 3, which is closer to 2.6, 2.7, which is a very, very healthy position. We do not have any meaningful payouts that we need to do. Of course, there will be the bond that we will start, looking to start repaying on that, servicing on that. But otherwise, we don't see any major debts that we will need to write down at this point in time. So we are in a very comfortable position. The bonds are trading at a premium, which means the debt market's also very, very comfortable with our position. The rating agencies have upgraded us in terms of our credit rating. So I would say, Ekta, we are in a good place. As the business ramps up, as you see organic growth in the EBITDA, you will be in a much more comfortable position. We've guided in the past that we don't like it to be above 2. And that's something as the business organically moves up, you will start seeing it go below 2 as well.
Okay, all right, Mr. Tambe, we're going to let you go on that note. Always a pleasure. Thank you very much for joining in and speaking with CNBC TV 18.
Thank you so much.
And with that, it's a wrap on Newsmaker. Thanks very much for watching.
Hello and welcome to News Center. I am Ashmit Kumar. Let's begin with the earnings. Shares of State Bank of India declined in trade after reporting a weak set of numbers in the fourth quarter. Ritu Singh spoke to SBI Chairman C.S. Sethi on the Q4 results as well as the road ahead. Take a look.
Our exit NIM guidance was above 3%, and I think that has been fulfilled. And the NII impact in Q4 was essentially because there's been a repo rate cut in December 15th last year, and that has been fully factored in the Q4. That is number one. Number two, I think there's been a good improvement in our EBLR portfolio. That is also adding to a certain amount of NII reduction. But I believe that our guidance in terms of NIM being above 3% still holds good for the current financial year, and we have no concern in terms of managing those margins.
Okay, while we appreciate your asset quality is at a 2-decade low currently, but you've been the only large bank on the street to report a rise in slippages. Where did that come from? And secondly, for FY27, if you could give us a guidance on what the full year credit costs, slippages, recoveries, what would that look like, keeping in mind what's happening in West Asia and MSME being a significant portion of your book?
So the slippages, what you see in the Q4, I think we need to be adjusted the subsequent pullbacks which have happened. And if you, around 850 crores have been pulled back from those slippages. So if you consider that pullback, I think there is no any concern in terms of the increased slippages.
Well, you can catch that entire conversation with the SBI chairman at 6 p.m. right here on CNBC TV 18. And now on to the big political story. It's the dawn of a new era in West Bengal and Tamil Nadu. Suvendu Adhikari will be West Bengal's next chief minister. The 55-year-old was chosen as the leader of the BJP legislative party today. And that was done in the presence of the Home Minister, Amit Shah. He, along with his cabinet, will take oath at the brigade grounds tomorrow. Prime Minister Modi, Home Minister Amit Shah and the entire BJP top brass will be present for the swearing-in ceremony. One of the key architects of the BJP's landslide victory in Bengal elections, Adhikari, had switched from the TMC to the BJP in December of 2020. He won from both the seats he contested in the recently held assembly elections. He defeated the TMC Supremo and former Chief Minister Mamta Banerjee by over 15,000 votes in Bhabanipur.
लगभग 8 प्रस्ताव और समर्थन प्राप्त हुए हैं और सभी प्रस्ताव और समर्थन एक ही नाम के मिले हैं। उसके बाद दूसरे नाम के लिए भी सबको समय दिया गया, पर्याप्त समय दिया गया, मगर कोई दूसरा नाम नहीं आया है। इसलिए केंद्रीय पर्यवेक्षक के रूप में मैं श्री शुभेंदु अधिकारी जी को पश्चिम बंगाल विधानमंडल दल के नेता के रूप में निर्वाचित घोषित करता हूं।
Well, from West Bengal to Tamil Nadu, the deadlock over government formation appears to be over. The left parties have extended unconditional support to Vijay's TVK. This, along with the support of the Congress and the VCK, should take Vijay's party to the magic number of 118. All these four parties extending support to Vijay fought the elections in alliance with the DMK. Supporters of the TVK celebrated the news of the deadlock being broken. Now, for more on this, we are joined by senior advocate Sanjay Hegde and psephologist Arun Krishnamurthy. Mr. Krishnamurthy, coming to you first. Today has been a strange day. It began in the morning. We saw speculation about the DMK and the AIA-DMK coming together. The day seems to be closing with the TVK, it seems, seemingly rallying the kind of numbers required, that magic figure of 118, the CPM lending support, the VCK lending support. Do you think Vijay has what it takes to hit that figure and to go back to the governor once again?
Ever since the elections were announced, or even before, prior to that, this has actually been a tale of many twists and turns for us. How much vote share, how many seats, all this was being discussed for Vijay. But now then we have finally come to the point where we are clear that with this mandate, who on their side is going to go with them. And that's actually the ADMK and DMK coming together was a mere speculation. And it was a lot of rumor mongering. But now it's clear that VCK, Communist, all going by the side. I think the primary Dravidian parties want to see what Vijay and TVK can deliver. And they don't want to risk by going into an alliance is what we're reading into this situation.
What many are asking, again, the conduct of the governor as well, Mr. Krishnamurthy, asking for support, show of support at the stage of taking oath itself. What has been the general mood within the TVK and within some of these smaller parties on the conduct of the governor?
I can't speak for the TVK, but based on observations, the TVK has been in a mixed bag where they felt let down. They almost saw this opportunity slip away from them. There was a lot of anxiousness, which was clearly visible in the cadre. But the general public mood was turning in favor of TVK at a larger, greater extent, especially when this news of a DMK-ADMK alliance was being proposed. It did see its own kind of backlash, where people were like, the mandate was not for the DMK nor for the ADMK. The mandate was in the direction of TVK. And if these two parties decided to do the most unthinkable, which is the ADMK, DMK come together and stake claim, then that may not have gone well with the public is what the initial reactions indicate. So now that VCK, Communists and Congress are by the TVK side, I think it's a game of wait and watch again as to what delivery TVK government will be able to give for Tamil Nadu.
Sure. Mr. Hegde, coming to you again, the same question. I wanted to get a sense. The governor making it clear that he wants a show of support, at least in the form of letters of support, at the very first stage, at the stage of taking oath itself. I want to get your perspective, given the legal precedents that we've seen, given the Bommai judgment, given the Sarkaria Commission report. What is the law of the land? Does the governor have the power to demand such kind of evidence at the first stage itself? Or is the show of majority best left to the House, to voting in the House?
The law is very clear. Majorities or lack of majorities are always determined only on the floor of the House. The governor has discretion sometimes when there are rival claims. But where there are no rival claims, where there is only one claimant, all that he has to do is to swear the gentleman or lady in, and thereafter say, I would like to see evidence of a majority. So it could be open to the opposition to bring in a motion of no confidence, or it could also be open to the government, which has been sworn in, to seek a motion of confidence. The Raj Bhavan or even the Rashtrapati Bhavan cannot be a substitute for a parliamentary procedure.
Sure. Just going back to some of these previous precedents that the Apex Court has given, whether that's the Bommai judgment, whether it's the Sarkaria Commission, there's been a great deal of time spent as to why the show of majority has to be best left to the House, to the floor of the Assembly. The rationale that has been given time and time again is that such time being taken by the governor to make a decision allows for political engineering, allows for horse trading. Is that a concern that is being reflected on the ground as we speak in the case of Tamil Nadu?
In the case of Tamil Nadu, the trading had not yet started. The question was which horses were going to combine together. It was the DMK-ANA-DMK marriage of convenience may have gone through had the smaller parties agreed. I am told that yesterday there was more than a serious attempt to try and persuade the smaller parties, and some of the smaller parties, especially the communists, said no, this is just not on. Thankfully, now the question of majority is behind, and it's only a matter of time that there is a government in place. What may happen, however, is that some of the MLAs might, especially the third party, might actually resign and get re-elected in the TVK's under the TVK symbol. That is what I see as most likely happening, and the TVK then will have a stable majority of its own.
Sure. Let me take that concern across to Mr. Krishnamurthy. Mr. Krishnamurthy, if you heard Mr. Hegde there suggesting that TVK may rally together the numbers to hit 118, but there are many first-time MLAs. They'll be vulnerable to inducements. We've seen resort politics happen earlier as well in Tamil Nadu. Is that a concern that TVK may get the numbers, but will they be able to sustain those numbers?
Actually, as the other panelist was mentioning, it is the AIADMK that has to be supremely careful now. Had the ADMK, DMK convenience of marriage, as rightly pointed, had happened, then the TVK MLAs were up for grabs. But now that the TVK is coming to power, it is the ADMK MLAs who would actually be tempted to resign and get re-elected under the whistle symbol of TVK. This is a do-or-die situation for the ADMK more than anybody else. If it's a TVK government in the state and the DMK as the principal opposition, the stage is set for a DMK versus TVK, TVK versus DMK in the days ahead, even for the 2029 parliamentary election and more. The ADMK has a lot to lose. They've already shrunk in terms of their vote share. They don't have a leader who can hold the party together with the charisma that Jayalalitha did. Now it's for the ADMK to keep their flock together, house in order, and survive another 5 years until they face the next assembly election, if that's when it's due. So it's for the ADMK to be supremely cautious now.
But I'll just labor on that point a little further, Mr. Krishnamurthy, that the fact that TVK, even in the best case scenario, will only have a slim majority, only by a seat or two, will the other Dravidian players, when we look at the DMK, ADMK, are deeply entrenched political parties with deep roots in the state, with the power structures there as well. Many are asking this question that TVK, will the party be vulnerable to stability in light of support being needed from very small outfits, the CPM, whether it's the VCK with only a couple of seats? Will the TVK have the momentum to continue despite this support?
It's too early days. And as I've been mentioning, this has been an election with many twists and turns to it. And the TVK being a fledgling party establishment, first time in power, and they've given a few tall promises, not a few, plenty of tall promises, whether they're going to be able to hold on to it. We are imminently facing a drought in certain pockets of the state. How are they going to handle it? Farm loan waivers, a lot in the offing, which is to be watched. If the TVK delivers, and can the TVK deliver? That's the big question once they form the government. So if they deliver, because now the public sentiment and mood is very much in their favor, right? So if they deliver, they're going to build on it. If they fail to deliver, the intensity of their failure is what is to be watched and how the public would react to it. Then the one who's going to reap the benefits is the DMK. The ADMK may not be in a position to beat the DMK and the TVK to come to pole position in the near future with the current setup that they have. And that's what is worrying that party.
Sure. Mr. Hegde, let me come back to you that in light of these latest developments that we've seen, the VCK, the left parties, the Congress commit to the TVK, are there any further legal hurdles that they may have to contend with, or will this show of support be sufficient for the governor to compel the governor to initiate with the oath-taking ceremony?
I don't think the governor will long delay it. The pressure, the public pressure is quite high, and the governor has stretched out his period of cogitation for as long as is possible. This period of delay is also possibly because the center has used it as a lever to exert pressure. There is a rule in Tamil politics that normally the government at the state aligns itself with the government at the center. MGR was the first great proponent of that principle, where he said never fight with Delhi. He aligned with Indira Gandhi for the Lok Sabha elections of 1977, which Mrs. Gandhi lost. 4 months later, he jumped over to the Janta side to win the assembly and become chief minister for the first time. Ever since that, a lot of chief ministers, whoever has been in power, they have aligned with Delhi. The one big exception, however, has been Mr. Stalin over the last 5 years. This kind of pressure might bring back that old principle back into play.
Mr. Hegde, again, since we were talking about the speculation in the morning, there was conversations around how ADMK and the DMK were exploring possible talks at some points of the day. They've even expressed, their leaders have expressed confidence that, yes, this is a combine that could perhaps make it happen as far as Tamil Nadu government is concerned. Is that still an option that the governor will consider, is still on his table, something that he could exercise some discretion on, that, look, here's a different combination, the Dravidian Party combine, which perhaps merits a chance?
I don't think they have not come together, nor have they staked claim. At this stage, I don't think that option is open to the governor. It is not unknown for two bitter rivals to come together, but those are in moments of great calamity or crisis for the state or for the center. Both Labour and Conservative got together to run a government of national unity during World War II. Those are very rare occasions. Just getting together to keep the newcomer out will be political suicide for both those parties, and they are seasoned politicians. They will much rather prefer to sit in the opposition for some time and watch whether the performance of the new party matches the expectations of the public that has voted them in. You may remember that these unnatural alliances tend to get punished very badly. When Arvind Kejriwal won in Delhi the first time, after a bitter campaign against the Congress, yet he was short of a majority, and the Congress supported him to keep the BJP out. Thereafter, there was a second election where Arvind Kejriwal won hugely, but the Congress then disappeared from Delhi. I don't think that people forget those historical lessons very easily.
Right. Especially the voters in Tamil Nadu have a clearly long history when it comes to matters of political debate. I'd like to thank both of our panelists for sharing their time and perspective. But with that, it's time now for slipping into a very short break. We'll come back next. We will discuss with KP Fabian, the former ambassador to Qatar, the latest developments coming out of West Asia. Stay tuned. Welcome back to News Center. Now, despite strikes on Iranian oil tankers and civilian areas, the U.S. President Donald Trump has said that the ceasefire still holds. The U.S. claims the strikes targeting Iranian military facilities were in response to a series of unprovoked missile, drone and small boat attacks on American warships transiting the Strait of Hormuz. In an interview with ABC News, Trump described the exchange as a love tap. He also warned Iran to ink a deal quickly. These developments come amidst reports that Iran and the U.S. are very close to reaching an agreement. Iran's foreign ministry spokesperson Ismail Baghai compared Iran to an angry lion, saying, and I quote, "If you see the lion's fangs protruding, do not imagine that the lion is smiling." End of quote. Hours later, the United Arab Emirates stated that it is responding to the missile and drone attacks launched against it.
Trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast.
Well, we're now joined by former ambassador to Qatar, KP Fabian. Ambassador Fabian, thank you so much for joining us. Always trust the US President, Donald Trump, to come out with interesting use of phrases and language. He calls it a love tap, these exchanges between Iran and the US at a time when there is a supposed ceasefire between the two sides. UAE reporting that it is, even as we speak, intercepting missiles and drones from Iran. Ceasefire, will it hold, is what many are asking.
Thank you. Your question is whether the ceasefire will hold. My answer is that there is no ceasefire. Let us understand. Ceasefire means ceasefiring. Well, after President Trump declared the ceasefire and extended it, well, during that period, American Navy was shooting at Iranian ships. And Iranian IRGC was shooting at ships. So there was no ceasefire. That is point number one. Second, you see, ceasefire also means in international relations, suspension of war. Now, President Trump's declaration of a blockade against Iran was an act of war. And thirdly, what does President Trump's blockade mean? It means that Iran alone cannot use the Strait of Hormuz and the ports in Iran. Other countries can use that. Now, isn't it ridiculous? And don't forget, on the 27th of February, the Strait of Hormuz gave peaceful passage. There was no problem. It is because of the aggression committed by Israel and the United States on the 28th that all these problems arose. Therefore, I conclude by saying that President Trump created a problem. Now he is trying to solve it, but not in the best possible manner.
In the midst of all of this, we have Donald Trump expressing confidence that, look, a resolution is not far away. It's imminent. Iran could come back any other day. We've heard about the one-page, 14-point MOU that has been shared with Tehran, which Tehran says they are considering. Is this, again, more of Trump talk? In the last 20-odd days, we've seen multiple times the U.S. administration, Washington coming forth and saying that, look, a resolution is just around the corner, but it didn't quite materialize. Any reason for you to believe that maybe this time it could be different?
Well, such statements President Trump or his administration makes from time to time to bring down to calm the markets. That is the primary motivation. Now, the question is whether this time is it in any way different. My view is that it could be different because don't forget that President Trump had to suspend his Freedom Project after 2 days. On day one, 2 ships crossed the strait. On day 2, no ship crossed the strait. And on day 3, while the Secretary for War was exulting about the success of Operation Freedom, President Trump suspended it because he did the right thing. Because to my mind, it was a harebrained scheme. And Trump said that he did it because of requests from Pakistan and other countries. He didn't specify which other countries are. Well, to my mind, it includes China because he's going to China 14th and 15th of May. Incidentally, the White House has announced the dates, but not Beijing as yet. But, nobody will say no to the President of the United States. But let me make it very clear. I doubt whether Trump will have a useful meeting, a pleasant meeting with Xi Jinping in case he had not settled the Iranian question. And the best way to settle it is to agree to a ceasefire, release the frozen funds, and then Iran will sort of restore the previous position as regards the strait, and then have 1 month or longer to talk it over. But without all that, if Trump goes to Beijing, he will be in some trouble.
Which, in fact, was my very next question, that's the next big diplomatic maneuver on his calendar, heading to Beijing, negotiating with Beijing going forward. Will there be pressure on his shoulders to seal some kind of interim deal at least before the conversations begin between Washington and Beijing?
Of course, American agricultural exports to China have to be taken care of. And some of those states which export to China are Republican controlled or favoring the Republicans. So apart from that, let's understand one thing. China and Russia are the only great powers who can talk on an equal basis with the United States. The rest of the world is so intimidated by him. Look at Europe. They have marginalized themselves. And look at the global South. It doesn't utter a word when Iran's supreme leader was killed. And even worse, when 160 plus schoolgirls were killed. So the so-called global South also is silent. BRICS cannot come out with a statement. And only China said it was the law of the jungle. And Putin has been speaking to Trump. So only these two powers can handle the United States. And I don't think Trump will be able to take this situation longer, because the price at the pumps is going up. And don't forget, 13,000 flights were cancelled in Europe, are being cancelled in Europe, accounting for 2 million passengers. Some of them must be Americans. And the MAGA support also is going down. And his popular polls say that about 30% or a little more support his misadventure. So Trump is in trouble. And my view is that he's most likely to declare, quote, victory and say that he is moving on to Cuba because he had destroyed Air Force, the Navy, and everything he has destroyed. Now it is for the people of Iran to rise up. And how can they rise up if he goes on bombing?
Right, so that's an interesting perspective on Donald Trump being advised to again walk out. Will he? Of course, is a different question altogether. But an interesting next month as far as diplomatic maneuvers are concerned. Donald Trump heading to Beijing. There's a BRICS summit that will be hosted in India. So clearly, a lot of pressure points being built. Whether or not Donald Trump will yield is again a big question mark. Mr. Fabian, thank you so much for joining us for your perspective. With that, it's a wrap on this edition of News Center. More news and updates will continue right here.
American multinational Carrier Global is betting big on India. The company is investing $100 million in Sri City in Andhra Pradesh to set up a new facility to manufacture air conditioners. The state's IT Minister Nara Lokesh laid the foundation stone for the plant, which promises to generate 3,000 jobs. Valued at $60 billion, Carrier Global is a leading energy solutions major operating in 160 countries with around 53,000 employees. The company generates $22 billion in annual revenue. David Gitlin has been the chairman and CEO since 2019. Under his leadership, the company's market cap has grown 5 times from $12 billion to $60 billion. Facing pressure in the Chinese market, the company is setting its sights on India for expansion and is hoping to ride the AI wave through the boom in data centers. I spoke to David Gitlin to find out more about the company's blueprint for growth in India and the outlook for the rest of the world. Before I talk to you about Carrier's global growth forecast, let me double down on your plans for India. Sri City in Andhra Pradesh is where you've decided to set up a 39-acre manufacturing facility. $120 million is what you intend to invest there. Let's start with your plans for India.
Well, look, we could not be more excited to expand our footprint in India. You know, we've been selling into India for close to a century. Our first facility here, our first building was back in 1936. And we were the first in our industry to establish operations here 40 years ago. We're celebrating our 40 years of operations here. We started in Gurgaon, and the beauty of our presence here is it's really an end-to-end value chain. So we have operations and manufacturing and supply chain up in Gurgaon. We have significant engineering in Gurgaon as well as Hyderabad and Bengaluru. We have significant operations with our JV partner in Pune. And now we are very proud to announce this $100 million investment in Sri City, which will be a state-of-the-art manufacturing facility, and it really builds out our presence. The growth that we've been seeing in India is unlike any country that we have around the world. Our CAGR over the last 4 years has been 20%. We grew 33% in the first quarter. So the growth potential here is significant. We've been realizing it, but we cannot keep up with that growth without a complete localization and without significantly expanding our footprint.
Well, congratulations on 40 years and congratulations on your new facility that you intend to set up in Sri City in Andhra Pradesh. When is that likely to be operational, David? And will it also focus on demand for the export market?
It'll be operational in the third quarter of next year, so we're doing an accelerated schedule. And the answer is yes. We not only plan to have the facility for the capacity that we need here in India, but we plan to export to Africa, parts of the Middle East, and then we'll see where it goes from there. But because we have not only a state-of-the-art factory, we're going to surround it with a complete supply chain ecosystem. Today up by Gurgaon, we have about 200 suppliers. We're going to need 3 or 4x that number in Sri City. So it'll be tremendously state-of-the-art. It'll be a complete community of suppliers, and I think it'll be perfect not only for India, but for the region.
You know, you talked about the supply chain ecosystem, and this is something that the government has also been focusing on. Lay out for us how many suppliers we're likely to see move to Sri City, to Andhra Pradesh as part of this ecosystem that you spoke of.
You know, today, the number of suppliers we have in Gurgaon is about 200. We're probably going to need about 3x that in Sri City. And part of the beauty of Sri City is a few. Number one is by the end of next year, about 50% of the air conditioning needs for India will be manufactured in Sri City. So it already has a robust supply chain. The other thing that really attracted us to the community is that it's within 100 miles, within 100 kilometers is 5 different ports. So it's perfect for exporting to the local region as well.
Well, yes, you gave us an indication of the kind of export aspiration that you have. You know, given the fact that India is growing at a CAGR of 20%, that billion-dollar revenue number, David, on track to achieve that by 2030?
Yeah, we should definitely be at $1 billion by 2030. When you look at the investments that are taking place in India, if you look at data centers alone, today it's about 1.5 gigawatts. And you look at the announcements of not only the hyperscalers that we've seen, folks like Microsoft and Google and AWS announce significant data center investments in India, but also the colos, folks like Colt and Reliance and so many others. So we see India going from 1 gigawatt to 10 gigawatts. And you think about every gigawatt of investment in data centers, about $50 billion. So we see hyper growth in the data center market. We've seen that globally. We've certainly seen some phenomenal wins in the US and around the world. And we think one of the most exciting growth vectors that we have globally for data centers is right here in India. But it's not just data centers. That's one of the beauties. When you have a GDP CAGR of 7% or so, consistent growth, and we look at investments in commercial real estate and hospitals and hospitality and so many verticals. Once you start building data centers, that brings with it things like chip manufacturing. So not only direct data centers, but the amount of urbanization that we're seeing in India and the amount of growth in so many other vectors, we think 20% CAGR is a minimum. In India, what we try not to think about is CAGRs. We try to think about growing the business 2x, 3x over a short period of time. So today we're about 500 million of sales. I have no doubt that we'll be hitting that $1 billion mark before the end of 2029.
Okay, before the end of 2029. I want to get a little bit more color from you on the data center business, because your data center cooling business hit $1 billion in 2025. Given the accelerated pace of expansion, the jaw-dropping CapEx numbers from the hyperscalers and others, what is the outlook for the data center business?
It's tremendous. You know, we 2 years ago, Carrier did 500 million. We said that last year we would double it to $1 billion. This year we've said it's going to increase 50% to $1.5 billion. And the reality is internally we're driving to do a much better number than that. And we're building our backlog not only for 27, but for 28. So the growth potential in the United States, but honestly globally, it's kind of a once in a generation opportunity when you look at this data center opportunity. And one thing that Carrier's done is invest in innovation. So we now have a complete product portfolio. We have things like 2 and 3 megawatt maglev bearing chillers that are perfect for the data center market. We have water cooled chillers that we'll be making here in India for the local market as well, both air cooled and water cooled chillers. And then we look at a lot of the differentiation is through systems integration and intelligence. So we have an offering at Carrier that we call Quantum Leap, which is the integration of what were formerly disparate systems. So traditional cooling, liquid cooling, a building management system, a data center infrastructure management system, putting that all together in a way that minimizes water usage, minimizes energy consumption, and really creates the state-of-the-art efficiency that our customers expect. So we see we're in the early innings of this data center growth, and we think it's going to continue for years to come.
I want to get back to your plans for India, and while you give us, some guidance there as far as your manufacturing operations are concerned, walk us through the plans for the engineering centers. You've got Hyderabad, Bengaluru, Gurgaon, as you pointed out. Are you looking at hiring more? And what kind of work is happening at these engineering centers? How much of the IP-driven work is happening at your engineering centers in India?
It's absolutely tremendous. In fact, just before we arrived in Mumbai, we were in Hyderabad, and we have 1,600 professionals in Hyderabad, and it's a combination of digital and engineering and some back office work as well, where we've consolidated a lot of our back office activity that does record to report and some of our payables activity right here in Hyderabad. So the kind of skill sets that we're looking at spans the gamut of electrical engineer, software engineer, mechanical engineering, systems engineering. And on the digital side, we have an entire department dedicated to AI. We use Hyderabad as a center of excellence globally. So the kind of work that's being done in Hyderabad, both on the engineering side and on the digital side, are centers of excellence for the world. So a lot of the software development and electrical engineering that we do globally is done right here in Hyderabad. And we're going to keep building to it. It was just a few years ago, we had 1,000 people in Hyderabad. Today it's about 1,600, and we see the growth potential because of the skills that we have there We see that continuing to grow. And frankly, our retention has been very, very good because we've created a work environment where people want to be a part of our mission. Because we're a very purpose-driven company. We want to be there for our customers, but we want to be there for the planet for generations to come. So we do a lot of community activities. We do tree planting activities. So when we recruit from the local universities, it speaks to them because our mission speaks to them.
I want to talk to you about what's happening globally, David. We are in the midst of the West Asia conflict, and that has, of course, led to oil prices surging close to $120 a barrel. It has led to raw material costs going up. What has that meant as far as your business is concerned?
You know, we have seen input costs increase. It's a combination of what you just mentioned, oil prices, and that affects a lot of our logistics costs. Because if you think of the nature of our business, you know, we're in homes around the world, we're in buildings around the world, we're in a number of different verticals that require a lot of transportation. So we've seen our logistics costs increase. We've also seen an increase in some of the raw materials, copper, steel, and aluminum. And then we've been navigating some of the tariff moves that have been happening in the United States and globally. So in some cases, in parts of the world, we've had to raise prices, but we do it at a minimum. We really do it to cover the input costs and do our very best to make sure that we're providing the most competitive offering for our customers.
You know, you talked about taking some price hikes to mitigate the raw material inflation that we are seeing. But what about demand, David? You know, has demand taken a knock on account of the conflict, especially in regions like the Middle East? You know, and will that impact your growth guidance?
To a certain extent, but when we look at the Middle East, we're a $22 billion global company. We have about 400 million in sales in the Middle East, so it's a couple percent. We have a tremendously resilient team in the Middle East. We have 800 professionals that work there, and they've been there every step of the way in a very difficult environment to support our customers. So we were expecting very significant growth in the Middle East this year. We were targeting significant growth. Given what's going on right now, it's been flattish, which, given the environment, is frankly quite good. But we can manage the demand environment in the Middle East. I think when you step back and you look at Carrier, what's been good has been phenomenal. About 40% of our portfolio has been growing double digits for 5 years in a row, and that 40% will grow double digits again this year. And that's a combination of our commercial HVAC business, driven in part by data centers, but many other verticals have been extremely strong, especially in countries like India. And then our aftermarket business has been extremely strong as well, and that'll grow double digits again this year. Some of the shorter cycle businesses, our residential businesses, have been impacted by some issues around the consumer and interest rates being at a bit elevated levels. So those cycled down a little bit in the United States and in Europe and in China, but those are cyclical. We are very well positioned. They're good margin businesses. We're very well positioned. And when those cycle back, we will see the upside of those upcycling.
David, you've of course seen a significant rationalization as far as your portfolio is concerned. Today, now a pure play climate solutions company. How ready do you feel about the future? And organic growth, of course, has been driving growth for you, but M&A possibilities?
We've done a pretty massive portfolio transformation to make us very focused, as you just mentioned, as a climate solutions company. So over just the past few years, we bought the Toshiba HVAC business, which has done phenomenally well. We bought an unbelievable company based out of Germany called Viessmann Climate Solutions. That's positioned us so well for the residential and light commercial business throughout Europe and throughout the world as well. So we've done some really amazing acquisitions, and we've had to sell, didn't have to sell, but we chose to sell our fire and security business and our stationary refrigeration business. So we are a very focused climate solutions company, focused on intelligence and AI. So we see the future of our business going from a product business selling air conditioners, chillers, to a solutions company, really differentiated by systems and by intelligence. So will we do some acquisitions? Sure. Anything that can help us achieve our our vision of being the global leader in intelligent and climate solutions, we will do acquisitions if that fills out our portfolio. But we're talking about millions, not billions. Right now, because of the hyper growth we're seeing, we're really heads down focused on execution and being there for our customers.
Two quick questions, David. One on Carrier Ventures and whether you see opportunities here in India for Carrier Ventures to invest in. And two, the SaaS revenue from your digital platforms, how's that working out?
On the latter one, it's working out great. I will tell you that we've invested a tremendous amount in digital platforms. We have one for our mobile refrigeration business. So we built a digital platform that we call Links that provides end-to-end visibility in the global cold chain network. And we just started a few years ago, and today we now have 240,000 subscriptions. So our digital revenues from that has done very well, and we see that going to 800,000 over the coming couple of years. And then if you look at buildings, we launched a digital platform that we call Abound. A lot of it actually started in Bangalore. We used to call it Eco Energy. We call it Abound. So we're monitoring buildings around the world. So if you take a company that has a massive footprint, on a single pane of glass, you can monitor all of the emissions from every building that they have globally. That can then give us insights. The emissions from certain buildings are higher than others, and then we can take action, changing the control system, upgrading the equipment. That can drive SaaS-type revenues as well. So investing a lot in digital intelligence and then overlaying agentic AI on top of it is 100% the future. In terms of your first question with Carrier Ventures, we've made some great investments. They're often in the $5 to $15 million range. A lot of it has, frankly, been in the United States. But when I look at the ecosystem of what's happening with startups in India, I think this is a perfect country for us to invest more with Carrier Ventures.
As you look at AI, as you look at the future, David, how closely are we expecting you to ink more partnerships with the likes of NVIDIA and others, especially when we talk about these AI factories and cooling solutions?
Today we work closely with the chip manufacturers. We work very closely with NVIDIA because when you look at how a lot of the cooling is taking place in data centers today, it's not only traditional cooling, but the chips themselves have direct-to-chip cooling. So we have a coolant distribution unit that distributes liquid directly to a chip and then cools the chip directly. So to do that, we integrate very closely with our chip customers and partners, including NVIDIA. We have a great relationship with them. So as they expand globally, we expand with them. And we know that NVIDIA will be expanding here in India. And we expect to be a close partner of theirs here, just like we are in the United States and elsewhere. And then when we look at AI, a lot of the skills that we have globally are based right here in Hyderabad. So again, we were there earlier this morning, and we have about 150 engineers focused exclusively in Hyderabad on AI, because what you need for buildings is really three things. You need easy to commission and install sensors so you can get data. You need a common digital stack so all of that data can be coalesced in a single data lake. And then you need to put agentic AI on top of the data to create specific applications to create value for our customers, focused on maintenance, focused on energy efficiency, focused on comfort. So we see the needs of India being, in some cases, a bit unique. There's high ambient temperatures, high humidification. We spend a lot on filtration. And then what we're working on here in Hyderabad, using AI to create really unique solutions for our customers.
David, let me end by asking you, for 2026, the one thing that you're most excited about?
I have to tell you, I'm just so excited about where we are as a company. We've come a long way since we became a public company back in 2020, 6 years ago. We put a team, a culture, a foundation in place. We've simplified and focused the portfolio, leaning into sustained megatrends around data centers and hyper-growth areas. And when I look at this visit here to India, I cannot tell you how inspired I am leaving India. We have a tremendous workforce. We have close to 5,000. It's on its way to 6,500. I look at the growth potential. I look at our relationship with customers and our differentiated brands like Carrier and Toshiba and our differentiated product portfolio. And when you bring that workforce of 5,000 together, again, going to 6,500, our ability to lean into the opportunities in India, I think it's a one-in-a-generation inflection point opportunity for us. So I could not be more thrilled with the team we have here or the opportunity that lies in front of us.
Well, David, we wish you the very best of luck with your plans here in India and your plans for Carrier globally as well. We look forward to seeing a lot more of you here in India. But thanks very much for joining us on the Global Dialogue. Appreciate your time.
Thank you, Shireen, and you'll see a lot of us. We plan to be back very often.
Well, we look forward to that. Many thanks. With that, it is time for us to take a break, but there's a lot more coming up for you on CNBC TV 18. The news continues. Stay with us. We're back in a moment.
Good evening. Thanks very much for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. President Trump says the ceasefire still holds. This after the US and Iran exchange fire near the Strait of Hormuz. Tehran accuses Washington of targeting 2 ships and claims the situation is back to normal. US accuses Iran of unprovoked hostilities. Crude oil prices back above $100 a barrel. The Sensex and the Nifty gain 1% in a volatile week. Mid-caps and small caps outperform, with both indices gaining 4% each. The rupee weakens by over 20 paise as it remains above the 94 mark against the dollar. Shares of SBI decline after reporting Q4 earnings. Net interest margins shrink sequentially. Core income misses estimates. Slippages see a sharp rise to 5,500 crore rupees, even as asset quality remains largely stable. The Tata Trust delays a crucial board meeting to the 16th of May. The trustees were scheduled to consider nominating Bhaskar Bhatt possibly to the board of Tata Sons and discuss comments by Vice Chairman Venu Srinivasan and Vijay Singh on listing Tata Sons.
She is the worthy successor because of how Claire has earned her stripes.
Days after announcing her successor, Biocon chairperson Kiran Mazumdar-Shaw lays out a time horizon of 5 years for her niece Claire Mazumdar to take over. Calls her a worthy successor. Kiran Shaw also says her nephew Eric and Claire's husband Dr. Roberts would be the most important family members at the board level. That's a CNBC TV 18 exclusive. A U.S. court declares President Trump's 10% global tariffs as unlawful. This comes weeks after the U.S. Supreme Court had struck down the so-called reciprocal tariffs. But there is no blanket relief for importers from the 10% levy, as the court ruling is limited to the small businesses which contested the tariff. Deadlock over government formation in Tamil Nadu appears to have been broken. Smaller DMK allies, including the VCK and the left, are likely to formally announce their support to Vijay's TVK, who's all set to become the next chief minister. 11 months after the Air India crash in Ahmedabad, the aviation minister says the investigation is in the final stages and the process may take another month. 260 people died when the London-bound flight crashed within seconds after takeoff. TCS employee Nida Khan arrested by the Nasik police. She's the only woman among the 8 accused in the sexual harassment and religious conversion case. Khan's lawyer had earlier sought an anticipatory bail, citing her pregnancy. 2 Indian crew members are on board a cruise ship hit by a Hunter virus outbreak. 3 people have died. 8 people have been infected so far. The World Health Organization says the risk to public health is low, downplays the threat of a pandemic. But straight to the big story this evening. The United States and Iran did exchange fire near the Strait of Hormuz. Now, President Trump maintains that negotiations for a peace deal are still underway. Let's bring you the latest developments. Now, the U.S. claims that Iran launched missiles, drones and small boats against 3 of its warships in what it called an unprovoked attack. The military said it targeted sites responsible for attacking the destroyers in retaliation. Trump said, and I quote, "Iran trifled with us today." The U.S. president did not label the Iranian attacks as a ceasefire violation, but described the U.S. actions, and I quote, as a love tap. He also continued to threaten to resume military action if Iran doesn't sign a deal soon. Iran refuted the U.S.'s insistence that its actions were retaliatory. Iranian military claims that it targeted the ships after the U.S. attacked an oil tanker in Iran's territorial waters. The Iranian military also claimed that the U.S. had violated the ceasefire by carrying out airstrikes in civilian areas. Since then, Iranian state media says the situation in the Strait has returned to normal. This fresh escalation in the Strait of Hormuz has pushed Brent crude back above the $100 mark. Reuters reporting that 3 vessels of Japanese shipping company MOL transited through the strait last month without paying any fee. This after Lloyd's List reported that Iran has established a new agency to approve transit and collect tolls from the shipping in the critical waterway. Fresh skirmishes in the UAE continue to weigh on the ceasefire. The UAE Defense Ministry said its air defenses were actively engaging with a missile and drone attack from Iran. However, no damage has been reported so far. The UAE government has advised citizens to remain indoors. In Lebanon, Israel continued to bombard the southern parts of the country as its forces occupied large parts of the region. According to Lebanese state media, a rescue worker of Lebanon's civil defense was killed in an Israeli strike. The Israeli military has neither confirmed nor denied this yet. Al Jazeera reports that a second round of negotiations to extend the ceasefire will take place on the 17th of May in Washington.
They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast. Somebody said, what's your plan? I said, the plan is very simple. Iran cannot have a nuclear weapon. It cannot have a nuclear bomb. And it's not going to have. And they're really at the end of the line. Really are at the end of the line. Now, unless you guys feel differently. Now, these guys, I think, will say that Iran cannot have a nuclear weapon. Would you say? We wouldn't feel very good if they did, because this, what you're doing and all the work that you do and that we do, it wouldn't look too very good after a while with these characters. We're not going to give them the right to have a nuclear weapon. There's zero chance. And they know that, and they've agreed to that. Let's see if they are willing to sign it.
So President Trump maintaining that the ceasefire holds, and that, of course, has kept markets generally largely stable today. And let's talk about the market action. All sectoral indices closed in the red today, though. The Nifty closing below the 24,200 mark, dragged lower by financial heavyweights. L&T, M&M were also lower today. The Sensex closing 500 points lower. The Nifty down by about 0.5% or so. Mid-caps closing flat. The Nifty Bank was the one that saw the pain today, down by about 700 points. SBI, Bank of Baroda, Axis Bank all dragged the index lower for the week. Markets have posted gains for the week, and volatility with the Nifty ending nearly 1% higher. Broader markets have outperformed, so green close for the week. The capital market index up almost 6%, so strong up move there coming in. Well, let's now talk about the other big stories that we are tracking this evening. The market capitalization of NVIDIA is back above the $5 trillion mark. Now, this is one company, and it is now worth more than the entire Indian equity market. Rima is here with that staggering number. Rima.
Welcome to the AI era. What else can I say? It's one chip versus one nation. Absolutely astounding. NVIDIA is now worth more than the market capitalization, the equity market capitalization of all of India. NVIDIA today is at $5.1 trillion. India stands at $4.9 trillion, completely eclipsing it. And India, remember, has more than 5,000 companies spread across banks, IT services, consumption, oil and gas refineries. Now, just 5 years back, on 8th of May 2021, NVIDIA's market capitalization was approximately $370 billion, which means from there to now, it's added nearly $4.7 trillion. That is a staggering 13.7x return. That is the extent. And all this has happened just in the last 60 months, as I said, and that $4 trillion to $5 trillion actually happened in less than 6 months. Now, while NVIDIA soared, India has been facing headwinds. India is often labeled as an anti-AI trade. India peaked out in September of 2024 when the market capitalization hit $5.66 trillion. From there, we've climbed down about $7.6 billion. But this milestone by NVIDIA is also a part of the broader AI theme and momentum. Now, I had a look at some of the valuations of the largest companies in the world, and out of the 12 large companies, 9 of them are AI or tech-related plays. NVIDIA, of course, is right on top, leading, but you've got an Alphabet, you've got an Apple, you've got Microsoft, Amazon, you've got some new additions coming through with TSMC, Broadcom as well. So I think that's the story, right? While India has great demographics, it's got great policy reforms, digital infrastructure, I think the fact that Indian company is not a part of that $1 trillion AI club, $1 trillion, just suggests perhaps that India needs to lean in on this entire AI story. But it's absolutely incredible, the headline that we're getting. NVIDIA's market capitalization is now more than that of India's entire market valuation.
All right, Rima, many thanks for joining us. But let's now double down on earnings. State Bank of India, that stock took a beating today after reporting numbers in Q4 that were below the street estimates. Ritu joins us now to take us through SBI's performance. Ritu, what went wrong this quarter?
Well, first, the bottom line net profits at 19,684 crores were up 5.6% year on year, but it was a slim beat over a poll. But, the quality of earnings was weaker than the headline number. The key drag, as expected, was the treasury book. SBI's investment book reported a loss of about 1471 crores in the quarter, which pulled the operating profit down 11% year on year to about 27,700 odd crores. What helped the bottom line was a sharp drop in provisions, down 55% year on year to about 2872 crore rupees. The net interest income, that is a core income for the bank, that was a miss compared to our poll at about 44,380 crore rupees for the quarter. But the biggest disappointment for the street was really on the margin front. That was down 18 basis points sequentially and 21 basis points year on year at less than 3%. On the balance sheet front, again, you had advances growing at almost 17%, deposit growth of almost 11%, so that was healthy. But the CD ratio has inched up to more than 82%. Standalone, that is not a concerning number, but it is a multi-year high for the bank. Asset quality is holding up for SBI. Gross NPAs at 2-decadal low at 1.49%. But again, there was a rise in fresh slippages to about 5,521 crores on account of the agriculture portfolio. And SBI again is perhaps the only large bank on the street that has reported a rise in slippages in the quarter. Now, going ahead, the management sees margins in a similar range at about 3% for FY27 and sees credit growth at about 13 to 15% for the full year.
All right, Ritu, many thanks for joining us. Shares have tightened, ending nearly 5% in the green after the company reported stable numbers in Q4. Net profit rose over 29%. Revenue surged more than 77% on an annual basis. However, margins contracted during the quarter to 7.2%. Titan's internals were strong during the quarter, with its jewellery business growing 50% year on year. The management has said they are conscious of the macro volatility and fragile geopolitical situation. A crucial board meeting of the Tata Trust, which was supposed to take place today, has been delayed to the 16th of May. The trustees were scheduled to consider the nominees to the board of Tata Sons. Possibility of somebody like Bhaskar Bhatt being a contender was likely to be discussed as well. They were also likely to take up comments by the Vice Chairman Venu Srinivasan and Vijay Singh on listing Tata Sons. A divergence of opinion over taking Tata Sons public has caused a rift among the trustees. Venu Srinivasan and Vijay Singh have supported the idea of a public listing, while other trustees want to keep Tata Sons private. Staying with the Tata Group, Chairman N. Chandrasekaran is set to address the employees of Air India at a town hall today. The airline's board met yesterday to discuss ways to manage mounting losses. Sources say losses for FY26 are estimated at 22,000 crore rupees. The group chairman N. Chandrasekaran chaired the meeting, where selection of a new CEO is also on the agenda. According to a Reuters report, former Vistara CEO Vinod Khannan and Air India Express chairman Nipun Agarwal are likely contenders to take over from Campbell Wilson. 11 months since the Air India crash in Ahmedabad, the Civil Aviation Minister Ram Mohan Naidu says the investigation is in its final stages. The London-bound flight crashed within minutes after taking off, killing 260 people. The minister says the probe report should be released in a month's time.
हमें समझना पड़ेगा जब भी ये इन्वेस्टिगेशन होता है और खास करके इंटरनेशनल वाला फ्लाइट था, इंटरनेशनल सिटीजन्स भी थे, मतलब दूसरे कंट्री के सिटीजन्स भी थे, इसको कोई भी क्वेश्चन कर सकता है. जो रिपोर्ट आता है इट विल बी अप फॉर स्क्रूटनी. कोई भी देश कर सकता है, कोई भी इंस्टीट्यूशन उस देश का कर सकता है. तो हमें बहुत ही सीरियसनेस के साथ, फेयरनेस के साथ, ट्रांसपेरेंट नेचर के साथ हमें इन्वेस्टिगेशन करना है. तो अभी लास्ट में ही है प्रोसेस, जो इन्फॉर्मेशन हमें मिला है, बट वो इंडिपेंडेंटली एआई भी वो इन्वेस्टिगेशन कर रहा है. तो उनको जो रिसोर्सेज चाहिए वो सब हमने दिया हुआ है और हम मोस्टली 1 महीने तो लगेगा.
That is the aviation minister. TCS employee Nida Khan has been arrested by the Nasik police. She is the only woman among the 8 accused in the sexual harassment and religious conversion case. Khan's lawyers had earlier sought an anticipatory bail, citing her pregnancy. Santhya joins us now with more details. Santhya, Nida Khan being arrested, take us through what we know about the arrest.
So Nashik police have arrested wanted accused Nida Khan in the TCS alleged sexual harassment and religious conversion case. The police had been searching for Khan for the past 40 days when the FIRs were first filed. She's accused of hurting religious sentiments and has also been booked under the SC/ST Atrocities Act. She was arrested yesterday from Chhatrapati Sambhajinagar in Maharashtra. According to Nashik police, she was allegedly being harbored by a local corporator who has now also been booked for allegedly sheltering a wanted accused. Nida Khan had applied for anticipatory bail, but the Nashik court rejected her application. The alleged sexual harassment and religious conversion case involving TCS employees, which surfaced in the last week of March, had sent shockwaves across the country's corporate world. Nashik police registered 9 FIRs in the month of March against 7 male employees of TCS Nashik unit and arrested them on charges of workplace sexual harassment, hurting religious sentiments and attempting to forcibly convert the victim's religion. Police also booked and arrested their TCS Pune unit-based senior official for allegedly failing to act on the victim's complaints. Apart from this, the police investigation also TCS also initiated an internal inquiry headed by CEO Aarti Subramanian. The company also formed an oversight panel to supervise the investigation. The panel will be chaired by Mr. K.K. Mistry, and TCS has additionally brought on board Deloitte and legal firm Tri-Legal to assist the internal investigation team. Sources have told CNBC TV 18 that TCS has asked Deloitte and Tri-Legal to expedite their investigation and submit the report at the earliest, and it is expected that the report might be submitted by the end of this month.
All right, many thanks, Satya, for joining us. The deadlock over Tamil Nadu's government formation seems to be over. Actor turned politician Vijay is scheduled to meet the governor and stake claim to form the government. We learn that the two left parties have now decided to extend their support to the TVK. The VCK, which is a left-leaning Dravidian party with 2 seats, is likely to join. The Congress had extended support of its 5 MLAs to the TVK on Wednesday itself, but they were still 6 short of majority. My colleague Harish Upadhyay gets us the latest from Chennai.
Well, perhaps it's an indication of how closely some of these leaders are keeping track of what's happening, especially at Raj Bhavan and in other parties as well. With the indication now very clear that both these left parties are going to back TVK, it is now looking like Vijay will reach that magic figure. Because let's not forget, Nabila, just yesterday we had Tirumavallavan who told us that if the left parties decide to go with Vijay, and all of them will unanimously go with Vijay, that's 6 seats. So now with both these parties, CPIM and CPI, likely to go with TVK, does it leave any other option for the VCK? Does the VCK, which remember is not just a Dalit party, it's also a left-leaning Dalit party. Do they want to take a different stance from both these left parties? Unlikely, just being pragmatic, unlikely that they'll do that. In which case, all these 3 parties going together will get Vijay past that halfway mark by the end of the day. And if that happens much quicker, he can communicate that to the Raj Bhavan as he meets the governor.
Harish, many thanks. And it looks like he has managed to get to that number and looks set now to stake claim. Up next, 2 Indian crew members are on board a cruise ship hit by the Hanta virus outbreak. The World Health Organization says the risk to public health is low. That and more when we return.
Well, State Bank of India has reported its highest ever annual profit of more than 80,000 crores for FY26. But for the quarter, profits were up about 6% year on year. Operating profits were down, mainly on account of the Treasury income hit. Asset quality held up, but margins were lower in the quarter. Let's bring in the Chairman of State Bank of India, Mr. C.S. Sethi, for more on the numbers and the way ahead. Mr. Sethi, always a pleasure to have you here. But, if you look at the stock reaction to your numbers, one of the key disappointments for the street has been the margins. They're down about 18 basis points sequentially, 21 basis points over the previous year. And it's been a battle for all banks in the quarter. But, to your mind, where does NIM bottom out for SBI? And is there any leeway to get beyond this 3% range you've been guiding for?
So I still feel that, we fulfilled the guided number. Our exit NIM guidance was above 3%, and I think that has been fulfilled. And the NII impact in Q4 was essentially because there's been a repo rate cut in December 15th last year, and that has been fully factored in the Q4. That is number one. Number two, I think there's been a good improvement in our EBLR portfolio. That is also adding to a certain amount of NII reduction. But I believe that our guidance in terms of NIM being above 3% still holds good for the current financial year. And we have no concern in terms of managing those margins.
Okay. While we appreciate your asset quality is at a 2-decade low currently, but, you've been the only large bank on the street to report a rise in slippages. Where did that come from? And secondly, for FY27, if you could give us a guidance on what the full year credit costs, slippages, recoveries, what would that look like, keeping in mind what's happening in West Asia and MSME being a significant portion of your book?
So the slippages, what you see in the Q4, I think we need to be adjusted the subsequent pullbacks which have happened. And if you, around 850 crores have been pulled back from those slippages. So if you consider that pullback, I think there is no any concern in terms of the increased slippages. And across, segments, we've seen excellent credit quality. There's no concern at this juncture in terms of asset quality. And the guidance for the current financial year also is remaining the same level of our usual guidance of 50 basis point credit costs. And the gross and the net NPAs, as you mentioned, are the decadal lows. And we have not seen any stress at this moment in terms of the asset quality at in any sector at this moment.
Okay, no concern on account of what's happening in West Asia yet. But in terms of credit growth, again, you've delivered almost 17% for the quarter. And now you're again retaining that 13 to 15% growth for FY27. Where will the bulk of this growth come from, Mr. Sethi? Corporate, for instance, has been a bit of a drag. Do you see that picking up? Where is the demand? And what is the pipeline visibility you already have?
So the credit growth, as we have witnessed in the last year, is going to be broad-based across the retail segment, agriculture, MSME, and corporate. Corporate, as I mentioned in my press briefing, we have a pipeline of almost 5 trillion rupees, more than 5 trillion rupees, and both in terms of unutilized working capital limits as well as undrawn term loans and also the term loans which are under discussion with the pipeline. We have not seen anyone withdrawing any of this discussion on the capital expenditure what they committed last year. The new capital expenditure programs we have to see as we move forward. But the current pipeline itself gives us visibility in terms of what could be the corporate credit growth, which gives us confidence. And as I mentioned, I think we are witnessing continued robust credit growth in the current quarter also. So based on that, assuming that this West Asian conflict has not lingered longer, we are very hopeful and confident that 13 to 15% credit growth is eminently feasible.
Sir, in terms of raising any kind of equity in the year, you of course are going to seek that board approval for, debt in, raise. But on the equity part, I believe you'll have Yes Bank, of course, there's SBI Mutual Fund, the NSE IPO. With all of that, you might have a windfall gain. So any requirement for further equity capital raise at all?
Not at this juncture, Ritu. Even the current CRAR, above 15% what we have, gives us an ability to fund almost 12 trillion credit growth. And you also mentioned some of the names which definitely augment our capital going forward. And I don't see any reason that we need to access the market.
Got that, sir. So your CD ratio, if I could briefly address, at 82% is a multi-year high for you, although it's not particularly alarming in itself, the number, but the direction has been upwards. If the trend holds into FY27, do you see any kind of constraint on credit growth, or will you be forced to chase bulk or term deposits at higher rates, which in then turn could pressure NIMs?
So on the ability to fund the credit growth, I did mention about the availability of capital. The second thing is availability of liquidity. And we have almost 3 trillion excess SLR in our books. And with an assumed deposit growth rate of 11 to 12%, I personally believe that we don't have any concern in terms of funding the credit growth.
Got it, sir. Just if I could end with the 2 E's. ECLGS, have any borrowers approached you? And on ECL, what is the estimated additional provisioning you'll have to make over the next few years?
On the ECLGS, the guidelines have just been received. We are all working on operationalizing those guidelines. And it would be widely publicized among our customers, eligible customers. It is an opt-in scheme. The customer has to approach. So far, nobody has approached. But once the scheme is in place, we assume that then the MSMEs who are in need of funding will come to us. So far, nobody has approached. On the ECL front, as I mentioned earlier, and I'm sticking to that statement, that ECL is not going to really have any major impact because of the smooth transition period which is given by the RBI. We haven't had the clear assessment so far. We are working on the models. There are some final changes which needed to be done to the models. And I think sometime during Q2, we will have some number available to all of you.
All right, we'll leave it at that. Thank you very much, Mr. Sethi, for your time. It was a pleasure. Thank you.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Zepto has received the market regulator's nod for its IPO. Sources tell CNBC TV18 that the company is targeting a July to September 2026 listing. Zepto had filed its confidential DRHP with SEBI in December last year.
Swiggy narrowed its net loss to 800 crore rupees in the fourth quarter as its food delivery business clocked its strongest pace of growth in 4 years. Management says the company remains on track to achieve contribution margin break-even and maintains early guidance.
Kisht made a robust debut on Dalal Street, listing at a 12% premium. The digital lending platform raised over 925 crore rupees through a combination of a fresh issue and an offer for sale. The IPO was oversubscribed nearly 10 times.
AI-native auto tech platform Cars24 announces its first profitable quarter, marking a significant milestone in its journey to build the infrastructure of car ownership. The company reports 20 crore rupees in adjusted EBITDA in the fourth quarter, becoming profitable for the first time in its history, alongside strong growth across its core business.
The Enforcement Directorate has registered a money laundering case against gaming platform operator Gamescraft and associated entities. Sources tell CNBC TV18 3 founders were arrested following searches across Karnataka and the NCR. Also, there are several FIRs against the company over allegations involving suicides by victims.
Well, those are the headlines we're tracking for you on Startup Street. But on to the top story we're tracking for you this evening, and that is the long awaited Zepto IPO. The quick commerce platform has finally received market regulator SEBI's nod to list on the bourses. Now, sources tell us that the company plans to list sometime between July and September this year, perhaps even earlier. Rashna Dhanrajani joins us now with more details on this one. Rashna, take us through the listing plans. It's been a long time coming. What's the size? And it's a confidential DRHP, so they get 18 months.
That is absolutely correct. And they filed this DRHP in December of 2025. Now, the approval has come in. From what we understand from our sources is that the total issue size is about 12,000 crore rupees, with the primary component at around 8,500 crore rupees, which will be the fresh capital. Now, Zepto's cash position is at around $600 to $700 million in cash. Compare that to Blinkit or Swiggy, which is over $1.7 and $1.9 billion. So the company clearly needs money because when the revenue went up, so did the losses. Now, Zepto was last pegged at about $7 billion through a private round. But with Swiggy and Eternal both, now if we see the stock movement, they're down about 30 to 35% since listing. So analysts are flagging a realistic reset to $5 to $6 billion on the public markets. Now, financially, like I said, the revenue had gone up. So the total income doubled to about 9,669 crore rupees in FY25 for Zepto, but the losses had widened to 3,367 crore rupees. The company is still burning 40 to 46 rupees per order, though that is an improvement from 73 to 78 rupees just 2 quarters ago. So that tells us a lot about Zepto's journey and how they have been on this journey to get listed. And now finally the approval has come in. What we also understand is that because this was a confidential filing, an updated DRHP is expected in the next 2 to 3 weeks with listing. The aim with listing is to have it mid of the year sometime. So we could expect it within 8 to 10 weeks is what we understand from our sources.
All right, Rachna, thank you so much for those details. Appreciate you joining us. Well, Zepto gets SEBI nod for IPO. Also on what's brewing, cashback platform Cash Karo has clocked 600 crore rupees in revenue in FY26, up 72% year-on-year, while sharply narrowing losses and driving over 10,000 crore rupees in sales for partner brands. The company says cashback is fast becoming a core part of online shopping behavior, while its affiliate platform Earn Karo is tapping into India's booming creator economy, enabling everyone from students and homemakers to micro-influencers to monetize their reach. At a time when brands are rethinking marketing spends and shifting towards performance-led models, Cash Karo is betting on savings-led e-commerce and creator monetization and AI-driven efficiency. Joining me now are the co-founders of Cash Karo and Earn Karo, Swati and Rohan Bhargav. Swati and Rohan, welcome to Startup Street. Swati, very quickly, let me start with you. Cash Karo has grown revenues by over 70% to 600 crore rupees while sharply reducing losses. Now, at a time when consumer internet companies are being pushed to prioritize profitability, what's driving this operating leverage for you? Also, you have enabled over 10,000 crore rupees in sales for partner brands. Is cashback now becoming a default shopping habit rather than just a festive or a discount-led trigger?
It's great to be back here. And like you said, it's heartening to see that actually Cash Karo is becoming the smartest shopping habit for consumers and for India. I would go as far as saying that because it's no longer tactical. People have understood that while cashback is there in so many forms, when you shop via Cash Karo at any site, you're getting extra cashback on top of sales. It's real cash which you can transfer to bank. So why won't you do it? So I think given that e-commerce is growing, we are at 250 million plus shoppers in India now. A lot of people becoming tech savvy and learning how to use apps like Cash Karo to save money because you're getting 30,000-40,000 rupees in every year as savings. Why would you not? And for our app Earn Karo, in fact, influencers are earning 30-40 lakhs a month. So that kind of earnings which we are enabling, it's great that people are adopting. Plus, of course, this year we've seen a good uptake from tier 2 plus cities as well, with about 50% coming from there. 75% of our traffic is direct plus organic, which has helped us bring down the CACs and improve profitability, like you said. And also seen over 100% growth in partner sales for D2C brands. It's also a category that's growing well along with marketplaces.
Sure. Let me quickly get in Rohan. Rohan, you've said brands are shifting budgets away from Google and Meta towards affiliate-led performance marketing. How significant is this shift really, and are we looking at a structural change in digital advertising economics?
That's a great question. And look, to be honest, I think the shift is very real. I don't think I'm saying that brands are moving away from Google or abandoning Google and Meta. But I think what is starting to happen is a redeployment of capital towards the changing KPIs. Now, if you go back a few years, brands were primarily chasing GMV, number of users, downloads. I think now brands are chasing profitability. And the model that we have, typically when you work with, let's say, Google or Meta, you're effectively paying for clicks and impressions. On the flip, we are only charging brands for sales. So our KPI is sales and not traffic. So as brands start to focus on profitability, the fact that we're a cheaper sales channel just drives more budget towards us. And this is not something that is unique to India. In fact, we've seen a massive trend of this happening in the US and China for a long time. So I think India is just catching up to that trend and trajectory.
Okay, Swati, one interesting trend is the rise of savings-led commerce in India. In a market obsessed with convenience and quick commerce, are consumers now becoming more value conscious again? And how much of this demand is coming from tier 2 and tier 3 markets?
I think Indian consumers are more value conscious versus price conscious. If they see that they're getting a good product at good value, then they go for it. And that is exactly what we are enabling for so many D2C brands. We are seeing over 50% of our traffic now come from tier 2 to tier 6 cities, not only for Cash Karo, but for Earn Karo as well, where in fact more than 70% of the traffic is tier 2 plus. And influencers from these places, especially Telegram group owners, they have connected our Earn Karo AI bots with their Telegram groups, and we post deals for them, day and night with their affiliate links that enables them to earn commission. And people are earning 20-30 lakhs a month. So their lives have changed, bought houses, cars, opened up digital marketing agency. All of this change is actually happening with large scale income generation in tier 2 plus cities.
All right, Swati, the cashback and affiliate space is getting increasingly crowded today. What is Cash Karo's moat then today? Scale, data, consumer trust or distribution? And how defensible is this business model over the long term?
I would, in fact, beg to differ that it's not getting crowded. I think it was getting crowded when we launched. Okay. And over the last few years, we've actually seen a lot of that competition, go away over time because I think we were able to raise money faster than others as well and execute well. So we've raised about 250 crores from Mr. Ratan Tata, Kalari, Affle, KIP. That has enabled us to grow and invest in technology, invest in teams, use AI in our businesses, and make localized products like Earn Karo. So we get the highest commission rates in the market. We do the highest sales. That kind of has this cycle. So Cash Karo, Earn Karo group today is, larger than most affiliate networks in India. And what we bring to brands is a breadth of users. They target corporate professionals and other online shoppers through Cash Karo, creators through Earn Karo. So the mix that we're able to provide enables us to get, good commission rates, and the whole proprietary tracking infrastructure that we've built. That is a big moat.
All right. Rohan, AI and automation have also helped you scale without proportionate increases in costs. Where exactly are you deploying AI within the business? Is it customer acquisition, targeting conversion, or fraud detection?
We're deploying AI right now in everything. But I'll give you a very, very simple example. Right? So clearly the number of partners that we have has a direct correlation to the revenues that we have. Now, something as simple as legal, prior to, if I go back 2 months, to get a partnership agreement done was typically a tat of about 2 days. That tat has now come down to 2 hours. So when we were sort of maybe closing 30 to 40 agreements a month, we're now able to do 300 a month. Now that same efficiency is percolating to just about everything that we do, whether it's marketing, data, customer support. We're now starting to do AI-driven customer support calls, making everything just that much more efficient. So I think it's happening everywhere across the board. And honestly, each month, the scale at which we're able to imagine on what AI can do is only getting bigger and better.
Sure. Well, on that note, I'll have to wrap up our conversation. Many thanks, Rohan and Swati, for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you so much.
Thank you so much.
Okay, let's move on to our guest on the hot seat. Fintech firm Novio has raised 100 crores in a Series A funding round, which was led by Cornerstone Ventures. Now, they say the capital is going to help them fuel their mission to issue 50 lakh credit cards in the next 3 years, bringing formal credit to Tier 5 towns as well. Now, the 100 crores is also going to be deployed across core properties, that is scaling distribution deeper into Tier 2 to 5 markets and accelerating product development. Let's bring in Aditya Gupta, the founder and CEO of Novio, for more on the company's growth plans. Aditya, welcome. Thanks very much for your time here on Startup Street. In India, we've seen multitude of fintech models struggle once credit costs start to rise. How do the unit economics really work in your FD-backed model, especially when you talk about scaling from 1 lakh all the way to 50 lakh users?
First of all, thank you, Ritu, for inviting me to your show. And you're right, credit card has been a product which has always seen the difference in how unit economic works on the product. For us, the distribution platform that we built over the last 5 years, Ritu, is the moat. We're actually able to acquire customers at the lowest cost of acquisition in the country. And the fact remains, while most of the banks continue to focus on unsecured credit cards and trying to give credit cards to consumers who get eligible, but less than 5% of customers who apply today for credit cards get one. A secured credit card has actually become a product which most of the customers we see is trying to adopt. And the unit economics is primarily driven from a lower cost of acquisition. And surprisingly, we're seeing a very high adoption of the product from consumers. 85% of our current consumers are monthly active, and they're actually doing spends in the range of 8,000 to 9,000 rupees of spends on a month. If you compare that to a regular credit card portfolio as per RBI, is equal to 14,000 rupees per card per month. So from an economics point of view, while this product has a lower spend, but has a similar margin coming in, has a lower cost of acquisition, and more importantly, there are no credit losses. So the way we see it is a secured credit card in the long term will become a more profitable product than a regular unsecured credit card.
Okay, secured credit card, that's something to write home about. But speaking of the current nature of cards, very much unsecured. And again, since you yourself obviously cannot issue credit cards, you're doing it in partnership with Yes Bank at the moment. And you have the regulator cracking down on the unsecured growth. It's slowed tremendously in the last couple of years since the risk weights were increased. So, what kind of partnerships are you looking at?